हेलो एवरीवन, गुड इवनिंग टू ऑल ऑफ यू, हैप्पी मंडे। लेट्स स्टार्ट द सेशन। स्टार्ट करते हैं आज का कमोडिटी का सेशन। फिलहाल के लिए अगर देखोगे कमोडिटी मार्केट को, क्रूड ऑयल थोड़ा बहुत अपसाइड मूव किया था ऊपर। नेचुरल गैस भी काफ़ी बड़ा गैप अप ओपन हुआ था। फॉरेक्स में, एमसीएक्स में आपको उतना बड़ा गैप अप नहीं दिखेगा, फॉरेक्स में काफ़ी बड़ा गैप अप था, बट हाई लेवल से प्रॉफिट बुकिंग आ गई है। ऊपर अभी भी रेजिस्टेंस बने हुए हैं मार्केट के पास। क्रूड ऑयल में देखोगे तो ऊपर एक रेजिस्टेंस है, लेट्स सी अगर आता है उस पर्टिकुलर जोन पर, वहां से एक वापस सेलिंग का प्लान रखेंगे, या फिर थोड़ा रिट्रीव करे अगर नीचे वापस लेवल पे, तो विल सी दैट। जस्ट गिव मी अ मोमेंट। यहाँ पर फिलहाल के लिए एक छोटा सा सपोर्ट है, उस वजह से थोड़ा बहुत रुक रहा है ये। लेट्स सी, ऊपर निकलता है, वॉल्यूम थोड़ा सा कम है, आई थिंक डाउन है। डेटा की बात करें तो कोई डेटा शेड्यूल तो नहीं है आज के दिन, तो 6:30 और आपका 8 PM पे यूएस मार्केट ओपनिंग रहेगी, तब थोड़ा बहुत मार्केट वॉलेटाइल हो सकता है। उसके अलावा कोई जियोपॉलिटिकल न्यूज आती है तो विल कंसिडर दैट एज वेल। छोटे से लेवल पे ना फंस गया क्रूड ऑयल। ठीक है, छोटी सी एक रेंज बना दी है इसने। नीचे वाला जो लेवल बनाया है, जोन बनाया है, वो एज अ सपोर्ट है। ऊपर जो एक छोटा सा जोन बनाया है, रेजिस्टेंस है। तो बहुत ही नियर रेंज के अंदर मार्केट फिलहाल चल रहा है। इस रेंज को किसी एक साइड अगर निकाल दे तो मुझे लग रहा है फिर थोड़ा अच्छा मूव आ सकता है। अप साइड निकलता है तो ऊपर टारगेट मिल सकता है, अगर नीचे ब्रेक हो गया तो फिर वापस दिखेगा 5733 के अराउंड। तो किसी एक साइड निकले तो वेल एंड गुड। ऊपर एक रेजिस्टेंस वैसे मुझे यहाँ तक लग रहा है काफ़ी अच्छा है, 5820 टू 40 के बीच में, वहां पर वापस सेलिंग का प्लान रखेंगे। बाइंग में है तो भैया यहाँ अपना एसएल ट्रेलिंग लगा लो नीचे। रेंज बाउंड मार्केट है फिलहाल के लिए, स्कैल्पिंग हो सकती है बस यहाँ पर, और कुछ नहीं। ये सपोर्ट छोटा सा, ये छोटा सा रेजिस्टेंस, किसी एक साइड के एसएल अगर निकल जाते हैं तब थोड़ा अच्छा मूव हो सकता है। ऊपर रेजिस्टेंस बता दिया कहाँ पर एक बना हुआ है ठीक ठाक। ठीक है, नेचुरल गैस को देखोगे, अगर नेचुरल गैस के चार्ट में ज़्यादा लेवल समझ में नहीं आ रहे हैं तो फॉरेक्स का चार्ट भी यूज़ कर सकते हो, थोड़ा सा वहाँ पे प्रॉब्लम हो जाएगी। नहीं तो एमसीएक्स में कैप अप के बाद तो काफ़ी बड़ा लेवल क्रिएट करके बैठा हुआ है। फिलहाल के लिए ऊपर देखो रेजिस्टेंस है, ये भी फंसा हुआ है रेंज के अंदर। दिस इज ऑल्सो रेंज बाउंड, नीचे के सपोर्ट जोन है और ये रेजिस्टेंस जोन है ऊपर। ठीक है, ये नीचे आपका सपोर्ट है और ऊपर यहाँ पर रेजिस्टेंस बना हुआ है। वैसे तो ये रेजिस्टेंस पास में एक बार टेस्ट हो चुका है, बट 50% लेवल तक गया नहीं था, तो मेरे अकॉर्डिंग अभी भी ये इंटैक्ट ही रहेगा, इतने इजीली ब्रेक नहीं होने वाला। इसमें भी किसी एक साइड के अगर ऐसे निकलते हैं तो रेंज थोड़ा सा वापस से किसी एक डायरेक्शन पे मूव कर सकती है। अगर नीचे बायर्स के एसएल चले गए यहाँ कहीं, ये एसएल निकल जाता है, तो फिर एक नीचे स्पेस है काफ़ी अच्छा। सिमिलरली अगर अप साइड पे बायर्स के एसएल निकल जाते हैं तो फिर अप साइड पे भी एक काफ़ी अच्छा स्पेस है। तो इसमें प्लानिंग क्या रख सकते हो? देखो अभी रेंज बाउंड है, अगर सिर्फ रेंज के अंदर प्ले करोगे, क्योंकि देखो रेंज कोई बहुत बड़ी नहीं है। 4 पॉइंट की रेंज है शायद, सिर्फ 3 पॉइंट की, 4 पॉइंट की भी नहीं। अप्रॉक्सीमेटली 4 पॉइंट की रेंज है, अगर 50-50% लेवल भी लूँ दोनों रेजिस्टेंस और सपोर्ट के, तो आप हाई लेवल पे सेल, लो लेवल पे बाई कर सकते हो, या फिर किसी एक साइड पे के एसएल निकलने का वेट कर सकते हो। किसी एक साइड के एसएल निकल जाएंगे, रेंज थोड़ी बड़ी बन जाएगी, तो उसके बाद ट्रेड और अच्छा रहेगा। ठीक है। बाकी नीचे ब्रेक हो तो मैं ज़्यादा एक्सपेक्ट करूंगा नीचे ब्रेक हो के थोड़ा सा एक रेंज नीचे साइड पे बना दे अच्छी खासी। तो फिलहाल ये है रेंज बाउंड। यहाँ पर रेजिस्टेंस ऊपर 276.77, नीचे 273.72 सपोर्ट। ये छोटी सी रेंज चल रही है फिलहाल के लिए। बाकी ध्यान रखना, अगर ये थोड़ा सा और ऊपर गया अगर, तो इसमें एक अपर सर्किट भी लग जाएगा एमसीएक्स में। ऑलरेडी 4.70% के आसपास है, 6% पे अपर सर्किट लग जाता है। इन द सेंस ऑफ अगर ये इस ऊपर वाले रेजिस्टेंस को अगर ब्रेक कर दिया 278 के आसपास, तो इसमें अपर सर्किट ही लग जाएगा। तो इट इज़ रेंज बाउंड राइट नाउ। किसी एक साइड के एसएल जाएंगे तो थोड़ा बजाएगा, बाकी स्कैल्पिंग कर सकते हो, मैं इतना ही सजेस्ट करूंगा यहाँ पर। अगर थोड़ा सा रिस्क कम उठाना चाहते हो, या फिर मिनी वगैरह में ट्रेड कर लेना, बिकॉज एज ए साइड नीचे सपोर्ट ऊपर रेजिस्टेंस दोनों ही अभी बने हुए हैं। किसी एक साइड के एसएल जब तक नहीं जाएंगे, मार्केट कुछ खास मूव तो नहीं करने वाला। सेम क्रूड ऑयल जैसी सिचुएशन चल रही है, क्रूड ऑयल में थोड़ा और कॉम्पैक्ट है बस। बाकी नीचे आता है तो एक रीटेस्ट जोन है, अगर वहाँ मॉर्निंग पे वैसे रीटेस्ट कर चुका है, ओपनिंग के बाद नीचे लिक्विडिटी लेने आया था, फिर से रीटेस्ट करेगा तो फिर से बाई कर लेंगे। और अगर नहीं करता, नया कोई सपोर्ट बनाएगा, वी विल सी दैट एज वेल। अदरवाइज नीचे हमारे पास 259 के आसपास एक सपोर्ट और है, 259 260। बाकी ऊपर रेजिस्टेंस देखें तो ऊपर एक रेजिस्टेंस आपका वही 293 94 288 के अराउंड है। बाकी एक और रेजिस्टेंस 285 पर भी है, बट वो मुझे 50% लेवल को ऑलरेडी टेस्ट कर चुका है, तो वो थोड़ा सा वीक हो गया होगा ऑब्वियसली। तो वहां पर अगर आएगा तो क्वांटिटी कम रखेंगे, इस जोन की बात कर रहा हूँ। हाँ भैया जी, गुड इवनिंग। नेचुरल गैस 255 का कॉल ऑप्शन 15 पर सेल किया था फ्राइडे को, क्या करना चाहिए? अभी अभी कितना चल रहा है करंट प्राइस? कौन से मंथ की एक्सपायरी है ये भी बता देना, करंट मंथ की है या फिर नेक्स्ट मंथ की बाई की हुई है? नेचुरल गैस 255 कॉल ऑप्शन, दिसंबर की एक्सपायरी ही बोल रहे होगे आप? 23 दिसंबर की जो एक्सपायरी वाला ऑप्शन है, 255 का कॉल ऑप्शन सॉर्ट किया था आपने। 255 15 पर, अभी तो ये 25 चल रहा है, 24 25 दिसंबर मंथ का ही है ना? ओवरनाइट ले गए थे क्या? 10 पॉइंट का लॉस चल रहा है ऑलरेडी। 255 255 का कॉल ऑप्शन सेल किया है। इतना ज्यादा इन दी मनी का कॉल ऑप्शन क्यों सेल कर दिया? देखो फिलहाल के लिए क्योंकि ये कुछ ज़्यादा ही हिंदी मनी है। इसका डेल्टा वैल्यू भी देखोगे तो काफ़ी हाई है, 6 या 7 के अराउंड इसका डेल्टा वैल्यू चल रहा है अभी। मतलब मान के चलो कि प्राइस यहाँ से अगर करंट लेवल से भी 10 पॉइंट और गिर जाता है तो आपका प्रीमियम मैक्सिमम 5 पॉइंट ही, 5 to 6 पॉइंट ही डाउन आएगा। तो अगर आपको कॉस्ट टू कॉस्ट पे भी आना है, 10 पॉइंट वापस अगर लेके आने, 15 का 25 हो गया, तो एटलीस्ट 16 15 पॉइंट के आसपास तो गिरना चाहिए प्राइस को। देखो अभी मैं ये सजेस्ट कर सकता हूँ, लास्ट एसएल अगर रखना है तो ये रख सकते हो 278, क्योंकि एक्सपायरी में भी काफ़ी टाइम है। 278 के ऊपर अगर क्लोजिंग आती है तो मेरे अकॉर्डिंग तो निकल जाना चाहिए आपको। तब तक होल्ड करे रखो। यहाँ पर साइडवेज जाए तो भी ठीक ही है। नीचे सपोर्ट अगर ब्रेक कर दिया तो मेरे अकॉर्डिंग आ जाएगा 267 66 के आसपास। यहाँ पर आता है तो देख लेना, अगर कॉस्ट टू कॉस्ट तो वैसे नहीं आया होगा, अगर आता है तब तक थोड़ा बहुत थीटा लेके भी हो ही जाएगा, तो वेल एंड गुड। अगर ये रिटेस्ट होल्ड नहीं किया तब फिर प्रॉफिट में आ सकते हो। तो लास्ट एसएल अभी होल्ड करके रख लो 278, उससे बड़ा एसएल मत लेना। बाकी इसको अगर हैच करना चाह रहे हो तो हैच कर लो, क्योंकि सडनली कोई अगर न्यूज आ गई तो फिर प्रॉब्लम हो सकती है ना। इसको हैच कर लो मिनी के साथ, ठीक है, नेचुरल गैस मिनी जो फ्यूचर है ना, क्योंकि आपने ऑप्शन सेल किया तो कहीं ना कहीं थोड़ा बहुत रिस्क रहेगा ही रहेगा, उसमें अनलिमिटेड लॉस हो सकता है। तो एक जो आपने कॉल सॉर्ट किया है, मतलब आपका व्यू नेगेटिव है, उसके अगेंस्ट एक मिनी फ्यूचर, मिनी फ्यूचर की बात कर रहा हूँ मैं, ठीक है, मिनी फ्यूचर बाय कर लो, ठीक है। मार्केट अगर डाउन आता है तो आपका जो कॉल ऑप्शन सॉर्ट किया है वो थोड़ा लॉस से रिकवर करेगा। फ्यूचर में आपको लॉस जरूर होगा, बट वो आपका एक तरह से इंश्योरेंस है कि अगर मार्केट यहाँ से कहीं ऊपर ब्रेकआउट कर गया तो एटलीस्ट आपको थोड़ा बहुत प्रॉफिट हो जाए, तो लॉस थोड़ा रिकवर कर जाए। बाकी अगर वैसे अगर अभी नहीं बाय करना चाह रहे हो फ्यूचर, एसएल ये लगा के छोड़ दो। 278 के ऊपर क्लोजिंग आती है 15 मिनट में, तब तक होल्ड करके बैठ जाओ। बाकी रेजिस्टेंस तो ठीक ही है, देखो ये जितना मुझे दिख रहा है, कोई न्यूज़ नहीं आती है तो यहाँ से थोड़ी बहुत सेलिंग तो आनी चाहिए मार्केट में। एवरेज मत करना उस पोजीशन को। लाइक भी करते रहो गाइस, डोंट फॉरगेट टू लाइक द स्ट्रीम। जिन लोगों ने लाइक नहीं किया स्ट्रीम को, फटाफट से लाइक कर सकते हैं। सभी लोग लाइक करते रहो स्ट्रीम को फटाफट से। 5 PM अभी हुआ नहीं, हाँ 5 PM नहीं हुआ है, थोड़ा जल्दी स्टार्ट कर दिया था लाइव।
News when you want it with Bloomberg News Now. I'm Nathan Hager.
And I'm John Tucker.
John, we begin with the latest from the Middle East. Syrian President Bashar al-Assad has fled to Moscow. Syrian rebels reached Damascus over the weekend and overthrew Assad's government following nearly 14 years of civil war. We get more from Bloomberg's Stuart Livingston Wallace.
I think you would find a constituency out there that said it took 5 decades to get rid of them. But, you know, in terms of the more immediate past, yeah, it was less than 2 weeks. And I think it was what surprised everyone was the speed at which it happened on a number of fronts. So, number one, that the opposition forces, and there are many, many of them, managed to unify and work together and move very rapidly. Secondly, at how weak the Assad regime proved to be when under a little bit of pressure. And then the third really important thing is how reluctant both Russia and Iran were to step in, because there was certainly an assumption among some analysts that Russia would absolutely intervene, and that just didn't happen.
Bloomberg's Stuart Livingston Wallace says looters have started raiding the presidential palace and people have taken to the streets of Damascus to celebrate the Assad regime's demise.
And now Israeli ground forces have crossed into Syria for the first time in more than 50 years. Israel's foreign minister confirmed that they've struck chemical weapons facilities in Syria in what's described as a preventative measure. Israeli Prime Minister Benjamin Netanyahu welcomed the fall of Assad, who was a key ally of Iran and Lebanon's Hezbollah militant group.
This is a historic day for the Middle East. The collapse of the Assad regime, the tyranny in Damascus, offers great opportunity, but also is fraught with significant dangers. This collapse is a direct result of our forceful action against Hezbollah and Iran, Assad's main supporters. It set off a chain reaction of all those who want to free themselves from this tyranny and its oppression.
Israeli Prime Minister Benjamin Netanyahu says the collapse of the Assad regime in Syria may help advance a deal to release the hostages held in Gaza.
And over the weekend, John, the U.S. hit dozens of Islamic State targets in central Syria. President Biden is cautioning Assad's fall from power could open the door to a resurgence of Islamic extremism.
We're clear-eyed about the fact that ISIS will try to take advantage of any vacuum to reestablish its capabilities and to create a safe haven. We will not let that happen.
President Biden spoke from the White House as his administration keeps up heavy involvement in Israel's multi-front war.
And before the Assad regime's downfall, President-elect Donald Trump spoke to NBC's Meet the Press for his first network TV interview since the election win. Trump telling moderator Kristen Welker one of his first-day priorities will be issuing pardons to the Capitol Hill rioters on January 6, 2021.
I'm going to look at everything. We're going to look at individual cases, yeah.
Okay.
But I'm going to be acting very quickly.
The president-elect also repeating his threat to impose tariffs on Canada and Mexico. He says he doesn't think it'll cost American consumers anything, but he can't guarantee it.
I can't guarantee anything. I can't guarantee tomorrow. But I can say that if you look at just pre-COVID, we had the greatest economy in the history of our country.
President-elect Trump also promised to end birthright citizenship through executive action, even though the 14th Amendment guarantees citizenship to people born in U.S. territory.
If somebody sets a foot, just a foot, 1 foot, you don't need to, on our land, congratulations, you are now a citizen of the United States of America. Yes, we're going to end that because it's ridiculous.
The president-elect was also asked about a key personnel decision.
Will you try to replace Jerome Powell?
No, I don't think so. I don't see it, but I think if I told him to, he would.
Donald Trump also said he has spoken with Chinese President Xi Jinping in recent days. It's the first time he's mentioned direct contact with the Chinese leader since his election win. And you can hear NBC's Meet the Press every Sunday on Bloomberg Radio.
And we want to update you on the political crisis in Asia. South Korea's Justice Ministry has banned President Yoon Suk-yeol from traveling overseas. The ban comes as multiple investigations are underway following the embattled leader's brief declaration of martial law. The Kospi benchmark stock index closed down a further 2.8% today, bringing its slide since the martial law declaration to more than 5%.
On the flip side, John, Hong Kong's benchmark index jumped 2.8%. Those gains came as China's top leaders announced they plan to loosen monetary policy and expand fiscal spending next year. The move is seen as a sign of confidence against President-elect Trump's trade threats and is expected to boost the Chinese economy.
Talking about spending, another major story we're following this morning comes from the world of sports. Baseball star Juan Soto has signed the richest contract ever in the sport. And let's get the latest from Bloomberg's John Stasher. John, good morning.
Good morning, John. This is what Mets fans were hoping for when Steve Cohen bought the team, that no one would outspend him. Soto's deal with the Mets is for 15 years. That takes him to age 41. It's worth $765 million, so he'll make $51 million a year. And if he doesn't opt out in 5 years, that salary grows to $55 million. Unlike Shohei Ohtani's deal last year with the Dodgers, none of the salary is deferred. The Yankees, in their attempt to keep Soto, apparently finished a close second. Their offer reportedly worth $760 million. John Stashower, Bloomberg Sports. John and Nathan.
Okay, John, thank you. We're going to get more reaction to the historic Soto deal in a few minutes coming up in sports. But turning back to markets now, we're watching shares of Interpublic Group in early trading. They are surging nearly 14%. The Wall Street Journal is reporting Omnicom Group is in advanced talks to buy Interpublic in a deal that would create the world's largest advertising firm.
That's news when you want it with Bloomberg News Now. I'm John Tucker.
I'm Nathan Hager, and this is Bloomberg News when you want it with Bloomberg News Now. I'm Nathan Hager.
And
Not everybody likes talking about money. Some people find it awkward.
Syrian
Sometimes
President Bashar al-Assad has fled to Moscow. Syrian rebels reached Damascus over the weekend and overthrew
तो गाइस 5 PM हो गया है ऑलरेडी। क्रूड ऑयल को देखोगे तो अभी भी क्रूड ऑयल उसी रेंज के अंदर ही चल रहा है, कोई चेंज अभी भी नहीं हुआ है। स्टिल इन द रेंज राइट नाउ क्रूड ऑयल। लेट्स होप ये अपर लेवल का ब्रेकआउट दे दे एंड मूव्ड अप साइड। नेचुरल गैस भी किसी एक साइड के असल निकाल दे, स्पेशली डाउन साइड के निकालता है तो और बेटर है। एंड देन ये रेंज को थोड़ा सा ब्रेक कर दे, या तो अपर साइड या लोअर साइड, और फिर निकले, दैट विल बी ग्रेट। क्रूड ऑयल देख रहे होगे अभी भी रुक रहा है उसी लेवल पे, ऊपर रेजिस्टेंस है, ये भी सेम नेचुरल गैस की तरह ही। यहाँ पर ये छोटा सा सपोर्ट बना हुआ है, ये छोटा सा रेजिस्टेंस, जिस वजह से ये रेंज के अंदर फंस गया। किसी एक साइड के ऐसे जाने जरूरी है सो दैट मूवमेंट थोड़ा ब्रॉडर लेवल पे हो। कह सकते हो क्रूडल साइडवेज है फिलहाल के लिए। एक्सपेक्ट कर सकते हैं 5:30 के अराउंड कुछ मोमेंटम करे मार्केट अब। थोड़ा सा फ्लैग जैसा भी दिखेगा आपको ये बनता हुआ, पीनट पैटर्न या फ्लैग कुछ भी कह सकते हो। वॉल्यूम चेक कर लेते हैं, लेट्स सी द वॉल्यूम, वॉल्यूम है भी या फिर नहीं। ओके, वॉल्यूम भी देखोगे तो अपने एवरेज से काफ़ी कम है, जितना नॉर्मली मूविंग एवरेज रहता है वॉल्यूम का, उससे तो काफ़ी डाउन चला गया। कंसिस्टेंसी भी नहीं है ऑलमोस्ट, ये कह सकते हो। थोड़ी देर पहले अराउंड 2 PM के आसपास और 1:30 के अराउंड आपका न्यूयॉर्क सेशन, लंदन सेशन ओपन हुआ था, वहाँ पर थोड़ा बहुत वॉल्यूम आया था, उसके बाद बिल्कुल ही साइडवेज है। इसके ऊपर तो ऊपर एक रेजिस्टेंस और है, वहां से एक सेलिंग का प्लान कर सकते हैं, यहीं पर अटक ना जाए ये कहीं। कोई अगर बाइंग में है तो अपना ट्रेलिंग एसएल यहाँ कहीं नीचे रखना, इससे ज़्यादा बड़ा लेना भी मत। लास्ट टाइम इसके ऊपर कैंडल क्लोज तो हो गई थी, तो ये अभी भी वर्क कर रहा है, बट एज अ रेजिस्टेंस छोटा मोटा। ऑयल में देखो यहाँ पर भी काफ़ी तरह से साइडवेज है, बट ये भी छोटा सा शायद रेजिस्टेंस बना हुआ है क्योंकि रेंज है मार्केट में छोटी सी। तो ऊपर वाले रेजिस्टेंस से थोड़ी बहुत सेलिंग आ रही है, नीचे से थोड़ी बहुत बाइंग आ रही है। वॉल्यूम आया तो सडनली कोई बड़ी कैंडल भी बन सकती है, ध्यान रखना। ऊपर चला जाए तो एक रेजिस्टेंस अनटेस्टेड है, यहाँ पर टेस्ट किया नहीं है, तो वहाँ से सेलिंग आए तो और बेटर। इस एरिया से आई तो फिर थोड़ा सा प्रॉब्लम क्रिएट हो जाएगी, तो थोड़ा बायर अपने एसएल का ट्रेल कर लेना नीचे, यहाँ ट्रेलिंग एसएल। बाकी कोई यहाँ से अगर सेल करना चाह रहा है पर्टिकुलरली इसी लेवल से, थोड़ा क्वांटिटी कम रखना क्योंकि ये लेवल ऑलरेडी यहाँ पर टेस्ट है एक बार, और कैंडल भी ऊपर क्लोज कर दी थी लेवल के, बट स्टिल इट इज एक्टिंग एज अ रेजिस्टेंस। अभी भी रेजिस्टेंस की तरह ही काम कर रहा है। बाकी नीचे और कोई सपोर्ट तो यहाँ पर है नहीं, सच लाइक एफईजी बहुत सारे हैं बट नॉट एग्जैक्ट सपोर्ट। सपोर्ट नीचे ही है 5705 के अप्रॉक्सीमेटली, डे लो। चल गैस को देखो कि ये भी रेंज बाउंड है, नीचे यहाँ सपोर्ट है और ऊपर रेजिस्टेंस है। तो जब तक ये रेंज बनी हुई है तो कुछ खास तो मूव करेगा नहीं। नीचे से बाइंग आ जाएगी, ऊपर से सेलिंग, नीचे से बाइंग, नीचे से सेलिंग। किसी एक साइड पे मार्केट अगर एसएल निकाल दे, या तो ऊपर सेलर्स के या नीचे बायर्स के, तब थोड़ी रेंज बेटर हो सकती है। लेट्स सी किस साइड के एसएल निकालता है मार्केट। गेस इज आल्सो साइडवेज।
The price of gold has broken record after record this year. But it's the nature of that surge that's caught people's attention.
It's basically flown against all the rules in the macro playbook. And it's led some people to scratch their heads, wonder if there's a big mystery buyer in the market, because it really doesn't make sense.
One country has been key to why gold's value has soared.
This buy is around 100 grams, and it's around 10,000 US dollars.
And this has revealed just how nervous Chinese consumers are. So what's driving this in 2024, and will it last?
I've never seen their desire to hide their wealth away from somewhere as strong as now.
As a bit of a primer, it's worth quickly looking at just how much gold actually exists. The finite quantity and near indestructibility of gold underpins its value. About 212,000 tons have been mined from the earth, it's estimated, almost half of that in jewelry. Most of the rest is in bars and coins in banks or private vaults around the world.
It's harder to imagine a safer asset than gold. It's a heavy thing. The logistics of even coming over and stealing it and seizing it, it requires a lot of logistical thinking and legwork there.
It's one way gold earned a reputation for being a haven from volatility.
Gold isn't like the US dollar. The US can seize and freeze your US dollar assets very easily. We saw that in 2022. And that particular episode has really influenced the way a lot of the emerging market world thinks about how to allocate your reserves and stay safe in a world where, at this point, who knows what's next.
In the first half of 2024, war in Ukraine and the Middle East, as well as the prospect of lower US interest rates, all nudged the price up. So, who's been driving gold prices in 2024? First, central banks.
They've been buying up quite a lot of gold, hoovering it up really over the last 2 years. You've had analysts from Goldman Sachs pointing to emerging market central banks as being the real driver behind gold's incredible rally this year.
In fact, it's been the dominant driver of the upward gold move since 22. The moment that Russian financial assets were blocked, then that sparks a lot of concern from a lot of emerging markets and China in particular that, who knows, this might happen to them one day.
The People's Bank of China embarked on an 18-month buying spree in 2023 and 24, purchasing gold to diversify away from US dollars as tensions with America grew. The central bank's now sitting on nearly 2,300 tons. Which brings us to the other driver that pushed up gold's price, China's retail might. When you buy traditional Chinese gold jewelry, you're not just buying the design, you're quite literally buying its weight in gold.
This is the Chinese bangle. Normally, in the tradition, and the parents, the grannies, the family will pass this Chinese jewelry to the next generation. So they pass on to you as a luck to give you some blessing. And at the same time, it's more like passing on some of the tangible assets to the next generations as well. It is a tangible representation of wealth.
As Chinese consumers joined in the rush earlier in the year, gold's value accelerated even more. Social media was awash with hype. China's now the world's biggest retail buyer of gold, purchasing roughly 1,000 tons in 2023, mostly in jewelry. But Chinese gold demand hasn't been driven by people spending extra cash. Quite the opposite. China's economy is struggling.
Why does this market keep faltering?
A swinging local stock market limited investment options. and a persistent property crisis is dragging on the Chinese economy. Over the last 3 years, China's property market has been battered. Homes were a key store of value for many Chinese. As the crisis has dragged on, billions have been wiped off household wealth. Government figures show at least 380 million square meters of excess housing in China. That's equivalent to the size of Detroit. And despite Beijing unveiling its biggest package yet to reduce borrowing costs, prices have continued to slump.
In the last 20 or 30 years, I have not seen, in general sense, the Chinese population has been so worried about the future, the economic future.
Anxiety lingers about jobs, wages, and what lies ahead for China.
And I've never seen their desire to hide their wealth away from somewhere as strong as now.
Evidence of China's changing consumption of gold can be found here in Shenzhen Shuibei market. Nearly $14 billion of gold was sold here in 2023, but by this fall, things had changed. In October, gold's price peaked just shy of $2,800, an all-time high. Chinese jewelry buyers said, "Enough's enough." Sales collapsed.
So I talked to my old friends to get an idea what has been happening in the China's jewelry gold market recently. They told me the sales in October was so bad that the whole entire Shuibei area only sold 1 ton of gold in October. In a normal month, the sales of gold is still between 20 tons and 40 tons a month in a weak season.
Chinese consumers helped push gold's price so high they were priced out of the jewelry they'd been buying. At the same time, those with wealth bought these, helping nudge gold's value to a record high. But why is this happening? Who's buying at this price?
I think one of the most interesting things about gold right now is that you're seeing a lot of demand for the physical bullion. There's cost of carry charges associated with physical bullion, and you have to pay storage fees as well. So if you're willing to take on those extra costs just to have a physical piece of bullion in your ownership, I think that suggests there are deeper underlying concerns about where the world is headed.
Sales of bars and coins are up nearly 30% this year. It all links back to anxiety. Gold is seen as the safest place to store your wealth, even when prices are this high.
From time to time, I always share conversations with my friends in China. Some of them are very wealthy. They're working across various different industries, some in mining, some in jewelry, some in batteries, some in EV. So they're all across different industries. And a common sentiment that I get from them is they don't feel hope for the future. People are actually getting less comfortable and want to do something to protect their own wealth.
And they what? They turn to gold?
Yes, they buy physical gold bars. But obviously, they are not going to store it in a bank because they will be found out. So they store it in their own place.
Despite fluctuations, gold remains at a near record high, and the trend since the millennium shows its journey. If fear and instability have underpinned the rally, then 2025 will see it continue. The incoming Trump administration has threatened Beijing with 60% tariffs.
Truth Social messages, at least 2 of them that he's laid out his plan on day 1 for tariffs. And we all know that Donald Trump says he loves that word tariffs.
A potential escalation of US-China trade tensions could threaten already weak Chinese growth and upend global markets.
You're going to have central banks look at Trump and potentially what could be erratic foreign policy and get a little bit more concerned about the safety of their reserves and their assets. And in that context, gold makes a lot of sense.
neutral rate and how to get there. And that's what you're going to see in these public comments now.
Neela Richardson of ADP, thank you so much. And we'll see you for a full hour tomorrow. I will just note this. Morgan Stanley put this out that I thought was fascinating. And I'd love your thoughts on this, Danny. That aggregate payroll incomes provide strong support for consumption. They are rising at 5.5% annual rate versus the third quarter, stronger than the 4.5% pace in third quarter or 4.9%. Basically, we're looking at a reacceleration of how much people are earning and the hours that they're actually working.
And the big risk has been a restoking of demand. And that also plays into 2025 with the kind of policy that we might get. Are we going to get policy that includes tax cuts, things that, again, allow people to have more of a disposable income and spend more? If you're already seeing some of that happen in the pay roll numbers, if you're already seeing that in some of the wage growth, what does 2025 look like then?
One thing we did hear from Trump over the weekend with this NBC News sit down was that he does want to focus on in the first 100 days, immigration first. He said, then we're going to come to taxes. So kind of what we heard out of the Senate as well. It's going to be immigration and then taxes. The big question is, when do tariffs come?
And what does immigration do to the workforce at a time where there potentially is upward pressure on inflation? Now, coming up next, Chris Harvey of Wells Fargo, Henrietta Trey's Veda Partners, Norman Rule of CSIS, and Kevin Rosenbaum of Cambridge Associates. This is Bloomberg.
Spoke to the LG Electronics CEO just recently. He said that this was on the table, that everything was being considered. But I wondered if they would go ahead, given that we have seen some other South Korean companies trading in India not doing that great. So what could be eventually the valuation that we could get for This is the Asia Train. I'm Shia Rian in Seoul.
I'm Hadi Stroud-Watts in Sydney, where the market has just opened. The top stories this hour. The US strikes Islamic State targets in central Syria as Bashar al-Assad flees to Russia after the stunning advance of Islamist rebels topples his regime. In South Korea, pressure intensifies on the president to step down even after he narrowly survives an impeachment vote. An Asian stock set for a mixed open after US jobs numbers spur bets on a Fed rate cut this month and sent Wall Street to its 57th record high of the year.
Sherry, even as we continue to see stocks climbing ever higher to record highs as we end out the year, we also end out the year with just an extraordinary level of geopolitical and political risk, right? While we were sort of distracted with the dramas playing out both in France and South Korea last week, where you still are, of course, monitoring the situation there, we've also been watching the developments across the Middle East. And, of course, we've been talking about really what is quite a stunning development in Syria, the Assad regime just falling, he and his family fleeing to Russia and seeking asylum and being welcomed there in Moscow. But, of course, this has happened after really some extraordinary moves and really progress being made by opposition groups in that territorial advance, and that toppling of this long-time regime and leader, no doubt sending shockwaves not just across the region, but a lot of sort of mulling going on when it comes to Iran, Russia and the US right now.
Yeah, Secretary Blinken actually releasing a statement saying that they want to see a peaceful transition of power in Syria. And that's another key question here in South Korea still, right? I mean, it was such a chaotic impeachment vote, which President Yoon narrowly survived just because the ruling party boycotted the vote itself. But we're still hearing from the opposition that they're not happy with the idea that Prime Minister Han Duck-soo will actually take over managing this country as President Yoon's powers are suspended, according to the ruling party. And I was there with the protesters at the National Assembly on Saturday. 100,000 people gathered yelling, impeach, impeach. Where this political drama goes from here in Seoul is a huge question right now, which, of course, will really lead to investors and more volatility in the markets.
And we spoke about last week about kind of, the question mark over South Korean legitimacy and the government if he doesn't step out, if the impeachment vote doesn't make it through, right? And so far we've seen kind of a talking down of the fears of contagion and how it could affect South Korean assets and investment. But certainly we're seeing some indications that even the things like tourism are going to be impacted as this chaos continues to play out. But let's take a look at how we're setting up, because as I mentioned at the top of the hour, we are still seeing, ever higher highs being reached by US stocks as we get these expectations being spurred of a Fed rate cut before the end of the year. Asian markets, though, looking decidedly cautious amidst these ongoing geopolitical tensions. We're watching oil markets very closely, of course, but central bank rate decisions really due across 4 continents, and there is a great deal of risk aversion there. Taking a look at what we're seeing when it comes to Australia, a little bit of downside, despite, of course, some maybe that proxy upside that might have been expected, given we are also waiting for the potential of more fiscal stimulus from Beijing as well. Chicago and UK futures unchanged at the moment. Dollar yen holding just under that 150 level. We continue to watch dollar China as well in this session. And Sherry, I mentioned sort of some of the expectations now returning to the fore in terms of what we could see from the Fed.
Yeah, of course, we will be watching the U.S. inflation numbers very closely as we take a look at U.S. futures right now, unchanged after touching that record high in, what did we say, 57th already this year. I mean, we're going to lose count at this point, and we are headed towards potentially what could be the Santa Claus rally that we see every year as well. We have seen data from last week showing that U.S. hiring picked up, but the labor market is really moderating, not necessarily plunging at this point. And we've heard from President Trump also saying that he has no plans to replace Fed Chair Jerome Powell. Treasuries rose, shorter end outperforming the dollar, also higher, Heidi. But of course, we'll be watching safe haven assets today.
Let's get more now on our top story, of course, Jerry. Syria and the toppling of Bashar al-Assad's government after the rapid advance by rebel groups in the country. And Bloomberg's Michael Heath has been following these developments for us. And Mike, it's interesting, we were so focused on South Korea and France last week, and you were saying, hey, things are moving very, very quickly in Syria, and over the weekend it obviously played out in the most dramatic way. Happened very quickly, but it's been a long time coming.
Yeah, I mean, this was a civil war that, going back, there was a civil war for a period there coming out of the 2011 Arab Springs as Assad's regime sought to crack down on the protesters, who he characterised as jihadists and Islamic militants, which they weren't, but they soon morphed into that, the whole opposition thing. So it's been going on for a while. Then in 2015, you had Russia come in and put its air force behind him, and Hezbollah in Iran backed them as well. And it looked like that the regime had consolidated and everything was fine. And then it's just extraordinary, the speed with which it's fallen. It's almost like a paper tiger, this regime. Its soldiers clearly weren't fighting for it. There'd been reports that they were on basically starvation rations. So there was no backing for it whatsoever. Iran and Russia obviously are sidelined in a way. Russia focused on Ukraine. Iran's taken some hits, particularly with Hezbollah and Israel. And there just didn't seem to be that will to support him as well on behalf of either in Moscow or in Tehran. So he just, in the end, he had no support. I mean, he was almost looking to the US, the report said, to see if they could intervene. But when these countries fall, it tends to happen very quickly. Remember with the Soviet Union 30 years ago, I mean, it all drops away very, very fast.
The US has said, obviously, they want to see a peaceful transition. It was quite interesting, the sort of careful calibration of the statements from Antony Blinken, because, you know, he made a reference to, obviously, there's no love lost for the fallen regime. At the same time, there's quite a bit of caution when it comes to the groups that have taken over.
Yeah, it's a really interesting period because, obviously, I mean, Assad was, you know, to call him a butcher is probably not stretching it. I mean, he was involved in you know, hundreds of thousands of people's deaths basically during this fighting that went on. So his departure is no loss to anyone, but it's just the fragmented nature of Syria, and all of the non-state actors are more powerful than the actual state there. So the question is what this group HTS does. I mean, they were part of Al-Qaeda, but they've broken away. They're trying to present a moderate front. In Damascus, there's talk that there will be a peaceful transition, that Assad's officials will hand over to them. And perhaps a more interesting geopolitical side is that HTS is basically allied to Turkey. It has some links there as well. So if that regime manages to consolidate, you could end up seeing Turkey with a client state in Syria, which is a massive loss for Iran, obviously, but a big gain for Turkey in terms of the geopolitical sort of chess that goes on there.
Mike, the collapse of Bashar al-Assad's government felt a little bit fast, just a matter of days since rebels took over. But at the same time, my question is, like, how didn't this happen even faster, given how infamous he has been? I mean, we've been reporting for years, even in the past, about him using chemical weapons against his own citizens. How did we get to this point?
Yeah, Sherry, I mean, look, it was really that he had great power backing. I mean, Iran was until recently, Iran was so dominant in the region in terms of its ability to project influence, in terms of its ability to deploy fighters, whether it's the Hezbollah militias, whether it's Iranian troops. And then when you had Russian air power as well, I mean, Russia is the inheritor of a former superpower. It has a lot of weapons there. And when they put that at Assad's disposal, or they basically took over the fighting from him, they were able to then push back. And once his regime had sort of consolidated more than 50% of Syria, it looked like he was perhaps the best option there. I mean, nobody was a friend of his regime, but even in the surrounding Arab nations, it was better to have a government than no government, and you know, factions fighting over there because of the instability it causes everybody else. So it almost looked like he was going to return to some form of international legitimacy, you know, propped up mainly by Russia and Iran. But obviously that international backdrop has changed so much in Israel degrading Hezbollah a great deal, Iran and Israel now confronting head-on, and Russia tied up in Ukraine. The international backing just wasn't there, and so he was sort of left alone, and we saw that his forces just really didn't amount to much when it actually came to on-the-ground fighting. They weren't interested.
Thanks, Michael Heath there. Let's get some more analysis. Our next guest says, while the collapse of the Assad regime was sudden and unprecedented, it was also many years in the making. Joining us now is Greg Barton, who's a research professor in global Islamic politics at Deakin University. Greg, really great to have you with us. So when you take a look at what's happened and where we go from here, you've talked about the kind of difficult and dangerous partnership with the people that are now in charge. Do you see this as a moment of opportunity or of enormous regional risk?
Look, I think, Heidi, it's a moment of great opportunity, and there's good reason for being cautiously optimistic. What happened with the various rebel groups coming together and aligning with HTS, the key former Al-Qaeda rebel group, is they decided this was the least evil by a long measure of all the options. Getting rid of the Assad regime, incredibly brutal, callous, incompetent regime, that was the main goal. For Syria to have a bright future, it needs to work as a federation that respects pluralism. So HTS has to be happy to play a significant role alongside the Syrian Democratic Forces in the northeastern third of Syria, alongside with the various forces, including the forces that moved into Damascus from the south, that are secular and not comfortable with at least the former Al-Qaeda jihadist ideology of HTS. That seems like a long stretch, but it's possible. And credit to the people of Syria who have been amazingly resilient and focused in getting this far. Just those scenes of people being released from prisons, sometimes after tens of years as political prisoners, is a great thing in itself. But yeah, the difficult days ahead.
There's been much sort of spoken already about the power vacuum that potentially gets left, right? Who do you think are going to be rushing in to try and have a stake in this? We know that there's probably enormous opportunity for Turkey at this point.
Yeah, I think we need to shift the focus back, Heidi, to the people of Syria. I mean, the power vacuum is being filled by the people of Syria who very bravely fought. The key is whether they can work alongside each other and respect each other in this sort of plural alliance. If they can do that, and if Turkey can resist the temptation to exercise too much control via HTS, and also resist the temptation to move too harshly against the SDF in the northeast, this is the group that defeated ISIS after all, and where there's still many tens of thousands of people with ISIS associations in camps and prisons. And if America can help stabilize that northeast, which is, of course, a question under the new administration coming in January, then perhaps things can hold together and there won't be a vacuum. The vacuum occurs when you sort of pull a regime out and there's nothing to replace it. In Iraq, that led to insurgencies. It doesn't have to be that way in Syria.
Greg, talk us through what happened with Bashar al-Assad's regime, because when he first came into power in 2000, he was seen as a potential reformer for the region. What changed and what happens next to him? Because the last we heard was that he was in Russia.
Yeah, that's a really good question, Sherry. I suspect he's got a nice sixth-floor apartment with a wonderful balcony. I can't imagine he could rest comfortably in retirement in Russia because, you know, he's now seen as a loser and Russia disposes losers. Anyway, that aside, the key thing to understand is that when Bashar al-Assad succeeded his father, surprisingly his brother had been killed, so he was the unlikely replacement. People said, well, this London-trained eye doctor, he seems moderate and mild. He still seems moderate and mild in his demeanor. But he very quickly aligned with the most brutal of the generals in the Assad regime and carried out and continued to carry out for decades really harsh crackdowns on dissidents. That continued after the Arab Spring began in 2011. He missed many opportunities through that first decade. And then since then, he's missed opportunities to reconcile. Even in the last few years, when it looked like the region was reaching out and trying to sort of move on and rehabilitate Assad, he refused to take the opportunities offered to him. And yeah, so this is a collapse that you know, like a bankruptcy, occurred very slowly at first over decades and then all at once.
How are we expecting Washington to deal with HTS, which is, of course, a terrorist designated as a terrorist organization?
Yeah, when you designate a group as a terrorist organization, it's double-edged. I mean, you can understand why you do it, but it cuts off channels of communication. It means you're out of the loop. You don't have those back channels, at least not as clearly and certainly not officially, and therefore you can misjudge things. The best hope is that HTS is genuinely broken, that Jolani, who's consolidated his leadership there since 2012, has genuinely broken with that former Al-Qaeda background and is committed to a plural, you know, federal Syria. America needs to be in the loop, in my opinion. America needs to play a significant role, not interventionist in terms of, you know, foreign affairs, you know, proxy power stuff, but just being supportive and positive, beginning with the SDF in the Northeast, but also finding a way to work through with HTS an off-ramp to their terrorist designation so that if they show good faith and if they, you know, meet scrutiny, they can be rehabilitated, perhaps much in the way that happened in Ireland with the IRA.
We know that, of course, Russia has assets and military bases all over Syria. We know that the Islamic Republic is probably not likely to give up its interests without a fight. How messy does that part of the transition get, do you think? What should we be looking out for on that side?
Well, Iran, of course, is at a moment of weakness, and the real shock troops on the ground for the Assad regime were largely via Hezbollah with Iranian backing. That's out of the play for the time being, so that's positive. Hopefully the regime in Tehran does some introspection and decides now's the time to move beyond the so-called axis of resistance. It seems to have almost finished. For Russia, it's more difficult. They really value that Tartus Mediterranean port. There are still ships there, and then 60 k's to the north in Haiman, there's an air base, both very critical to the Russians. The big question is how much resources they want to put into trying to keep those bases. And for whatever HTS-led new government that comes in, will they do a deal with the Russians? You know, in many ways, they'd be well advised not to, but also to allow some peaceful exit. But that's the big question to watch at the moment.
Greg, really great to have you. Appreciate your insights. Greg Barton, Research Professor in Global Islamic Politics at the Alfred Deakin Institute at Deakin University. Let's take a look at what we're watching when it comes to a couple of those early movers in the Aussie session. We're just about 15 minutes or so into the start of cash trading, and ANZ, of course, one of the first to come online. We're seeing some declines now being extended, falling by over 1.5%. This after we had the leadership change with CEO Shane Elliott stepping down and the ex-HSBC banker Nunos Matos named as his successor. So that will take effect on July 3rd next year. After Shane Elliott announced his retirement. He'll also be joining ANZ's board as an executive director. Lots of challenges for the bank, including the integration of Suncorp, the banking arm there, strengthening that retail franchise, what has been a heavily commoditised market there as well. So Shane Elliott retiring after 9 years, a role that has really culminated in what is a tumultuous ending. We are seeing a bit of downside as a result, perhaps, of that leadership transition risks there, down by 1.6%. The other one that we're watching is Woolworths. This is the supermarket group, of course. We have seen an announcement from Woolies saying that the estimated direct one-off negative impact of the dispute with the union, there's been lots of labour action lately, to date on the Australian food EBIT is about 50 million to 60 million Australian dollars. So we have seen really the company's enterprise agreement offers that were endorsed, and now we're seeing those distribution centres across Victoria and New South Wales now open. Sherry.
And Heidi, still ahead, the latest from South Korea after President Yoon survives an impeachment vote but still faces pressure to step down. We hear exclusively from the country's financial watchdog next. This is Bloomberg. South Korean President Yoon Suk-yeol is facing intense pressure to step down, with public anger mounting after he managed to avoid impeachment over the weekend. Of course, we'll be looking forward to the market opens here in South Korea to see how the Korean won and the Kospi react. But Bloomberg's Sang-mi Cha joins me now for more on this. And let's really recap a little bit of what happened over the weekend, because I was with Yoon against the impeachment, with protesters against President Yoon at the National Assembly, 100,000 or so. And I know that you were with Yoon supporters in Gwanghwamun, and there was a lot of confusion. Walk us through exactly what happened and what happens next, I guess.
Yeah, so like going back to Saturday, which already feels like forever ago for now. Yeah, I remember he first made his appearance on television, and in his 2-minute apology, he said he will accept any legal and political responsibility, and then started the waiting game until 5 p.m. when the impeachment vote was, right? But that's exactly the time when all these protesters were rallying in Yeouido Island and in Gwanghwamun. I was in Gwanghwamun with most of the folks in their 70s or 80s, and these are people who actually are like for the President Yoon, and they are against the impeachment because they just don't believe that another impeachment is something to relive, because they've already experienced that once.
Given that we saw that in 2016 with Park Geun-hye, right? And what happened afterwards was just chaotic. But even now, having President Yoon escaped impeachment narrowly because the ruling party blocked it, it's unclear what happens next.
It's really unclear. And just now we're hearing that there will be
immigration side looks a whole lot less certain.
Yeah. I think this is where we do expect the Fed to cut 25 basis points in December. I think the labor market report was showing that the U.S. economy and labor market is slowing but not breaking. So barring from a significant upside surprise in the CPI report next week, we do think that Fed will cut. But I think after December going into next year, I think the Fed will start to recalibrate its reaction function, right? Now they need to respond to its due mandate, and they will probably take a more cautious reaction function. They need to watch both the data on inflation, employment, as well as the development on the policy side to evaluate how much they need to and also how much they can ease down the road. I mean, for 2025, we actually expect the Fed to keep policy rate above or at 4%. So, this is actually less than what the market is expecting.
So you talk about this, perhaps surprising economic resilience not being purely driven by Fed policy, and in fact, it's in spite of Fed policy in a lot of ways, right? But do you expect to see disruptions to those supply-side forces through things like tariffs, tax reforms, immigration reforms, and does that meaningfully change the picture?
Yeah, I think this is where we say, a lot of the economic resilience in the U.S. economy over the past several years is due to the good luck on the supply side, right? Productivity growth and also strong labor force growth. Now, I would say this is where we do see the potential, negative drag coming from the policy risk side, right? So both the trade tariff and also the immigration policy, they actually come as a negative supply shock. So they pretty much will become a drag on the growth and also actually boost up inflation further. And that actually will make, central bank's job even more challenging. Overall, we are actually expecting, the U.S. economy growth to grow about 2% in 2025. Without those negative policy shocks, the U.S. economy could actually be stronger even.
And yet other parts of the world seem to be weakening significantly, especially now with the governments in France and Germany toppled over budget concerns. We just had the collapse of the Syrian government as well, political chaos here in South Korea. Given how externally vulnerable and dependent all of these Asian economies are, what are your expectations for 2025?
I think, when you look at our 2025 outlook, we are expecting the global economy in aggregate to be largely stable, with inflation within touching distance of the central bank target, and central bank should continue to ease. But I think behind that, we're actually going to see heightened uncertainty, as we just mentioned, and also that will result in heightened divergence across, regions, right? So as you just mentioned, Europe is actually the weak link of the global economy. We are expecting only about 0.5% growth next year. Asian is actually, and also China is at the center of the storm, right? Given their, high exposure to, global trade, as well as integration into the global supply chain, right? So I think this is where we will watch closely about the changes in the trade policy, down the road closely. Of course, I would say not all economies are created equal. Even in Asia, I would say economies that is highly exposed to trade like Korea and Taiwan, Vietnam, Thailand, they will be much more vulnerable, but economies that's more reliant on domestic demand actually will continue to see, decent growth, like India or Indonesia or Philippines.
Given what you're saying, how difficult could 2025 be for South Korea, especially when we have no clarity on who will take over the government? We have seen such political chaos here in South Korea many times in the past. Given that as reference, what are your expectations for the next year?
I think overall, if you look at the Korean economy, right, we already have seen that the domestic demand is weakening, and then there's rising, external headwinds. Inflation is also coming down, faster. So I think that will enable the Bank of Korea to cut interest rate to support the growth. Now, when we are talking about the political instability, right, remember back in 2016-17, when there's impeachment of the President Park, there's also a negative impact on consumer sentiment, consumption, right? So obviously political instability, especially if it's prolonged, it will actually have a negative impact on sentiment and confidence, and that is pretty negative to domestic demand. So this is where we would just have to watch how long this continued political uncertainty will persist, and what's the impact on the economy and also fiscal policy.
Tian Wang, who's the Chief Asia Pacific Economist at Vanguard Group there. Always great to have you with us. And watching and seeing is really kind of the mandate at the moment for these markets, right? And you take a look at what we're watching when it comes to some of these haven assets in light of extraordinary developments across the Middle East and Syria over the weekend. We're seeing New York crude holding pretty steady, $67.30 is where we're at. We did see really oil holding that weekly loss. We had the Saudis price cut, I should say, signalling even further these expectations of a weaker outlook. So a second week of declines after the reduction of crude prices by Saudi Arabia, more than expected. But we continue to watch for any market fallout following the toppling of the Syrian regime. We're also seeing gold futures a little bit higher then, but pretty much steady after we had the US jobs number last week, reaffirming expectations of a rate cut from the Fed later on this month. And gold futures, they're pretty much unchanged. The US dollar at the moment seeing a little bit of weakness, but mostly steady against trading pairs, Sherry.
Yeah, and Heidi, we're about 20 minutes away from the opens of the South Korean markets, and the top financial watchdog expecting the country's corporate governance and shareholder return initiatives to continue despite the political turmoil. Governor Lee Bo-kyun spoke to us exclusively before Saturday's failed impeachment vote against President Yoon.
And to ensure that orderly exit.
Right, so it could be a concern. However, for American companies that want to help reduce the trade deficit, it's an opportunity for them to sell more into Korea. Companies like Semiconductors, right, autos, auto parts, and anyone who does business with Hyundai.
Geopolitical environment sets the tone for the conditions in which we're investing. As a senior portfolio manager, my responsibility is to find the corridor of opportunity in all market conditions. And in this case, I'm really encouraging clients to have the awareness of the geopolitical situation, but the thematics that are enduring, that underpin growth and earnings is what will drive this market higher, which is why we're remaining very U.S.-centric in our investing right now. But that's the most important thing.
How
much do you watch China? Again, today we had, the start of monetary stimulus, which actually the Chinese policymakers probably didn't want.
Well, look, it's hard to kind of have your cake and eat it too in China, in terms of if you want to have transparent and liquid markets, along with stimulus with a slowing economy. The bigger issue, I think, is whether or not there's a role for China right now in portfolios. And if anything, I think that that's more of a signal that the thematic that investors need to embrace is the reimagining of global world order and its impact on supply chains, and what that means in terms of who the winners and losers will be in terms of balance sheets that can support that reimagination, because it's expensive and that would weigh on earnings, which is also why we continue to favor the big cap space, because they've got the balance sheets to reimagine that.
After 13 years of civil war in Syria, more than half a century of brutal authoritarian rule by Bashar Assad and his father before him, rebel forces have forced Assad to resign his office and flee the country. We're not sure where he is, but there's word that he's in Moscow. At long last, the Assad regime has fallen. This regime brutalized and tortured and killed literally hundreds of thousands of innocent Syrians. The fall of the regime is a fundamental act of justice. It's a moment of historic opportunity for the long-suffering people of Syria to build a better future for their proud country. It's also a moment of risk and uncertainty.
Along with Northern Trust. They talk about the end of QT being something which is going to reinvigorate the deposit gathering process for the banks. State Street, the example I've given you, they're raising the price target there to $139 from $102, but they talk about a higher capital markets activity, that is deregulation, regulatory stabilization, and higher deposits. So that's state of play on the banks. Lisa, good morning.
Good morning, Menace, and thank you very much for that, as always. Under surveillance this morning, bulls on parade. John Stoltzfus of Oppenheimer expecting the S&P 500 to reach 7,100 by year-end 2025. His call now the most bullish on the street for now. Let's wait a couple minutes. Stoltzfus saying, quote, the current bull market likely has legs strong enough to climb the proverbial wall of worry into and through 2025. Danny, basically, try to find a bear right now. They seem to be extinct.
In the words of Sabrina Subramanian, yes, indeed, the bears have gone extinct. I think it's worth looking back and just noting how wrong we have been over the past 4 years when it comes to year-end calls. Jim Reed at Deutsche Bank laid this out. 2020 upended by COVID, 2021 upended by inflation, 22 by the aggressive height cycle, and 23 by everyone saying we're going to get a recession, and we didn't get one. The risk this time is we're all crowding around the high end. Are we going to be wrong yet again?
Well, and that's the sort of interesting point, actually, about John Stoltzfus, because he was the biggest bull on the street this year. He had lifted his 2024 target to 6,200 in November, the last month. We're getting close to 6,100. I mean, it just sort of raises this question of what have people gotten wrong with their lack of enthusiasm heading into this year?
Well, something I love that he says is we're not suggesting paradise on earth. I mean, you look at what is going on in the world and the geopolitical scares and the tail risks you're hearing banks talk about for next year. That's where it is. So not expecting paradise on earth or a Goldilocks world. So there are going to be challenges, but he says there's this genuine genuine potential for AI to provide greater efficiencies in key areas that are challenging progress today. So basically, this AI run, it's people like John Solfis, has more to run.
Yeah, and other people are really filing into that thesis as well, including BlackRock. Meanwhile, President-elect Trump saying he has no plans to replace Fed Chair Jay Powell, saying, quote, I don't see it. Trump has previously said he thinks he should have a say in monetary policy and the setting of interest rates, calling Powell's role in the easiest in Washington. Powell's term expires in May 2026, so get out some of the forecast books to try to figure out who could take his place. But AMH, to me, what I find interesting is the point you are making. Inflation will call his hand. He lost the election, or I should say, Biden sensibly lost the election in part because of inflation. How much is this a very delicate moment that he doesn't really want to disrupt?
I know. I think we talk about all the time that the checks on Donald Trump has always been the stock market. Well, it also might be the fact that if inflation is coming up, and he talked about in his NBC interview, it's the idea that groceries was the reason why he won, because basic necessities were going up. So that could potentially be one of these checks on all of his policy proposals of next year. And of course, to your point earlier, he's a real estate developer. He wants to see rates going down. What was interesting, though, is he said he doesn't see that happening. But if I told him, he would. If I asked him, he wouldn't. I don't know if there's a difference.
Right. Well, I mean, he's kind of making clear, look, I could get rid of him. I think he'd listen to me. He'd listen to me if I wanted him to go. And I think inflation might be the thing that not only forces his hand to rethink policies, but rethinks the Fed chair. Angie Brenner of Nat Alliance was one of the first reactions I saw to this interview that said, yeah, he doesn't want to let him go because he wants to cut rates.
He wants a dove.
Exactly. What happens if that changes and all of a sudden you get a stronger dollar, which Trump doesn't want because they're hiking rates? And again, Trump wants rates to come down. Is that when you get a rethink of who's running the Fed?
And what could cause some sort of potential rethink on the Fed is potentially the commodity market. That's what Alicia Levine last week was saying of BNY, that essentially the oil market could hold the keys to whether or not we really do get this soft landing. Oil, meanwhile, gaining as the market weighs fallout from the Syrian government's collapse. The fall of Bashar al-Assad's regime creating a power vacuum, with multiple groups now vying for control. Crude has been confined to a tight range since October, and you don't want to make too much of this particular move. A glut is expected next year with little room for a significant OPEC plus output boost. And you made this point, AMH, that basically this isn't that big of a move considering that we just saw a 50-year regime collapse in a matter of 11 days.
And that goes back to the market fundamentals right now in the oil price. The fact that OPEC is not able to put more barrels into the market that they were supposed to just because there is this glut. You cannot be overestimating the fundamentals right now. And the weak demand coming out of China, even though they are out talking about looser monetary policy and fiscal spending. Saudi Aramco over the weekend, I think more important for the oil market today than what's going on in Syria, cut its oil prices to Asia. This is the fundamentals at play here. And 2025, everyone is talking about there's going to be a bigger glut.
That's the dynamics in the oil market. With respect to the Middle East, the U.S. is currently striking dozens of Islamic State targets in Syria after President Biden warned Bashar al-Assad's fall could clear the way for a resurgence in extremism. Joining us now is Norman Rule, former senior U.S. intelligence official who always provides us with fantastic insights into the Middle East. Norman, just what's your first takeaway from how destabilized this region is and what you want to be watching to understand what could come next?
Good morning. The collapse of the Assad government is an inflection point for the region. It does offer areas of risk, and the United States and Israel are doing everything they can to minimize that risk. Israel has undertaken multiple strikes against missile, chemical weapons facilities in Syria in a manner that's been unprecedented since the 1973 war. Israel has also moved some forces into a neutral zone to prevent anyone from moving into that territory to threaten Israel. The United States has attacked dozens of ISIS sites in eastern Syria because ISIS has conducted a resurgence over the last year that has been worrying. And the United States wants to make sure that with the collapse of the Syrian army, that ISIS does not take advantage of this and expand further. I'm not sure that at this point there's a risk of expansion of this instability beyond that territory. There are about 6 different groups who maintain present control of different areas of Syria, but that was true a couple of weeks ago as well. Now it comes down to whether the group in control of Damascus will live up to its word and create a unity government, and that would be good for the entire region.
And Norm, you raised this point. Is the question really instability in Syria, which really doesn't have a very large population and has been in disarray for a long time? Or does it raise a question about Iran at a time where their power has been dramatically diminished across the board in the region? And it seems like there is a tipping point moment for them, especially with a new administration coming in at the U.S.
Absolutely. The arrival of the Trump administration, the collapse of Iran's ring of fire around Israel, the multiple instances of Israel being able to conduct apparently covert and overt military activity within Iran. Iran's regime is weak. It's also going through an era of leadership transition. Its economy is poor. It has a restive population. Iran needs stability. The question, therefore, becomes how it handles its nuclear program in coming weeks.
So, Norm, at this moment, is Iran closer to getting a nuclear weapon or less so?
Iran, according to the International Atomic Energy Agency, has never been closer to its ability to produce sufficient fissile material for a nuclear weapon should it decide to build so. It has increased the number of advanced centrifuges in facilities that look as if they were designed for a nuclear program, and the amount of highly enriched uranium is growing in Iran. At the same time, Iran is incredibly vulnerable. Iran knows that Israel could strike most of these sites and destroy them at will. So for Iran to undertake that activity, it's got to think that it's going to get away with it and will be able to complete its activity before it can be discovered.
Norm, can we talk about the breakdown of Russia and Iran in Syria? The fact that you have President Biden coming out and saying they broke down because they were dealing with other crises. Iran was dealing with their proxies fighting Israel, whether that's Hamas or Lebanese Hezbollah, and Russia, of course, with Putin's offensive in Ukraine. Is that accurate?
Well, perhaps some of that is true, but we've also got a number of other issues underway. Israel has eradicated much of Hezbollah and Iran's Syria-experienced leadership over the past year, and they took to their graves their capacity to build cohesive operations with multinational, multicultural proxy forces in Syria. So that introduced a significant amount of lack of efficiency that Iran never overcame. The Russians have maintained forces in Syria and aircraft, naval assets, and ground forces. But I think what we've saw in Aleppo is a failure of intelligence, a failure of planning, a failure of coordination, and then events moved so quickly that these forces could not put together a credible opposition to the Syrian oppositionists moving south. I mean, we're really seeing weakness in those forces for a variety of reasons.
So the net effect of that for Russia is effectively losing their anchor in the Middle East, Norman, at a time where you also have another former Soviet state, Georgia, pushing for increased involvement in the European Union. Marko Papic of BCA says that it means the jig is up for Russia when it comes to Ukraine, that Putin has been playing checkers and not chess. Do you think there's any validity to this, that this also impacts what Russia is doing in Ukraine currently?
Well, it certainly will impact Russia's capacity in the Middle East. The Russians are going to try to reach out to the opposition in control of Damascus to see if they can retain their forces. Russia's naval bases in Syria allow it to maintain a naval presence in the Mediterranean. Without those bases, it's going to have to try to strike a deal with Egypt or perhaps Algeria. Its air base in Syria allows it to support operations in Libya and Africa. The ripples from this, the collapse of the Assad government have yet to play out, and Russia will pay a severe price if it loses its presence in Syria. And of course, this will have an political impact in Russia and be seen as a result of its wasted energies in Ukraine.
So as you see these world players, their current presence in Syria be upset, Iran, Russia, Norman, what is America's role in all of this? They still have troops in Syria. We learned that the U.S. had done targeted strikes against bases of ISIS. How does that evolve in the coming months, in the coming year?
The United States should protect our 900 plus forces in Syria. The United States should maintain its activities and an international activity against Daesh. We want to prevent that from expanding. The United States should support Israel to ensure that its borders are secure. But at this point, I think the best thing to do is to work with the region. They know their problems better than we do. They're going to have to support Syria in the long term and work with moderate Arab states to assist them as they develop some sort of coalition in Syria to bring together a national government.
Norm, last night we heard from Semcon about strikes against ISIS leaders, operatives, and camps. Why last night, and why not do that 2 weeks ago?
Good question as to why not 2 weeks ago, but certainly the imperative in the wake of the collapse of the Assad government and the collapse of the Assad army made ensuring that ISIS does not have the opportunity to expand further was significantly greater. It's a wise move. It's a smart move. But again, it demonstrates that 72 sites had to be hit in eastern Syria. This tells you something about the organization of ISIS and how CENTCOM perceives that threat. And again, there are thousands of ISIS prisoners that are still being held by the Kurds. Someone has got to figure out what to do with this population. If they're ever released, that would provide a massive injection of personnel to ISIS, which would enable it to expand and destabilize the region and perhaps Europe and elsewhere.
Norm, just real quick here, are you more or less concerned about the state of the Middle East right now than you were before the weekend?
I'm optimistic that there are more opportunities for regional players to improve the Middle East with Iran's, the collapse of Iran's axis of resistance. At the same time, this requires an international effort to support those players. We need a strong team in the United States to provide assistance and guidance without pulling ourselves into this mess. And of course, the Houthis remain relatively untouched and powerful. Indeed, they fired a missile reportedly against Israel only last night.
Norman Rule, thank you as always for your insights. We always really appreciate it. Right now, let's get an update on stories elsewhere this morning. Here is your Bloomberg Brief with Yahaira Hakez. Yahaira.
Hi, Lisa. President-elect Donald Trump in an interview said he had an exchange with Chinese leader Xi Jinping in the recent days. This is the first clear indication of direct contact between the two men since the U.S. election. Appearing on NBC's Meet the Press with Kristen Welker, Trump said they talked as recently as last week without specifying exactly when or what was discussed.
I had an agreement with President Xi, who I got along with very well. We've had communication as recently as this week. And I had communication with him where they were going to give the death penalty to anybody sending drugs into the United States.
Trump and Xi last met in person in June 2019 on the sidelines of the G20 summit in Japan. Meanwhile, inflows for U.S. Bitcoin ETFs have reached nearly $10 billion since Election Day. The total assets from funds like those issued by BlackRock and Fidelity have reached approximately $113 billion, according to data compiled by Bloomberg. President-elect Donald Trump's embrace of the crypto market has produced the boom in the market, with Bitcoin topping $100,000 last week, though it has now fallen below that. Meanwhile, spot ETFs for rival cryptocurrency Ether have also turned heads, attracting nearly $2 billion in net subscriptions. And it's the end of an era for Taylor Swift. The singer ended her Eras tour in Vancouver last night after 149 shows spanning 5 continents over 2 years. The concert series was the first to collect more than $1 billion in revenue, selling more than 10.1 million tickets. Swift ended the tour by thanking the crowd for being a part of what she called the most thrilling chapter of her entire life to date. That's your Bloomberg Brief. Lisa?
Thank you so much, Yahaira. Up next, the bulls broadening out.
The other thing is broadening out a little bit, looking at small cap U.S., for example, which might have a little bit less vulnerability to some of these global crosswinds.
That's coming up next. This is Bloomberg Surveillance.
गाइस नेचुरल गैस ऑलरेडी आ गया है अपने सपोर्ट पे अभी भी सपोर्ट रेजिस्टेंस के बीच में ही है जिन लोगों ने सेल किया है प्रॉफिट चाहे तो बुक कर सकते हैं किसी एक साइड के एसएल निकलने जरूरी है या तो बायर के या सेलर के तभी एक थोड़ी बड़ी रेंज बन सकती है नहीं तो ये छोटी सी 4 पॉइंट की रेंज है मार्केट इसी में टाइम पास कर सकता है सपोर्ट ले चुका है रेजिस्टेंस भी ले चुका है दिस इज 4.5 पॉइंट रेंज इन फ्यूचर 15 मिनट टाइम फ्रेम इसी एक साइड के अगर लेवल निकल जाते हैं तो फिर थोड़ी एक बड़ी रेंज बन जाएगी लाइक इन द सेंस ऑफ रेजिस्टेंस से डायरेक्टली यहाँ तक या फिर ऊपर के अगर एसएल निकले बायर्स के तो फिर यहाँ से लेकर एक नेक्स्ट रेजिस्टेंस एरिया तक, तो अभी के लिए रेंज है। लेट्स होप कि ये रेंज मार्केट ब्रेक कर दे किसी एक साइड पे। जो लोग सेलिंग में है निकलना चाहें तो निकल भी सकते हैं। 6:30 होने वाला है, न्यूयॉर्क सेशन की ओपनिंग है। नीड टू सी किस तरह का वॉल्यूम आता है। बाकी क्रूड ऑयल में अगर कोई है तो ये भी थोड़ा सा अपना एक रेजिस्टेंस एरिया था वहीं पर रुका हुआ है। मेजर रेजिस्टेंस एरिया थोड़ा सा अपर लेवल पर है, एक्सपेक्ट कर रहे हैं वहां तक आए। इस लेवल पे लास्ट टाइम मार्केट लेवल के ऊपर क्लोज कर गया था कैंडल, बट ये अभी भी रेजिस्टेंस की तरह थोड़ा बहुत काम कर रहा है। सो लेट्स होप अपर लेवल से सेलिंग आती है, तो कोई अगर यहाँ पर सेलिंग करके बैठा हुआ है थोड़ा संभल के। बाकी कोई नीचे से बाइंग में है तो ट्रेलिंग एसएल कहीं यहाँ रख सकते हो इस 5761 के ऊपर। इससे बड़ा एसएल लेना मत, ट्रेलिंग एसएल। कोई डेटा नहीं है तो थोड़ा ध्यान से ट्रेड करना। देयर इज नो डेटा शेड्यूल फॉर टुडे इन क्रूड ऑयल नेचुरल गैस। India appoints Revenue Secretary Sanjay Malhotra as Central Bank Governor। मतलब आरबीआई के नए गवर्नर होंगे शशिकांत दास के बाद संजय मल्होत्रा। गवर्नमेंट नोटिफिकेशन, न्यू आरबीआई चीफ मल्होत्रा टर्म्स टू बी फॉर 3 years। 3 साल के लिए 3 साल के लिए आरबीआई के नए चीफ बन गए हैं संजय मल्होत्रा। रेवेन्यू सेक्रेटरी हैं। देखते हैं मार्केट किस तरह से रिएक्शन देता है इंडियन मार्केट कल इस पर।
Nobody covers business like Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Earnings season is here.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Right now, we're getting toward the market open with a range-bound market after 3 straight weeks of gains, 57 record highs. A question of just how much better this market can get in 2025. Under surveillance this morning, the bulls broadening out.
Right now, we still are on the momentum bandwagon also. I mean, what worked well in 2024 is likely to persist in 2025, and that suggests that U.S. large cap in particular has room to run here. The other thing is broadening out a little bit, looking at small cap U.S., for example, which might have a little bit less vulnerability to some of these global crosswinds.
Here's the latest. Some investors expecting big tech's AI-driven run to broaden out to small caps next year. Kevin Rosenbaum of Cambridge Associates writing, we do expect small caps will outperform. It has been a rough couple of years for this asset class, but in our view, that is a nice setup for the future. Right now, Kevin joins us. Kevin, thank you so much for being with us. Before we get there, overall, you actually don't have as rosy a view as everybody else and thinks the impressive run of U.S. equities can't continue. Why?
Yeah, I think that's right. Look, U.S. equities have clearly been on a tear recently. They may finish up 30% this year after finishing up 26% in 2023. But returns have really been driven by a narrow collection of stocks, as we all know. And in our view, narrow stock leadership is fragile stock leadership. So we expect U.S. equity returns to moderate in 2025, certainly not calling for a downturn here. Just think that returns will be much more typical than the stellar returns that we saw in 2024.
Well, Kevin, you still see global equities as a whole outperforming, especially outperforming bonds. So if U.S. leadership wanes, what takes the reins?
Yeah, I think the way we think about it is that international equities, the gap between international equities relative to U.S. equities will kind of more moderate, and that global equities will just in general have a pretty typical year. For us, when we're thinking about our asset allocation, we're really trying to understand whether or not global equities will outperform bonds. And for next year, we really do think that's the case. And that's what's informing our asset allocation across our institutional and family clients. So let's be frank. Go ahead.
No, sorry, Kevin, continue.
Let's be frank. I mean, it's easy to be nervous right now. Clearly there are multiple armed conflicts going on in the world. There are rich valuations, and there's a lot of uncertainty with the new U.S. administration coming in. But if you look back at history, you know that global equities tend to outperform bonds in any given year roughly 2/3 of the time. And in our view, global earnings expectations for next year are reasonable. They're not out of line. And we also expect that risk sentiment next year will remain healthy, which should support valuations at the current level, because we do expect excitement over artificial intelligence to continue. And we do expect lower policy rates, which to us suggests that the marginal buyer will be a little bit more interested in equities over bonds. So we do expect global equities to outperform bonds in 2025.
Well, the biggest concern, according to Bank of America, when it comes to credit investors is geopolitical risk. Is that your biggest concern for next year?
It's certainly a considerable risk. I mean, the developments over the weekend were stunning. But I think for us, what it underscores is a couple things. First, it's that political risk is obviously very high. We all know that right now. But it also highlights how difficult it really is to predict political events as well. And that reality is really why we see so few investment funds focused solely on political risk analysis. In contrast, economic and market data are just much more plentiful and abundant. And that's really what we hang our hat on at Cambridge Associates. Having said that, I think the best move right now for most investors are not to make rash decisions in light of the weekend's developments. Markets have an amazing ability to just shrug off events and continue to march up.
Kevin Rosenbaum of Cambridge Associates, thank you so much for being with us as you look out ahead to 2025. And right now, looking out over the next week, all eyes very much on Wednesday with CPI coming up, the data that people have been waiting for, Danny, to try to understand how much of a risk inflation truly is.
And that's because this market has had such a short-term focus. That's why it's been able to overlook what might happen with tariffs, what's happening geopolitically, because they look to this month and they say, we are going to get cuts. So if you get a hot CPI, that's the thing that could undo it. So in terms of short-term risk, it's hard to see anything past Wednesday.
Torsten Slok last week was talking about how this Fed has had a bias to the labor market. And depending on the CPI report this week, I wonder if that bias starts to change.
Yeah, although Friday's NFP kind of was another Rorschach test, where basically some people were saying it's a sign of strength, other people saying it's a sign of weakness given the unemployment rate rising. So another kind of choose your own adventure at this point, Danny.
And as long as we get choose your own adventure, stocks can get higher. They need clearly a really big signal. If you can have governments around the world collapse and we're still buying U.S. stocks, you can have China hitting out against Nvidia and still this market is going higher. You need something else to wake everyone up.
Well, maybe this will wake everyone up. Peter Oppenheimer of Goldman Sachs, don't miss this. That's coming up, as well as Tim Adams of the IIF, Andrew Hollenhorst of Citi with his still more bearish view on the economy, and Christina Campmany of Invesco. From New York, this is Bloomberg Surveillance.
DraftKings hit a milestone in the second quarter of 2024. For the first time as a public company, it turned a profit. Is this a new era for DraftKings?
There's an inflection from when you're cash flow negative and you're operating off of equity raises from the past to when you're self-funded and you're cash flow positive and able to control your destiny a lot more.
You've had your first quarters of profitability now. Does that take pressure off? Does it increase pressure?
I think it increases pressure. I mean, once you start making profits, people expect you to make more, and all of a sudden you're valued on a multiple of those profits as opposed to the theoretical what could be. So very important, I think.
When you're cash flow negative, you've sold a vision of what the company should be working on, and you're very focused on working on that and delivering against that. When you've pivoted to profitability, the world of what you can work on is a little bit open, and there's a lot of different ideas, and it requires more focus than ever to make sure that you are prioritizing on the most important things that are going to deliver the most value.
DraftKings' solid standing in a booming sector gives them the luxury to play the long game. They're not under pressure to cut costs.
When you have really strong revenue growth, you don't need that. If you look at where we are today and where we want to be and where we believe we will be, the vast majority of the incremental EBITDA is not coming from any cost reduction. It's coming from increased revenue.
We don't feel like we need to cut costs because we're growing our revenue so much. We want to grow our revenue into our existing cost structure. And there's no need to reduce the cost as long as we're being efficient with what we allow our cost growth to look like.
Top names at the Fed are on Bloomberg.
You know, the economy's in a very good place right now. Inflation's coming back down to target. The labor markets are healthy. We're seeing solid growth. I think we're well positioned. I certainly wouldn't take another ease in December off the table. But again, we're not on a preset path. And so we'll have to look carefully at the data and see what makes sense when we get to December 18th.
Nobody covers the Fed like Bloomberg.
We should talk about how we really can imagine how we use this technology. You know, I talk to doctors, I talk to, biochemists, I talk to teachers, I talk to artists, I talk to, farmers. There's so many ways we can imagine using this. There's so many ways we can use this to make people's life better, work better. I don't think we talk enough. We are talking about gloom and doom, and it's also just a few people talking about gloom and doom, and then, the media is amplifying that. I don't know what you're talking about. Yeah. I don't think we give enough voices to people who are actually out there in the most imaginary way, creative way of trying to bring good to the world using AI.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
Shorting a stock purely because you think it's expensive is a death wish.
These are companies that are growing their market.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest. Weekdays at 9 a.m. Eastern, only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday at 12 p.m. Eastern right here on Bloomberg. Context changes everything.
न्यूयॉर्क सेशन ऑलरेडी ओपन है. न्यूयॉर्क सेशन हो गया है ओपन. 6:30 इज देयर. आई होप क्रूड ऑयल में भी थोड़ा वॉल्यूम आ जाए, अपने रेजिस्टेंस एरिया तक एग्जैक्टली पहुंच जाए क्रूड ऑयल एज वेल, इस छोटे रेजिस्टेंस को ब्रेक करके. बाकी नेचुरल गैस भी फंसा हुआ है अभी भी अपने सपोर्ट और रेजिस्टेंस के बीच में. It is between the support and resistance right now. Let's hope किसी एक साइड निकल जाए, किसी एक साइड के ब्रेकआउट या ब्रेक डाउन कर दे तो फिर रेंज थोड़ा सा बड़ी हो जाएगी. नहीं तो ये 4 to 5 पॉइंट की रेंज है शायद. आई थिंक फ्यूचर में इसी बीच में मार्केट रहेगा. ऊपर रेजिस्टेंस, नीचे सपोर्ट. मार्केट को अगर निकलना है किसी डायरेक्शन पे तो रेंज के एक साइड निकलना जरूरी है प्रॉपरली. नीचे आएगा तो फिर नीचे हमारे पास वही आपके पास एक रीटेस्ट जोन है डे लो का. एक रेजिस्टेंस था, सीधा गैप अप हुआ था, ब्रेकआउट इन द सेंस ऑफ, तो रीटेस्ट की तरह काम करेगा ये लेवल 265 266 अप्रॉक्सीमेटली. थोड़ी बहुत वॉलेटिलिटी हो सकती है करंट कैंडल पे, ध्यान रखना.
News when you wanted with Bloomberg News Now. I'm Nathan Hager. We may have a new sign of tension between the U.S. and China in the tech space. China Central Television is reporting Beijing has opened a probe into NVIDIA on suspicion the AI chip giant broke the country's anti-monopoly laws. Bloomberg's Kriti Gupta has more.
The context here is crucial as well. That Washington had already stopped the company from selling their most advanced semiconductors to Chinese companies. So when it comes to that AI kind of development in that part of the world, that is where it's hitting a little bit of a hitch. NVIDIA as well had tried to create separate chips that would specifically address those concerns.
Bloomberg's Kriti Gupta. The news has NVIDIA shares down nearly 2% in early trading. It comes after the first monetary policy shift from China in more than a decade. Bloomberg's Enda Curran has more on that from Washington.
They're talking about they now want moderately loose monetary policy. That's the shift, putting monetary policy back to where it was during the global financial crisis. There's language in there around wanting to spend more. There's language in there around extraordinary counter-cyclical measures. That's jargon for, willing to pull whatever levers they can to get things going.
Bloomberg's Enda Curran in Washington, and Chinese Premier Li Qiang is pledging that Beijing will do everything possible to boost domestic demand in an effort to support the country's economic growth. We have breaking news in the deal space. Omnicom is buying Interpublic Group in a stock-for-stock transaction that will create the world's biggest advertising firm. In the pre-market, Interpublic shares are higher by nearly 15%. In the Middle East, celebratory gunfire in the Syrian capital Damascus, where opposition groups toppled President Bashar al-Assad's government after nearly 14 years of civil war, sending the dictator fleeing to Moscow. Defense Secretary Lloyd Austin.
The speed at which that unfolded was surprising, I think, to most everybody in the international community.
Defense Secretary Austin spoke from Tokyo. We get more on what comes next from Bloomberg's Rosalind Matheson.
We do have the rebel group known as HTS, which led the charge here. Their leader, Mohammed al-Jalani, does he try and form a government? Does he try and bring these other rebel groups in the country together? Of course, that's a splinter group from al-Qaeda, but there are a lot of other players in the country. And how do you go from military operations to being political players? They don't really have experience in politics. How do you form a government? How do you run government ministries? How workable is that? So there's a lot of questions around that.
Bloomberg's Roz Matheson. In the meantime, Israel's carried out strikes on chemical weapons and missile sites in Syria, and the U.S. hit dozens of Islamic State targets. President Biden says he won't let ISIS take advantage of any power vacuum. President-elect Donald Trump weighed in on Russia, Ukraine, and NATO in a wide-ranging interview with NBC's Meet the Press. Moderator Kristen Welker asked if he could guarantee the U.S. would stay in the transatlantic alliance.
If they're paying their bills, and if I think they're treating us fairly, the answer is absolutely, I'd stay with NATO.
But if not, you would consider the possibility of
absolutely, absolutely.
And Bloomberg's Laura Davison reports Trump reiterated a lot of themes from his campaign.
He was going to impose tariffs. He was pressed on that and said, "Look, I can't guarantee that prices won't go up for families." He kind of talked around this a lot, but sort of acknowledged that might be a possibility.
Bloomberg's Laura Davison says Trump also pledged to end birthright citizenship, even though the Constitution guarantees it. He said he would work to pardon the January 6 rioters on day one, saying members of the House January 6 committee should be in jail. And Trump said he does not see himself firing Jay Powell as Fed chair. Meet the Press airs every Sunday on Bloomberg Radio. There is a new record-breaking deal in Major League Baseball. Juan Soto is staying in New York, just with the other team. Bloomberg's John Stashower reports.
This is what Mets fans were hoping for when Steve Cohen bought the team, that no one would outspend him. Soto's deal with the Mets is for 15 years. That takes him to age 41. It's worth $765 million, so he'll make $51 million a year. And if he doesn't opt out in 5 years, that salary grows to $55 million. Unlike Shohei Ohtani's deal last year with the Dodgers, none of the salary is deferred. The Yankees, in their attempt to keep Soto, apparently finished a close second. Their offer reportedly worth $760 million. John Stashower, Bloomberg Sports.
John, thanks. It brings Steve Cohen's Mets payroll spending to $1.6 billion. Right now, S&P futures are little changed. So are Dow futures. NASDAQ futures down 0.2%. 10-year Treasury yield 4.16%. That's news when you want it with Bloomberg News Now. I'm Nathan Hager, and this is Bloomberg.
for a new chief executive at Stellantis is well underway, according to the car maker, after Carlos Tavares abruptly resigned over the weekend. As for the next CEO, our guest says the path ahead is actually easy. Joining us to discuss, we've got David Underkoffler, Autolist Editor-in-Chief. David, what does the next CEO have to do here?
Yeah, like I said, it could be potentially very easy. You need to make 3 phone calls right away. You need to apologize to the UAW. You need to call and apologize to your suppliers, and you need to call and apologize to your dealers. Tavares in 2024 managed to alienate all 3 of those groups to a large degree. I mean, these groups are very angry with him and with the company and with Stellantis' performance. And that was because of how Tavares this year sort of reacted to a post-pandemic auto market, right? There were fat and happy days during the pandemic for all automakers, including Stellantis. They had double-digit profit margins. And the problem was that Stellantis and Tavares conflated what was happening then with what was going to happen through the rest of the decade. So when those market conditions started changing this year, when money got more expensive, inflation's higher, sales started falling, in order to protect these really high margins that Tavares had promised, he sort of went after all 3 of those groups, and it really got messy and got him ultimately pushed out of the job.
So what needs to happen then at this point to stabilize the U.S. operations? And I guess when you think about the new CEO, what do you think that search process is going to look like?
Yeah, so to stabilize things, I think, first you have to tell investors, look, double-digit profit margins are not going to happen right now, especially in this era of electrification. That was a pandemic era phenomenon. Now the inventory levels have stabilized, and you're seeing dealers are really clamoring for more incentives, right? There's a huge stockpile of Stellantis vehicles sitting on dealer lots. You've got to sit down with dealers and work out how are you going to get those sold so everybody remains happy. But I think everyone just needs to sort of reevaluate their expectations in terms of profit margins moving forward.
And what do you think will be the bigger drag on profit margins for some of these car makers? The impact of a policy like tariffs or the rolling back of something like EV tax credits?
Ooh, that's a really good question. I think as it relates to Stellantis, look, they don't really have many EVs right now. So they're kind of behind the ball in terms of relative to other automakers. So potentially, if there's a hit to EV tax credits, you can't affect what Stellantis isn't offering right now. In terms of tariffs, that could be a big one. Stellantis has a lot of manufacturing footprint in Mexico, particularly some in Canada. So all automakers are certainly watching this. But I think it would be tariffs over changing the EV tax credit specifically to Stellantis that they're looking out for.
What about Ford and GM, though, just given their exposure to EVs, especially GM? I guess how big of a headwind do you see the rolling back of the EV tax credits to them and their ability to compete with Tesla?
Yeah, it's not going to make things any easier. I think one key difference between Ford and General Motors is that General Motors has said by the end of this year, its EVs, by a specific metric, will be profitable. And that's sort of a pretty big milestone. They're only the second automaker to hit that milestone behind Tesla. Ford is lagging behind, but I don't think that's specific to Ford. All other automakers right now are really struggling with massive costs, R&D costs, in the sort of the pivot to electrification. The last thing any of them need is more headwinds in terms of tariffs or reducing these tax credits. I do think they're probably taking a long view, right? This potentially is, the Trump administration sort of for whatever they do. There will be a lot of battles in the next 4 years. California and Gavin Newsom have made it clear that they're not going to let any of these tax credits go without a fight. And then, potentially it's only 4 years. And I know that that's not a short period of time, but these automakers are likely looking global in terms of how they are orienting, how they're spending their money in R&D. And globally, there is still, the winds of EV are growing and that momentum is growing. And they're probably looking at, okay, let's get through these 4 years and potentially there are more changes back into the pro-EV direction after this Trump administration.
David, ending a bit closer to where we started on CEO shakeups, how likely do you think it is that we could see a push for a new CEO at Ford?
I don't think, if I'm Jim Farley, I don't think that Tavares being pushed out, it causes me to lose sleep. I mean, this was a Stellantis problem, and it was a Stellantis problem that Tavares himself and his C-suite created for themselves. Farley, certainly, like I said, Ford's Blue division is facing steep losses with its EVs, but soar. I mean, that's sort of par for the course. I know, going back to GM, that probably has the sting to see your crosstown rival start to make, say they're going to be profitable with EVs. But GM is the exception, not the rule. Ford and all of their automakers are spending huge amounts of money for EVs. So I don't think that puts Farley in the hot seat any more than any other CEO right now. As your previous guest was talking about, this is a really tricky pivot for the head of any of these automakers to sort of navigate through these very expensive EV investments, and move forward with that.
Yeah, tough time to be a CEO, I guess, David. Thank you so much for joining us. I appreciate it.
Thank you so much.
Let's zero in on commercial real estate. So far this year, real estate up just 12%, far underperforming the S&P 500. There's a new report out from PwC breaking down the top 5 emerging trends in the commercial real estate sector.
Chief executive at Stellantis is well underway, according to the car maker, after Carlos Tavares abruptly resigned over the weekend. As for the next CEO, our guest says the path ahead is actually easy. Joining us to discuss, we've got David Underkoffler, Autolist editor-in-chief. David, what does the next CEO have to do here?
Around option trading, good morning. Sorry, good evening. Good morning पढ़ लिया, good evening. गोल्ड सिल्वर के लेवल होता है तो गोल्ड सिल्वर को देख लेते हैं। गोल्ड में देखोगे मार्केट रेजिस्टेंस पे ये शायद आई थिंक ओके एफईजी पर है, सॉरी। देखो फिलहाल के लिए तो साइडवेज है, कोई न्यूज़ वगैरह है नहीं। यहाँ पर एक छोटा सा एफईजी है जहाँ पर रुक रहा है प्राइस। ऊपर एक रेजिस्टेंस है 2680 से 90 के बीच में एक मेजर रेजिस्टेंस है। राइट नाउ इट इज ऑन देयर एफईजी, ब्रेक हुआ तो वहां तक जाएगा। नीचे प्राइस के पास 2620 2625 के अराउंड एक छोटा सा सपोर्ट है। व्हाट अबाउट द सिल्वर? सिल्वर आई थिंक रेजिस्टेंस पे था क्या, ब्रेक कर दिया इसने? सिल्वर देखो अपने रेजिस्टेंस को ब्रेक कर चुका है। एक और रेजिस्टेंस है ऊपर, यहाँ पर दो चीज़ प्लान कर सकते हैं, या तो ये ऑलरेडी अगर बाइंग में हो तो ट्रेल करो। ऊपर 32.18 से 32.28 के बीच में एक रेजिस्टेंस जोन है, वहां से वापस सेलिंग का प्लान रख सकते हो। दैट इज अ रेजिस्टेंस जोन। बाकी अगर यहाँ पर अगर रीटेस्ट पे बाई करना चाहते हो तो एक रीटेस्ट पे बाइंग का प्लान रख सकते हो लाइक दिस। ऑलरेडी बाइंग में हो तो ट्रेल करो। फिलहाल के लिए व्यू तो बुलिश ही है, रेजिस्टेंस ब्रेक हो चुका है इसका मल्टीपल टाइम का। कोई न्यूज़ नहीं है, ध्यान रखना। और ना ही कोई डेटा है, सो देयर इज नो डेटा शेड्यूल फॉर टुडे।
On Capitol Hill today, the new Department of Government Efficiency, Anthony. I'm just curious to get your take on that, what you make of it. Do you think it's a worthwhile effort?
Listen, I've been around too long. I hate to be this cynical, but these things have never worked. I'm old enough to remember the Grace Commission under Ronald Reagan. They presented all these cost-cutting measures to the government. None of them went into place. I'm old enough to remember Simpson Bowles. That happened during the Obama administration. Those guys put together a very comprehensive bipartisan plan. They submitted it to Paul Ryan and President Obama. It ended up in a paper shredder. The Musk Ramaswamy situation, these are very smart, capable entrepreneurs. Elon Musk is arguably one of the most successful people in human history. And so I don't want to bet against these guys, but I know how Washington works, and I know how slow it is in the process of cutting things, and I know how many legal protections are in place for things like entitlements. You know, somebody suggested, I think this morning, that they were going to cut $119 billion of veterans' medical benefits. I think there would be a huge political uproar on that. I don't even know if it's necessarily legal. So could they get some things done on the margin? I'm hoping that they can do that. Can they cut $2 trillion from the federal budget? I don't think that they can do that, and I think we have to be realistic about it.
Anthony, we know that you campaigned against now President-elect Trump, right? What do you think is the biggest potential upside, particularly for investors, from his presidency, and what are you most worried about at this point?
Well, I did campaign against him. You know, I worked for him. I have an understanding of how he thinks, and I'm worried about the lack of predictability, and I'm worried about the process. As an example, he has not signed the ethics agreement yet for the transition. He hasn't received the federal money for the transition, and there's things like that that go on. You know, the fact that he's meeting with all these foreign leaders right now, I find astonishing, because way back in 2016. I was present when President-elect Trump met Shinzo Abe, then the Prime Minister of Japan, and President Obama called him and said, you know, this is sort of a Hatch Act violation. Could you not do this? And President Trump was compliant with that. But now I think he's met with at least 3 or 4 different leaders. And I think this sort of stress on the system and the stress on the traditions have me worried. He's got a guy named Kash Patel that's up for FBI director. He said he's going to come after people in the media. He just filed a personal lawsuit against Olivia Troy for, I guess, her First Amendment right to criticize him. And I think there's a danger in that. And I think if Kash Patel ends up as the FBI director and he actually goes out and starts prosecuting journalists for their free right to speak and their freedom of expression, I think it's a very dangerous time, and I think it puts a lot of stress on the economy and a lot of stress on the system. So there are things that they're willing to do that I think don't work in the United States, which is why, yes, I did campaign against.
Anthony, when you worked in the White House, were there certain things that you had to divest when you took that position? And do you think that that's going to happen with this incoming White House? Are they, you know, are there going to be conflicts of interest in terms of the assets that are held?
Well, I was in the process of following those rules and divesting, but of course I got fired, so it became moot. I didn't have to divest, but I was actively in the process of going over what the ethics rules were with my attorneys and making sure that I was legally and ethically compliant. There were other people in the cabinet, other people in the White House that just ignored those rules. I don't even think they were punished for that, and I don't think there was a lot of retribution towards them for doing that. And again, we got to be very, very careful about this stuff. You don't want to overly mix the government with business. You don't want to turn the United States into the American oligarchy. And so, again, we have to be careful with these things. And if you're telling me people are going to enter the government and not follow the ethics rules or what the potential conflicts of interest are, I'm going to tell you there's going to be decisions made that are not dispassionate decisions. They're going to be linked to people's business interests. And that's not really fair to the American people. That's not what I think the American people would like to see in their public servants.
Anthony, always great to see you and have you on the show. Thank you so much for joining us.
Good to be here.
Appreciate it.
You have to teach me how to grow a beard, Josh. I got to learn.
Next time.
I got to learn. Okay?
It's easy, Anthony.
Yeah. I need tips. I need tips.
Thank you, sir.
It's a big noisy universe of stocks out there. Welcome to Goodbye or Goodbye. Our goal to help cut through that noise to navigate the best moves for your portfolio. Today we're diving into the semiconductor space. I'm here with MDB Capital Holdings President and Chief Market Strategist Lou Bassanese. It's good to see you, Lou.
Good to be back.
Thanks for being here. So Maycom Technology Solutions is the stock that you like today. Not quite as well known, but the stock has done well over the past year. It's actually trading at a record high, if I'm not mistaken, today, following some recent earnings. So let's talk about why you like it here. You're basically looking at the numbers.
Yeah,
I think they look good.
In this market, the momentum is a powerful thing. The trend is your friend. This is a 70-year-old chip company that most people have probably never heard of, but they make 8,000 different products, and they've had strong sales growth, up about 34% in the last quarter, and earnings were up about 30%. So it's one of those things, the stock's on the move, the momentum's intact. I think it continues.
And let's talk about where they fit into that chip universe, right? They're not making the buzziest chips.
No.
But they're making important chips.
Boring businesses and critical businesses make a lot of money, right? So they make the critical chips that handle the transmission of data, whether that's radio frequency or through light spectrum, microwave. Again, they have a big IP portfolio covering their products, over 8,000 of them. There's about 1,000 patents in the U.S. and 1,000 patents and grants foreign that allows them to operate and really have a protected niche that they're earning really strong margins on.
Gotcha. And then there's also maybe kind of a policy or Washington, D.C. tailwind here. For
Right. Always with the momentum, we want to make sure that there's another boost along the way. So AI, everyone's talking about processing chips. What they make is actually the data center chips that connect and move that data around after it's processed. So a strong demand in the last quarter of the call. And then defense spending, whether it gets pared back and reallocated, is going to really benefit this company because they have about 55% of their revenues generated from defense and infrastructure. So
gotcha.
you get a big boost from that as well with this administration.
As you know, we always like to talk about what could go wrong. And, we could potentially see ratcheting up of trade tensions, tariffs, export controls, et cetera.
Yeah, it won't be on tweets. It'll be True Social. That would probably start another trade war. But look, I think it's a lot of just walking around with a big stick. There's probably not going to be a lot of big tariffs. But if they do get passed, there is significant exposure here to China and Asia for MACOM. So that is naturally a risk that would undermine the momentum.
Yeah, I mean, and with the stock having gone up so much, the PE ratio, I was looking at, I think forward P is around 41.
Yeah, forward. So again,
steep.
It is steep. We look at the NVIDIAs of the world, the Apples, and the Mag 7 are getting into the 30s, mid 30s. I think, again, it's all about earnings growth, right? I mean, your previous guest was talking about we've got to keep that earnings momentum and growth happening to keep the multiples in line. So I think that's absolutely the case here as well.
And then the next one, I feel a little like you're kicking a man when he's down, but it's Intel is the one you don't like here. Obviously, we know the stock has pulled back a lot. Pat Gelsinger just announcing his retirement from the company. Now, if you knew nothing about this company at all, if you didn't know what it was, and you looked at the chart, you might think, maybe it's getting to a bottom?
No, I'd think a penny stock that's going to bankruptcy.
Okay,
so,
wow, all right. So we just don't know what's going to happen with Intel.
It is. Turnarounds always take time, and especially when you have to bring in a second turnaround leader. It's not something where I think you want to put your capital when you have other opportunities out there that have a much more clear-cut path to get to that turnaround. So, yeah, it can be attractive and compelling, but when's the last time you really heard anything buzzy about Intel inside? It's just not. It's one of those legacy brands that everyone knows, household names, that aren't household investments anymore. I mean, I think of like Motorola, BlackBerry, Nokia, it's smartphones, but now over to the chips.
Well, unless you get memed like a BlackBerry did at one point.
Right.
And, and that's kind of your point as well, lack of leadership and innovation.
Yeah.
Perhaps coming
what concerns me here is it cultural or is it just someone at the top that's not leading well? Because they did miss out on an investment in OpenAI, which we know has become the leading edge of the market and the growth in AI. So why did they miss that? Those are questions. There's too many questions, not enough answers for me as an investor to think about putting capital here.
Right. And then there's also what's going to happen now in terms of the numbers and what's going to happen with the foundry business. I mean, we've talked to a lot of analysts who have said they don't necessarily think that Pat Gelsinger was not a good leader, but they think that the foray into making chips for other people is not where Intel should have gone.
Yeah, I disagree with that. I think they actually need to because that's the most clear-cut way for them to add value. Stop trying to be vertically integrated and make your own chips and innovate. You've proven you can't innovate, so why not separate out something where we desperately need more manufacturing chip capacity in the U.S.? So I think that's the other question here. There's low expectations. I've been around enough companies and CEOs and changes in leadership. Resignation is looks like more being forced out.
Right.
And in those situations, the board's going to want to flush everything, all the bad news down the toilet at once. So you get earnings coming. I'm going to assume that they're going to be worse than people are expecting.
Right. We'll see when they report next in January. What could go right? Well, we could get that flushing, and then maybe they talk about some big moves.
Yeah, the terms of the CHIPS Act make this a little bit more complicated because Intel's got to maintain at least, I think, 31 to 50% ownership. But again, spinning out a foundry business that we know is immensely valuable. You look at the TSMCs of the world. We know that business sells and delivers profits. Can Intel do that? Again, I think that's an execution question and maybe some regulatory question. But that would be very interesting in my mind.
And any position in Intel?
No positions in Intel.
Or in MACOM?
In MACOM, no. It's one that I've been looking at, and but regrettably haven't pulled the trigger on MACOM. But now it's after the last earnings report, something that's on the radar.
Gotcha.
So.
All right. Well, we'll be watching both of these in the chip space. Thanks so much, Lou.
Thank
Good
you.
to see you. And thank you so much for watching Goodbye or Goodbye. We'll be bringing you new episodes at 3:30 p.m. Eastern.
Stocks here are set to close out a strong 2024, but one deregulation, but it's really tariffs that I think are front and center right now for investors. And I'm curious, Jeff, as a market strategist, how are you thinking through that dynamic?
Well, they certainly do pose a risk to growth next year, but I think the bark is probably worse than the bite. If you take a look at every single tariff threat that President Trump has thrown out there, and we have tallied them up, you end up with a 26% import tariff on imports into the U.S. That's up from the 2.6% rate it is now. That's massive. It actually exceeds the Smoot-Hawley tariffs that preceded the Great Depression. But we think, again, the bark is worse than the bite. Maybe a 10% tariff as opposed to going all the way up to 26. And the IMF looked at that scenario in their latest World Economic Outlook. What would be an across-the-board 10% tariff and the impact on economic growth? Globally, just 0.1% less. So I think that's something we can absorb and still see better economic growth outside the U.S.
You're not the only one everybody seems so confident that the full tariffs will not be put into place. Why is everyone so confident that that's the case? Is it because, there was some level of tariffs obviously put in during the first administration, but why does everybody seem to be drawing that conclusion?
I think there's three reasons. One, there were trade deals in the first administration as well. So while tariffs went into place, we had a phase one trade deal with China. We had the USMCA agreement with Canada and Mexico. We even had a free trade agreement with Japan and South Korea negotiated during the first Trump administration. Second, I think he's using tariffs not as economic policy, but as statecraft. Notably, what was announced last week with regard to Mexico, really trying to get the border shored up, less about actual tariffs. So I think it's a tool for statecraft rather than the policy itself. And then finally, I look to other examples around the world. We've seen so many incumbent governments tossed out with right-leaning governments, more antagonistic toward trade. And a great example is what just happened in Europe and their imposition of a 45% tariff on Chinese electric vehicles. That was, we are in the process of unwinding that right now. It just went in place on October 28th, I believe, or the end. Yeah, not long ago. It won't last very long, I don't think. We're very close to seeing negotiators work out a way around that in favor of quotas or price limits. So I think there's a number of examples where we could see where we're probably not going to see the worst case scenario.
Well, one other reason, Jeff, too, is we did have analysts come on, and here was their case. They thought that ultimately the policy will be more moderate, more orthodox in the rhetoric. And their reasoning was just because Trump's, for his own self-interest, for his own success, he's going to want to maintain some basic level of market and economic stability, particularly for a president who we know likes to use the stock market as his kind of record of how he's doing.
Bingo. Yeah, he's absolutely very much in tune to the stock market, more so than the average president. And the markets are very quick with their feedback around what's going on. You've seen that today with political travails in South Korea or in France as well, right, this week. There's a lot going on, and the market's giving a lot of feedback to policymakers.
So if you don't think tariffs are going to be that worst case scenario and be a risk for markets, what is then the biggest risk to markets then? Or what are some others that you're watching that could unfold a little bit more dangerously for the market?
Well, there's a few things. One thing, the market is really counting on rate cuts, not just from the Fed, but other central banks. The ECB priced in 6 rate cuts over the course of the next year. Yet inflation in the latest readings, almost everywhere you look, went up. And there are some signs that maybe inflation's maybe gone down as far as it's going to go. We might see a bounce here. So the risk that those cuts don't materialize with valuations in some ways predicated on that increase in liquidity, that's a risk. Geopolitics are a risk, evidenced by what's going on this week. And then finally, related to the Trump administration, deportations are a risk to labor costs in the U.S., but also to Mexico. Mexico gets 3.6% of its GDP from remittances from Mexican nationals in the U.S., sending it back to Mexico. So there's a number of different issues we need to keep a close eye on.
upgraded internet, and then let people decide which internet would they prefer. One where they're surveilled and their data is scraped and they get a few free apps, or one where they're in charge. When it comes to the algorithms, right now in the current internet, the algorithms are centralized and they're very powerful in the hands of a few. We live in a world where you can curate your own algorithm. You can have, Blue Sky's doing it, they have all kinds of algorithms that you can choose. You can curate your own feed. The internet is awesome. The technology is awesome. I'm a big bull on the internet and technology, just not the way it's designed and being used.
Frank, hang with us. We're going to go off for a quick break. We'll be right back on Opening Bid.
Oh yeah, you're not going to forget to cancel those free trials this
Stocks here are set to close out a strong 2024, but one strategist points to a few hurdles markets will have to clear to have the same success in the new year. For more, let's now welcome in Jeffrey Kleintop, Charles Schwab, Chief Global Investment Strategist. Jeff, always good to see you and have you on the show. I want to talk about the incoming Trump administration, Jeff. And, I think investors are trying to sort through that, taxes, deregulation, but it's really tariffs that I think are front and center right now for investors. And I'm curious, Jeff, as a market strategist, how are you thinking through that dynamic?
Well, they certainly do pose a risk to growth next year, but I think the bark is probably worse than the bite. If you take a look at every single tariff threat that President Trump has thrown out there, and we have tallied them up, you end up with a 26% import tariff on imports into the U.S. That's up from the 2.6% rate it is now. That's massive. Actually, exceeds the Smoot-Hawley tariffs that preceded the Great Depression. But we think, again, the bark is worse than the bite. Maybe a 10% tariff as opposed to going all the way up to 26. And the IMF looked at that scenario in their latest World Economic Outlook. What would be an across-the-board 10% tariff and the impact on economic growth? Globally, just 0.1% less. So I think that's something we can absorb and still see better economic growth outside the U.S.
You're not the only one who, everybody seems so confident that the full tariffs will not be put into place. Why is everyone so confident that that's the case? Is it because, there was some level of tariffs obviously put in during the first administration, but why does everybody seem to be drawing that conclusion?
I think there's three reasons. One, there were trade deals in the first administration as well. So while tariffs went into place, we had a phase one trade deal with China. We had the USMCA agreement with Canada and Mexico. We even had a free trade agreement with Japan and South Korea negotiated during the first Trump administration. Second, I think he's using tariffs not as economic policy, but as statecraft. Notably, what was announced last week with regard to Mexico, really trying to get the border shored up, less about actual tariffs. So I think it's a tool for statecraft rather than the policy itself. And then finally, I look to other examples around the world. We've seen so many incumbent governments tossed out with right-leaning governments, more antagonistic toward trade. And a great example is what just happened in Europe and their imposition of a 45% tariff on Chinese electric vehicles. That was, we are in the process of unwinding that right now. It just went in place on October 28th, I believe, or the end. Yeah, not long ago. It won't last very long, I don't think. We're very close to seeing negotiators work out a way around that in favor of quotas or price limits. So I think there's a number of examples where we could see where we're probably not going to see the worst case scenario.
Well, one other reason, Jeff, too, is we did have analysts coming on, and here was their case. They thought that ultimately the policy will be more moderate, more orthodox in the rhetoric. And their reasoning was just because Trump's, for his own self-interest, for his own success, he's going to want to maintain some basic level of market and economic stability, particularly for a president who we know likes to use the stock market as his kind of record of how he's doing.
Bingo. Yeah, he's absolutely very much in tune to the stock market, more so than the average president. And the markets are very quick with their feedback around what's going on. I mean, you've seen that today with political travails in South Korea or in France as well, right, this week. There's a lot going on, and the market's giving a lot of feedback to policymakers.
So if you don't think tariffs are going to be that worst case scenario and be a risk for markets, what is then the biggest risk to markets then? Or what are some others that you're watching that could unfold a little bit more dangerously for the market?
Well, there's a few things. One thing, the market is really counting on rate cuts, not just from the Fed, but other central banks. The ECB priced in 6 rate cuts over the course of the next year. Yet inflation in the latest readings, almost everywhere you look, went up. And there are some signs that maybe inflation's maybe gone down as far as it's going to go. We might see a bounce here. So the risk that those cuts don't materialize with valuations in some ways predicated on that increase in liquidity, that's a risk. Geopolitics are a risk, evidenced by what's going on this week. And then finally, related to the Trump administration, deportations are a risk to labor costs in the U.S., but also to Mexico. Mexico gets 3.6% of its GDP from remittances from Mexican nationals in the U.S., sending it back to Mexico. So there's a number of different issues we need to keep a close eye on.
Is content to affect the way American citizens think about certain issues, and what those issues may be, what's going on in the Middle East, or what happened historically in Hong Kong or Tiananmen, what's happening with the Uyghurs, et cetera, et cetera. And people now realize pro-China content is amplified massively, and content that is anti-America, anti-democracy, anti-free society is also amped up. So you don't get a level playing field with TikTok. Hey, look, the people's bid for TikTok, it shows up on the comparable platform on Instagram and YouTube 125 times more than it does on TikTok itself. Okay, so there's somebody controlling an algorithm.
So as it stands, this TikTok could be banned January 19th. President-elect Trump gets inaugurated the 20th. Have you talked to anyone in his sphere of influence about how he might lean?
Yeah, we're beginning those conversations. We're reaching out now. It's very important that the Project Liberty and the People's Bid is not a partisan project. This is a project for Americans, and we're in the process of reaching out to President-elect Trump and his people to talk about this, because this is a really big decision. I do want to add that he and President Biden have both saw this as a national security risk. President Trump at the time initiated this whole process. It was President Biden that signed the legislation that a very strong bipartisan vote occurred in Congress. I mean, when's the last time we've had a vast majority of Congress on both sides of the aisle?
Not many.
Exactly right. Why? Clear and present danger to the United States. This is a national security risk, and so here we are, and we're rapidly facing a deadline where this is going to have to be shut down or sold. President-elect Trump has said he doesn't want to see it banned. I want to be clear. We don't want to see it banned either, and there's a deal to be made here. And President Trump is an ultimate deal maker, right? That's what he's a business person like myself, and we should figure out a way to do this where it's a real win-win-win, as I say, and that's I think very, very possible. Our bet is it's going to be sold. We may be wrong. It may be shut down. I hope not, but we're prepared in either event.
Part of being a businessman is knowing the landscape. I mean, there's been rumors, there's big names here also competing against Activision Blizzard former CEO Bobby Kotick, former Treasury Secretary Steve Mnuchin. Are those folks still in the process? Are they involved? Like, what does that landscape of bids look like?
It's unclear. I mean, the word we're getting is that they've backed off a bit on this, and I think the reason is, and again, I could be wrong. And
you do seem the most aggressive.
Yeah, and I think the reason why, Brian, is that we have a clean stack. Okay, so let's talk about what's required to buy this. Number one, you can't be you can't be a candidate for antitrust action. Big tech can't move on this because nobody's going to let big tech buy TikTok. Number two, you need to pass a CFIUS vetting. CFIUS is the one that passed the finding that said it had to be shut down in the first place because it was a national security threat. We pass a CFIUS vetting. Next, you have to have technology that will function without the algorithm. And lastly, you need a clean stack. You can't just, as I said, re-engineer the algorithm and use the current stack, because guess what? China is going to have backdoors into it. You don't solve the problem that way. The last point I would make, let's look at what's happened with big social media platforms. This is not the heyday for social media platforms. This is not the early heady days where the value was increasing and they were growing in user base massively. This is the mature phase of social media platforms on the current version of the internet. There's lots of lawsuits for good reason. There's more coming for good reason. Anybody that buys TikTok is taking on that litigation, that exposure, if they replicate what's there now, because it will operate the same way. And it will surveil people, it will scrape their data, and it will apply algorithms top down. And that creates a lot of problems. And what we're learning is it's not good for democracy. It's not good for civil discourse. It's not good for an information ecosystem, right, where we have lots now of mis and disinformation, just a deluge of it. And most importantly, it's harming kids. And it's clear, the harms are clear. But rather than sit and throw more logs on the fire of all the harms, because I think people are now seeing them more broadly, let's talk about how to fix it. And that's what Project Liberty is focused on. Take this problem of TikTok, turn it into a solution to actually compress time, create an upgraded internet that people can choose or not to use.
To be clear, for those folks listening to this podcast, you haven't been a tech mogul over the 34 years of your career. You've done many different things. Like, why are you so passionate about this?
Well, because when you see a problem, you can't unsee it, and when you happen to have some insight as to how you fix it, you kind of have an obligation to do something about it. That's at least how I was raised. You know, I sat at my dinner table. I'm one of 7 kids, and we were pretty outspoken about problems, as most kids are. Mm. And there wasn't a dinner that went by that my mom didn't say, "Hey, you kids did a great job defining the problem. Now, what are you going to do about it?" So this is a what are you going to do about it type of problem. I've been building infrastructure for almost 50 years. My family for over 130 years. This is an infrastructure issue. This is an engineering problem where we have an internet that we're using now broadly. Billions of people are connected to it, that was never designed to operate and be used the way it's using. I've talked to the visionaries that created the internet. I've talked to the visionary who created the World Wide Web, Tim Berners-Lee. These people did not intend the internet to be used the way it's being used. What they created, what they envisioned, was something that was very decentralized, that really connected us all, allowed us to share information, to all get smarter, and to advance civilization. What's happened is we're all getting dumber, right? Because there's no identity on the internet.
You can't process all this information.
Particularly in how do you know what's true and what's false? You can't. It's like going into the bookstore and having your 10-year-old go in, and fiction and nonfiction are all mashed up. And it's up to your 10-year-old to figure out what's fiction and nonfiction when they read the book. We curate information as a society. That's what we do. That's what knowledge is about. It's getting smarter. And right now we have an internet that's allowed bad actors to actually amplify bad behavior, as opposed to amplifying behavior of good people and so forth. So let's fix it. It's fixable. That's the fundamental point. This is not the biggest problem in the world to solve. This can be fixed when you redesign the stack from the bottom up. The internet will work the same way. The user experience will be very similar, but individuals will be in charge as opposed to black box algorithms. That's what needs to change.
In the last minute of our podcast, we always like to get our hot takes, a hot take from one of our guests. They used to own the Los Angeles Dodgers. What do you think about that Juan Soto contract? I mean, from the outside looking in, I mean, I'm sure you're still a sports fan, avid sports watcher, but holy cow, what, $50 million plus a year? No deferred money? Does that make sense from a business standpoint?
Well, the great thing about being the former owner of the Los
You can
Angeles
say whatever you want.
Dodgers, or I can say nothing at all. Okay. Let me just say it's a hell of a lot of money, and I just think that when I got involved in baseball back in 2004, it was coming off days where the economics were pretty wacky, and then Commissioner Selig was very, very focused on getting things back in more of a balanced way, so that teams were, the league was healthier, right? And I just hope baseball, just really focuses on the good of the sport and the health of the league generally, because it is, it's got to, you need other teams. You can't play by yourself. You need other teams to play.
Juan Soto could maybe play by himself for $51 million a year. Right?
Maybe not even play. He should be sitting with you and talking about business
yeah,
now.
I actually have to find out on the podcast. I'm going to leave it there. Frank McCourt, Executive Chair of McCourt Global and the founder of Project Liberty. Good to see you. Please do stay in touch. We'll talk to you soon.
All right, Brian. Nice to be with you.
All right, that's the latest.
Sticking with CEO departures, the search for a new chief executive at Stellantis is well underway. According to the car maker, after Carlos Tavares abruptly resigned over the weekend. As for the next CEO, our guest says the path ahead is actually easy. Joining us to discuss, we've got David Underkoffler, Autolist Editor-in-Chief. David, what does the next CEO have to do here?
Yeah, like I said, it could be potentially very easy. You need to make 3 phone calls right away. You need to apologize to the UAW. You need to call and apologize to your suppliers, and you need to call and apologize to your dealers. Tavares in 2024 managed to alienate all 3 of those groups to a large degree.
Oh yeah, you're not gonna forget to cancel those free trials this time, right?
News when you want it with Bloomberg News Now. I'm Nathan Hager. The world is bracing for more turmoil in the Middle East after opposition fighters led by an al-Qaeda splinter group toppled Syrian President Bashar al-Assad over the weekend, sending him to Moscow for asylum. Defense Secretary Lloyd Austin is warning of a potential power vacuum.
There's a potential that elements in the area, such as ISIS, could try to take advantage of this opportunity and regain capability.
Defense Secretary Austin is traveling in Japan. Syrian television is reporting the rebel group that toppled Assad, Hayat Tahrir al-Sham, has tasked political chief Mohammed al-Bashir to form a transitional government. Bloomberg's Ethan Brunner's in Tel Aviv monitoring Israeli airstrikes on Syrian chemical weapon sites and ground troops now in Syria.
This is a buffer zone that was created by Henry Kissinger after the 73 war, where Israel pulled back from parts of the Golan Heights. There became a buffer zone which had UN troops in the middle of it, about 150 square miles. On the Syrian side, Syrian soldiers. On the Israeli side, Israeli soldiers. Those Syrian soldiers left their posts after the Assad regime fell, and Israeli troops and tanks went in and took those positions.
Bloomberg's Ethan Brunner in Tel Aviv. And now with both Iran and Russia showing signs of weakness, Israeli Finance Minister Bezalel Smotrich says says Donald Trump's inauguration next month offers a chance at three things: to overthrow the Iranian government, to prevent a Palestinian state, and to stop Lebanese villages from being rebuilt along the Israeli border. In an interview with Bloomberg News, Smotrich said Israel should join hands with the new Trump administration. It's unclear whether Trump would back a move against Iran. China is making its first move on monetary policy in more than a decade. As Bloomberg's Enda Curran reports, the Politburo is shifting from a prudent to a moderately loose monetary stance and is promising to be more proactive on the fiscal side.
On paper, it signals that China is readying for the potential fallout from the Trump trade war. They're signaling that they do have tools, but let's not forget they're coming from a pretty low base. A PPI in deflation, consumer prices at zero. There are plenty of reasons why China needs to stimulate its own economy without a trade war anyway.
Bloomberg's Enda Curran in Washington. Meantime, China is opening a probe into one of America's most valuable companies. Bloomberg's Kriti Gupta has that.
China is targeting NVIDIA for potential breaches of anti-monopoly laws. Just a probe at the moment, but suspicions around some of those antitrust regulations as well.
Bloomberg's Kriti Gupta notes the Justice Department's already been looking into whether NVIDIA violated U.S. antitrust laws. NVIDIA shares right now are down about 2%. President-elect Trump says he has spoken with Chinese President Xi Jinping in recent days.
I had an agreement with President Xi, who I got along with very well. We've had communication as recently as this week. And I had communication with him where they were going to give the death penalty to anybody sending drugs into the United States.
Trump revealed that in an NBC Meet the Press interview that covered a range of topics, as we hear from Bloomberg's Laura Davison.
He wanted the people who investigated him in the January 6th commission. He said those people should be jailed. He also, the January 6th defendants, he said he would pardon those potentially on day one. There was a really wide-ranging interview. He also said he wanted to end birthright citizenship and talked about, which is in the Constitution, so while he may want to do that day one, that's unlikely to happen.
Bloomberg's Laura Davison says Trump also said he does not see himself firing Fed Chair Jay Powell, though he thinks the chairman would step down if asked. Powell has said he would not. Russia has managed to work around sanctions against U.S. tech purchases in surprisingly simple ways. Bloomberg News has obtained documents showing Russian distributors integrating information from Texas Instruments' online store to their sales platforms. In one case, a major distributor handled more than 4,000 orders for TI products worth about $6 million just this year. Those items went through Hong Kong or other countries before arriving in Russia. In deal news on this Monday morning, Omnicom has agreed to buy Interpublic Group in a deal that will create the world's largest advertising company. Intergroup shares right now are higher by 14%. Macy's is up by 3%. The Wall Street Journal reports activist investor Barrington Capital is pushing for changes, including a separate real estate unit within the company. And there's a new richest deal in sports. Former Yankees slugger Juan Soto signed a 15-year, $765 million deal with the New York Mets. S&P futures little changed, so are Dow futures. NASDAQ futures are down about 0.2%. That's news when you want it with Bloomberg News Now. I'm Nathan Hager, and this is Bloomberg.
Venkat Ramesh, Surya Ji, good evening. Can we sort crude oil with 5840 with SL 5840? That is too high, try to sell on the levels only. लेवल्स के आसपास सेल करो. यहाँ पर सेल कर रहे हो तो मिनी कर दो नीचे. वहाँ पर एफईजी है जिस वजह से थोड़ा बहुत रुक सकता है वहाँ पे. So if you want to sell over here, sell mini better, या क्वांटिटी कम रखना. थोड़ा एग्जैक्ट लेवल पे आएगा तो वहाँ पर कर सकते हो. बाकी नेचुरल गैस भी ब्रेक हो गया है. ब्रेकडाउन रीटेस्ट पे यहाँ पर एक और एंट्री करी जा सकती है. रेंज ब्रेक हो गई है, वेल एंड गुड. ऊपर रेजिस्टेंस था, नीचे सपोर्ट था. रेजिस्टेंस से थोड़ा बहुत सेलिंग आई, सपोर्ट से थोड़ा बहुत बाइंग करी. फिर से ब्रेकडाउन कर रहा है, ब्रेकडाउन रीटेस्ट करता है तो और गिर सकता है. नीचे एक रीटेस्ट लेवल है अराउंड 266-67, वहाँ तक आने की पॉसिबिलिटी वेरी काफ़ी ज़्यादा है. फिर वहाँ पर भी मॉर्निंग पे वैसे रीटेस्ट कर गया है. ये गैप अप हुआ था, यहाँ पर रीटेस्ट ऑलरेडी कर चुका है. सेकेंड टाइम आएगा, फिर से रीटेस्ट करेगा तो फिर से बाई करना, नहीं तो फिर और गिरेगा. सो जो लोग सेलिंग में हैं, ट्रेल इट. किसी को अगर फ्रेश एंट्री करनी है, they can enter after retest के बाद फिर से एंटर कर सकते हैं. कोई अगर बाइंग में गया था तो भैया उसका एसएल जा चुका है, ठीक है. फिर से बाइंग में मत चले जाना. लेट्स सी टारगेट देता है तो अपना फाइनल यहाँ पर एक एंट्री और बनेगी। वैसे ब्रेकडाउन रीटेस्ट पे ध्यान रखना, काफ़ी अच्छा लेवल है। ब्रेकडाउन रीटेस्ट करेगा तो यहाँ से लाइक सेम इस तरह से एक और एंट्री वी कैन एक्सपेक्ट। क्रूड ऑयल को देखोगे तो मार्केट क्रूड ऑयल में बहुत ही स्लो मूव कर रहा है। आज मंडे है, थोड़ा सा कुछ डेटा भी नहीं है, इसलिए मोस्ट प्रॉब्ली यूएस मार्केट भी ओपन होने वाला है, ध्यान रखना। देयर इज अ यूएस मार्केट इज गोइंग टू ओपन इन फ्यू मिनट। हाँ, फिर से कर सकते हो, डे हाई पे आएगा तो वापस सेल कर सकते हो। बाकी इस लेवल को अब कंसिडर मत करना एज अ सपोर्ट। ब्रेक हो रहा है ये, वी कांट कंसिडर दैट। लाइक भी करते रहो गाइस, जिन लोगों ने लाइक नहीं किया है डोंट फॉरगेट टू लाइक द स्ट्रीम। फटाफट से लाइक कर सकते हैं। यूएस मार्केट पे कितना वॉल्यूम आता है। लाइक्स आर डन, 100 लाइक्स का टारगेट रखा हुआ है। डोंट फॉरगेट टू लाइक द स्ट्रीम एंड सब्सक्राइब द चैनल एज वेल। जिन लोगों ने सब्सक्राइब नहीं किया चैनल को, डोंट फॉरगेट टू सब्सक्राइब द चैनल एज वेल। सब्सक्राइब कर सकते हैं चैनल को। होगा देखना, ये रीटेस्ट पे रुकता है नहीं सेकंड टाइम, क्योंकि अगर रीटेस्ट पे नहीं रुका ना, ये अच्छा खासा गिर जाना चाहिए नीचे टिल, फिर तो काफ़ी बड़ा ही गिर जाएगा। ये रीटेस्ट लेवल काफ़ी इंपॉर्टेंट है। इफ retest is not sustained, it is completely bearish in intraday 15 मिनट। अभी तो रेजिस्टेंस से थोड़ी बहुत प्रॉफिट बुकिंग आ रही है। फॉरेक्स में चार्ट में देखोगे तो हाई लेवल से काफ़ी अच्छा गिरा है। जो गैप अप हुआ था सारा का सारा शायद न्यूट्रलाइज हो गया। फॉरेक्स चार्ट में अगर देखोगे ना, काफ़ी बड़ा गैप अप हुआ था एक एमसीएक्स के कंपैरिजन में, ऑलमोस्ट 6%। तो ऑलमोस्ट सारा गेन लूज करने वाला है ये। पीएम यूएस मार्केट गोइंग टू ओपन, थोड़ी वॉलेटिलिटी रहेगी, कोई ओपन पोजीशन रहेगी तो ध्यान रखना। नेचुरल गैस नीचे, ये सपोर्ट नहीं है, वो एक रेजिस्टेंस था, ब्रेक गैप अप हुआ था तो सपोर्ट की तरह इस वजह से काम कर सकता है। एग्जैक्ट सपोर्ट काफी नीचे है तो इसको रीटेस्ट की तरह कंसीडर करना। वॉल्यूम डाउन नहीं, अब तो वॉल्यूम है ठीक ठाक ही है, कुछ ज़्यादा डाउन नहीं है। अपने एवरेज से तो ऊपर ही है, मूविंग एवरेज में जितना वॉल्यूम दिखाता है। मोमेंटम ही नहीं आ रहा है लेकिन उसका मेन रीजन है ना, यहाँ देखोगे अपने एवरेज से ये मूविंग एवरेज से ऊपर ही चल रहा है। प्रॉब्लम इज दैट सिर्फ ये मूविंग एवरेज के ऊपर जाने से कुछ नहीं होगा, कंसिस्टेंसी होनी चाहिए। बीच बीच में देख रहे हो प्राइस अपने मूविंग एवरेज के भी नीचे चल जा रहा है, मतलब नॉर्मली जितना होना चाहिए ना, वॉल्यूम उससे भी डाउन चला जा रहा है बीच बीच में। कभी एक सडनली कैंडल बन रही है, उस पर वॉल्यूम स्पाइक आ रहा है, बट अगेन फिर डाउन चला जा रहा है। बट मुझे लग रहा है शायद अब वॉल्यूम आ जाना चाहिए यूएस मार्केट के बाद क्रूड ऑयल में। एक्सपेक्टेड है वॉल्यूम ठीक ठाक आ जाएगा आफ्टर द यूएस मार्केट ओपनिंग। 15 मिनट और है, लेट्स सी कितना फ्लो करता है। वेब थ्री कैसीनो Betty.com launches crypto games for its growing community. Wow. एक second, इसको trail. व्हाट्सएप पे कॉल कर रहे हैं, प्लीज लाइव में पूछ लो, व्हाट्सएप पे कॉल मत करो। माया जी, नेचुरल गैस का सपोर्ट 260 है क्या? देखो फिलहाल तो अभी पहले 266 के अराउंड, ये 266 265 के अराउंड एक पहले रीटेस्ट वाला सपोर्ट है। अगर ये रुका तो वेल एंड गुड, नहीं रुका तब यस। तक फॉल कर सकता है उस केस में। एमडी सेफोलॉजी सर, आपके लिंक से धन में अकाउंट ओपन किया, कब किया आपने अकाउंट ओपन, आज या फिर पहले किया हुआ है? क्रूड भी थोड़ा बहुत इंट्राडे में बुलिश हुआ तो जरूर है लोअर एंड से, ऊपर अभी भी रेजिस्टेंस है। थोड़ा जियोपॉलिटिकल इशू चल रहा है मिडल ईस्ट में, उसकी वजह से थोड़ी टेंशन है। अदरवाइज लास्ट ट्रेडिंग सेशन में तो सपोर्ट ब्रेक करके ऐसा गिरा था, लग रहा था कि गिरता ही चला जाएगा। हो गई आपकी एमडी जी? कोई प्रॉब्लम तो नहीं आई केवाईसी कंप्लीट में? अकाउंट अभी ऑपरेटिव हुआ नहीं होगा शायद, मुझे लगता है 3 दिन लगते हैं उसमें। 43 लाइक्स आर डन, बाकी लोग क्या कर रहे हैं, लाइक करते रहो। तो ध्यान रखना, नॉर्मली दिसंबर के मंथ में ना थोड़ा वॉल्यूम कम रहता है मार्केट्स में, क्योंकि वीकेंड्स ज़्यादा रहते हैं, हॉलीडेज भी साथ साथ ज़्यादा हो जाते हैं। एफ आई आईज डी आई आईज सभी हॉलीडे पे अगर निकल जाते हैं तो वॉल्यूम थोड़ा सा डाउन हो जाता है। तो उस वजह से या तो मार्केट मोमेंटम बड़ा स्लो हो जाता है या वॉलीटिलिटी बढ़ जाती है, स्पेशली आफ्टर 25 दिसंबर कह सकते हो, टिल 10 जनवरी, 10-15 दिन। प्रोसेसिंग में है अभी, चलो हो जाएगा, कोई प्रॉब्लम आएगी तो बता देना। स्क्रीन पे व्हाट्सअप नंबर दिया हुआ, उस पर कांटेक्ट कर सकते हो उस केस में। 50 लाइक्स हो गए, हाफ सेंचुरी हो गई, 100 लाइक्स देन नेक्स्ट टारगेट है। वो आया नहीं आपके कॉस्ट पे महामाया जी, वो जो आपने कॉल सॉर्ट किया था, थोड़ा बहुत थीटा डी के भी हो गया होगा उसमें। 25 से कितना नीचे गिरा वो? कॉस्ट पे तो नहीं आया होगा शायद अभी। 21 ही आया है तो अभी मार्केट को एटलीस्ट यहाँ तक गिरना पड़ेगा, तब जाके आप अपना कॉस्ट टू कॉस्ट पहुंच पाओगे 260 के अराउंड। उसका रीजन है ना, इसका थीटा, इसका डेल्टा काफ़ी ज़्यादा हाई है, थीटा बहुत कम है। उस वजह से मार्केट गिरेगा भी तो उतना प्रीमियम डाउन नहीं हो रहा है जितना होना चाहिए लॉजिकली। ट्रेल करते रहो। हैज किया है क्या उसको फ्यूचर के साथ या फिर नॉर्मली रखा हुआ है? ये इंपॉर्टेंट लेवल है, काफ़ी ज़्यादा इंपॉर्टेंट रीटेस्ट वाला मान के चलो इसको। ये ब्रेक हुआ तो ये फिर बेरिस है मान के चलो, 15 मिनट टाइम फ्रेम पे कंफर्म हो जाएगा पैटर्न ब्रेकडाउन और रेंज ब्रेकडाउन दोनों ही एक साथ हो जाएंगे इस लेवल के नीचे। हाँ वही 21 के आसपास ही चल रहा है ना, 5 पॉइंट ही डाउन गया है बस। ओके यूएस मार्केट ओपन होने वाला है गाइस, वेट करते हैं यूएस मार्केट का। यूएस मार्केट इज गोइंग टू ओपन इन 13 मिनट, 13 मिनट में यूएस मार्केट ओपन हो जाएगा।
Quickly, the demise of the Assad regime took place. It was only a week ago that we started to talk about these advances.
सिल्वर टारगेट, सिल्वर का तो आई थिंक ब्रेकआउट हो गया था, गोल्ड एफईजी पे रुका हुआ है। एक सेकंड देख लेते हैं, एफईजी ब्रेक किया नहीं है शायद इसने, ये पहुंच गया अपने टारगेट पे। यहाँ पर एक रेजिस्टेंस है सिल्वर में 32.10 से 20 के बीच में। गोल्ड को देख लेते हैं एफईजी के ऊपर निकला या नहीं निकला। निकल गया एफईजी के ऊपर, गोल्ड भी निकल गया। देखो एफईजी के ऊपर इसके पास भी रेजिस्टेंस है 2675 टू 2685 के बीच में। तो सिल्वर और गोल्ड दोनों ही रेजिस्टेंस पे पहुंचने वाले, सिल्वर तो पहुंच ही गया ऑलमोस्ट। यूएस मार्केट भी ओपन होने वाला है, ध्यान रखना कोई डेटा तो नहीं है आज। बाकी इसने एफईजी भी ब्रेक कर दिया है तो इट इज नाउ ऑन अ बुलिश साइड। देखते हैं ऊपर रेजिस्टेंस होल्ड करता है नहीं करता है। थोड़ा सा यूएस मार्केट का ध्यान रखना, करना चाह रहे हो तो ऐसा ना हो ओपन इक्वल टू लो बना के उड़ा दे मार्केट को। इससे बड़ा एसएल मत लेना, लेकिन एक सेकंड, एक वेट कर लो, एक सेकंड रुको, कहाँ गया चार्ट। करना चाहो कर सकते हो, बट थोड़ा सा यूएस मार्केट का ध्यान रखना, वो वॉलेटिलिटी नहीं हुई तो अच्छी सेलिंग आनी चाहिए वापस। बुलिश हो गया मार्केट सिल्वर का। 2.40 के ऊपर 32.32 का ही हो जाए ब्रेकआउट रीटेस्ट 32.3040 के ऊपर अगर ब्रेकआउट रीटेस्ट हो गया तो यस बिल्कुल उसके बाद कोई रेजिस्टेंस नहीं है मान के चलो लास्ट रेजिस्टेंस ही दिख रहा है फिलहाल 15 मिनट में इसके ऊपर और इसके ऊपर फिर रेजिस्टेंस सीधा वही 32.87 के अराउंड है काफ़ी दूर है 80 to 90 इस टाइम भी ये सिर्फ अपने एफईजी पर रुका था जितना दिख रहा है मुझे रेजिस्टेंस पे आया भी नहीं था एग्जैक्टली 32.82 वाला कौन सा एफईजी है ये आता भी है तो नीचे भी सपोर्ट बन गए अब तो रीटेस्ट के अलावा भी देयर इज अ सपोर्ट एरिया इन लोअर एंड अगर नीचे फॉल करता भी है सिल्वर इन 15 मिनट टाइम फ्रेम कोई न्यूज़ वगैरह नहीं आई तो नॉर्मल मोमेंटम में मिनट है यूएस मार्केट ओपनिंग अगर ये नीचे आया भी तो ये यहीं तक गिरेगा जहाँ तक मुझे लग रहा है यहाँ से वापस बाइंग आ जाएगी इसमें 31.812 31.71 सपोर्ट जोन रीटेस्ट तो कर चुका है तो फिर से तो नहीं करेगा ठीक है नीचे बहुत सारे सपोर्ट हैं इसमें नीचे आया भी सिल्वर तो यहाँ आने की जरूरत ही नहीं पड़ेगी उससे पहले ही रुक जाएगा ये तो बहुत दूर के सपोर्ट है ओह सॉरी दिस इज गोल्ड ये नेचुरल गैस ने ब्रेक डाउन कर दिया है तो अब ये सपोर्ट सपोर्ट नहीं है मतलब सपोर्ट नहीं है इट बिकम अ रेजिस्टेंस नाउ तो थोड़ी बहुत सेलिंग यहाँ से एक्सपेक्ट करेंगे वापस से रीटेस्ट पे नीचे अब आपके पास ये जो रीटेस्ट जोन है अराउंड 266-65 दैट इज द ओनली लेवल जहाँ पर प्राइस थोड़ा बहुत रुकने की कोशिश करेगा अगर रुका तो नहीं रुका तो फिर तो ये 260 मान के चलो यस चेंज हो गए हैं बिल्कुल संजय मल्होत्रा इज द न्यू आरबीआई गवर्नर फॉर नेक्स्ट 3 years ओके 4 मिनट लेफ्ट 4 मिनट बचे हैं गाइस करते रहो सभी लोग जिन लोगों ने लाइक नहीं किया स्ट्रीम को। गोल्ड में रेजिस्टेंस कहाँ पर है? गोल्ड में भी मिल जाएगा ऊपर 2677 टू 2680 के अराउंड इन 15 मिनट टाइम फ्रेम। अच्छा रेजिस्टेंस है। फिलहाल ये एफईजी पे रुक रहा है थोड़ा बहुत। लेट्स सी एग्जैक्टली लेवल पे आता है तो। राइट नाउ इट इज ऑन एफईजी। आज का हाई तोड़ दिया किसने? सिल्वर ने। सिल्वर अभी रेजिस्टेंस जोन पर ही है 32.11 से 32.32 के बीच में। थोड़ा सा ध्यान रखना यूएस मार्केट ओपन होने वाला है और गोल्ड अभी एग्जैक्टली रेजिस्टेंस पे पहुंचा नहीं है। गोल्ड अभी अपने एफईजी पे रुक रहा है तो इसका रेजिस्टेंस थोड़ा सा अपर साइड पे है अभी भी। गिफ्ट निफ्टी ने अपना डे हाई ब्रेक कर दिया। क्या बात कर रहे हो? देखें जरा गिफ्ट निफ्टी। वाह। बट ऊपर अभी भी रेजिस्टेंस है इसके पास। 3 दिन से तो रेंज बाउंड ही चल रहा है। ऊपर रेजिस्टेंस नीचे एक रेजिस्टेंस था उसका ब्रेकआउट किया तो वो सपोर्ट बना हुआ है। 15 मिनट। ओके यूएस मार्केट ओपन। यूएस मार्केट ओपन। लेट्स सी किस तरह का वॉल्यूम आता है। रीटेस्ट किया नहीं है, नेचुरल गैस करता है तो एंट्री करना। वैसे अगर नहीं भी किया तब भी दोनों अच्छे ट्रेड मिल जाने चाहिए। अगर नहीं किया तो यहाँ से बाइंग तो डेफिनेटली बनती है। फिर कर गया तो फिर थोड़ा सा ये सब रीटेस्ट भी उतना स्ट्रांग नहीं होगा। क्रूड ऑयल में भी थोड़ा वॉल्यूम एक्सपेक्टेड है नाउ। काफी देर से बहुत लो वॉल्यूम के साथ ही ट्रेड हो रहा है इंट्राडे में। Okay, that is resistance. नाइनटी पीपल आर वॉचिंग। लाइक भी करते रहो गाइस सभी लोग। जिन लोगों ने लाइक नहीं किया स्ट्रीम को फटाफट से लाइक कर सकते हैं। नहीं कोई डेटा शेड्यूल नहीं है आज। देयर इज नो डेटा शेड्यूल फॉर टुडे। ना कोई डेटा है, न्यूज़ का कह नहीं सकते कब कौन सी न्यूज़ आ जाए फिलहाल के लिए। मिडल ईस्ट में तो सीरिया वाली न्यूज़ ही चल रही है, वहां से कुछ अपडेट और होता है तो देखेंगे। वैसे उसका मार्केट पे वैसे कुछ खास इम्पैक्ट तो पड़ेगा नहीं। इजराइल को देखना पड़ेगा, इजराइल कहीं सीरिया के अंदर घुस गया वापस, तब शायद हो सकता है कॉन्फ्लिक्ट बढ़ जाए।
So we got cyclical sectors leading, but tech is a laggard today. Tech was a big leader last week, but we're not seeing that today. I did want to focus on ARC innovation because you take a look at, aside from Tesla, Tesla kind of warps us sometimes. ARC is split today, but ARC is actually at the highest level since about April of 2022. It has really come back since its depressed price action following the pandemic. And then we got to get to China. China has seen the biggest jump today. Let's see, we got that the surging most since October of last year. So we got Alibaba, that's up 7%, Pinduoduo up 8%, JD.com up 9%. We saw Chinese stocks kind of race out of the gate a few months ago, and they weren't able to continue that. That was based on expected stimulus measures. We haven't quite seen all of those take effect, but there's some more inklings that we might get some of those today, and so that's the excitement over there. And I want to get to the futures action because we have, and I'll start with crude oil. Crude oil is jumping. We had that big OPEC Plus decision last week, and we can see it's up 1.5% today, and that kind of set the tone. But there are some demand issues, and that's being felt today. Saudi Arabia has lowered its prices for certain Asian buyers, and we see that kind of happen around some of these decisions. Even though we're not seeing a negative price action today, we are seeing a little bit of a bullish actual jump. I think that's kind of a hangover from the weekend or just some other effects. Something I would think about. There's not a lot of demand in oil land right now. But we are seeing silver jump. Now, silver is jumping by the most in 7 weeks. And here's a 3-month chart. You can see these relatively recent highs over here. So we're kind of in the midsection here. And this is either where you would expect short traders to assert themselves, or you jump over this line here and you're racing towards those highs. So we'll see what comes of that. Did I mention copper is jumping as well? That is up 2% today. And we can see those relative highs back in late September, early October. And then to round things out, I got to get to crypto land because Bitcoin has just been oscillating around the 100,000 level. You can see a lot of red back there, but Ethereum is where my eyes are this morning as it approaches its 2024 highs. Let me just show you a year-to-date chart, and you can see, there we go. We got these highs from earlier in the year that it is testing right now, but still needs to go a little bit further to get to those ultimate highs around 4,500. But nevertheless, I think people will be putting on their Ethereum 4,500 hats pretty soon here if we get some more momentum to the upside. Guys?
We will say, all right, Jared, thanks so much. It's time now for today's strategy session. The S&P 500 on track for its best year since 2019 as the index continues to clinch record high after record high. But the market's biggest driver, the Mag 7, is showing some signs of pullback from its rapid growth. Joining us now, we want to bring in Jake Manukian. He is at JP Morgan's Private Bank U.S. Head of Investment Strategy. Jake, let's start right there with the role of Mag 7. As we look ahead to 2025, what's your assessment just in terms of how investors should be thinking about how critical it is for the market's continued rally?
Yeah, I would say it's important but not critical, right? I mean, these companies they're the largest shares in the index. Index concentration is at all-time highs. But the good news for investors is that their profiles are very attractive, right? They have the widest cash flow margins in the market. They have the lowest amount of levels of debt, and they have secular drivers of revenue and earnings potential. So I think they're obviously important for the market, but they're not critical for the market's success. And we see signs that earnings growth is set to broaden out as we head into 2025. And I think after the election, a lot of people are willing to kind of look ahead. That psychological overhang is in the past, and they're looking for more opportunities in all different segments of the market.
Even with regard to the concentration that you were mentioning, how and where are these sectors or even names that are perhaps most primed to take on some of that share of concentration?
Yeah, I mean, the public markets aside, I think what's really interesting is happening in private markets, right? You guys were talking about deal making and some of the merger and acquisition activity that's happened. You know, Wall Street's been in this kind of ice age for the last 2 years in terms of deal activity. When you think about IPO issuance, high yield issuance, lev loan issuance, we've seen a collapse in activity given interest rate hikes, given fears of recession, given elevated inflation, and we've seen a nascent recovery, but I think given a shift in the regulatory environment, that's really going to change. So when you think about private equity exits, private equity deal flow, when you think about the opportunity that private managers have, I think it's compelling to us.
It sounds like opportunities across capital structure.
Yeah, across the capital structure too. I mean, if you think about all of the the debt financing and the mezzanine level financing that it takes to get these deals done, we expect more volume and more opportunity there. And when we think about that from a portfolio construction angle, we're very optimistic. There's a lot of ways for investors to get those kind of like high single digit, low double digit returns. Yeah. From a lot of places, whether it's large cap equities or whether it's private markets, whether it's mezzanine debt, whether it's direct lending, whether it's infrastructure, whether it's real estate. There's a lot of different levers that investors can pull to build a resilient portfolio that can still generate attractive returns.
So the way that I'm kind of thinking about it now is it sounds like it's who's financing the deals, which leans towards financials and the larger banks. Yes. And then on the other side, it could be small and mid caps that are most primed to be acquired, but you'd have to be really judicious about where you're picking those.
Exactly. I mean, a better deal-making environment should support multiples and valuations for the small and mid-cap spaces. But yes, the financial sector, the asset management industry broadly, those are two places in the public markets that should benefit.
Talk to us just about how you're thinking about Fed policy and how big of a factor that is into some of these opportunities.
It's a factor, but I think investors have to understand that the Fed isn't the primary catalyst in the market anymore. They're set. They're in easing mode. There's going to be a debate about how frequently they cut or how many times they cut, but their policy stance is set towards easing. We're not seeing any signs of inflation from the labor market, and that's really what they're trying to support. And as long as that shift has happened, and it's happening globally, you saw the news from China over the weekend is that they're in that kind of supportive easing mode as well. That's happening in the background. That's the undercurrent, but that's not the big catalyst, we don't think.
And so if the Fed is not the big catalyst, is the catalyst 1600 Pennsylvania Avenue?
Yeah, well, I think that's what investors are thinking right now, right? The shift in the regulatory environment is something that we're well aware of. What we feel there's a lot of policy mix that I think investors are going to have to debate, whether that's the tariff side, whether it's the kind of labor force consequences of changing immigration policy. But there's a clear sense that this will be a friendlier administration to Wall Street and to deal-making activity, and that's where we're anchored from a perspective of where we want to add risk in portfolios.
You go back kind of to where we started talking about the fact that we are seeing this broadening here just in terms of earnings participation, where we are seeing that growth. We're expected, maybe is a better way to say that growth going forward. What are the top, I guess, where do you see that leadership coming outside of maybe some of those tech names? Who do you see leading in 2025?
Yeah, I mean, one of the sectors that we're focused on is industrials. I think there's a lot of both cyclical and secular catalysts for the industrial sector, and one of them is the kind of geopolitical environment and then this broader idea of security that encompasses a lot of different factors, whether that's supply chains, energy resource, access to energy resources, whether it's infrastructure. A lot of that investment, and globally, this isn't just a U.S. story, will benefit members of the industrial sector.
Jake, thanks so much for taking the time in studio this morning.
Thank you guys very much.
Absolutely.
Appreciate it.
Time now for our chart of the day. Let's send it on over to Catalyst co-host Madison Mills for a look at profit growth. Hey, Maddie.
Hey, Brad. So if we take a look at profit growth estimates for 2025, you might be throwing a little bit of cold water on all of those aggressive price targets that we are getting in for next year, and that is because profit growth for the Magnificent Seven is expected to slow down just a bit here. The projected profit growth for this year alone is at 34% for the Mag 7. Next year, it's expected to drop down to 18%. That would put healthcare, which has been a big laggard year to date this year, as the top reigning king of the S&P 500 in terms of profit growth next year. Also, for that Mag 7, if you strip out 6 of those names, we're expecting only 3% growth in profit for next year, according to Bloomberg Intelligence estimates. So, does this mean the Mag 7's reign is coming to an end? Well, not necessarily, because I want to point out some stats from last year. Analysts were expecting growth of 19% for the Mag 7. As I said earlier, it's now projected to come in at 34% for this year. So the street has underestimated big tech previously. Also, we've got NVIDIA in the room, and we are not expecting a slowdown in NVIDIA more broadly moving forward into 2025. Obviously, today was standing with that geopolitical news out of China. I do want to note, though, that we are already starting to see this rotation playing out. In the week through December 4th, we've already seen the biggest outflows in 6 weeks for the Mag 7. Small caps, meantime, getting $4.6 billion in inflows in that same time period. So that could be end of year rebalancing, but it could also be a sign that the street is getting ahead of this decline in profit growth, or I should say slowdown in profit growth that we are anticipating for 2025 here.
All right, Maddie, great stuff. Thanks. TikTok's future in the U.S. hangs in the balance after an appeals court upheld a sale or ban law for the social media app. In the latest episode of Opening Bid, Yahoo Finance executive editor Brian Sozzi sat down with Project Liberty founder Frank McCourt, who has advanced a bid to buy the social media site's U.S. arm. Here's a part of their conversation.
We don't know what ByteDance is going to do. You know, they may let it shut down. I hope not. President-elect Trump hopes not. And President-elect Trump is a deal maker. I'm a deal maker. I think that there's a deal to be made here so that the U.S. TikTok can stay in business. We want to see the platform stay in business and the 170 million people enjoy it. It's a very popular platform. We don't want to see it shut down or banned. And as I said, President-elect Trump has said he doesn't want to see that either. So let's see if we can find a way here to make this a win-win-win where the U.S. TikTok is split off from ByteDance. China gets compensated for that. U.S. citizens are no longer have their data scraped and have information, quote unquote, spread to them, which may or may not be accurate, and Americans can be protected, and the U.S. government can fulfill its duty to protect American citizens.
You can find new episodes of Opening Bid every Monday, Wednesday, and Friday morning, 8:30 a.m. Eastern, across all podcast platforms. Coming up, Macy is facing a proposal from an activist investor. We're discussing with an analyst who calls the stock very undervalued. That's next.
गाइस यूएस मार्केट की कैंडल हो गई है क्लोज 1 मिनट रह गया है गोल्ड देखो रुक ही नहीं रहा देखो रेजिस्टेंस पे पहुंचता है तो एग्जैक्टली अभी आया नहीं है एग्जैक्टली रेजिस्टेंस एरिया पे नेचुरल गैस भी रीटेस्ट करने शायद जाए यूएस मार्केट की कैंडल क्लोज नाउ पहुंच तो गया है ये रेजिस्टेंस के अराउंड एफईजी पे शायद थोड़ा बहुत रुकने की कोशिश थोड़ी तो प्रॉफिट बुकिंग जरूर करेगा यहाँ पे तो रेजिस्टेंस पे रुका है, लास्ट कैंडल पे थोड़ी बहुत सेलिंग आई जरूर, बट वो भी रिकवर कर गया। वाह, दोनों ही रेजिस्टेंस पे हैं अब तो, सिल्वर और रेजिस्टेंस गोल्ड। $2700 पार कर जाए। देखो अब अभी रेजिस्टेंस तो यही है लास्ट, इसके ऊपर कहीं चला गया तब बात देखनी पड़ेगी। अगर ये रेजिस्टेंस होल्ड नहीं करता है 15 मिनट टाइम फ्रेम पे, कहीं प्रॉपर एक ब्रेकआउट रीटेस्ट कर दिया, उस केस में हो सकता है ऊपर एक रीटेस्ट है वहां तक चला जाए, अराउंड 2705 टू 2707 एक सपोर्ट था। ब्रेकडाउन हुआ, डायरेक्टली रीटेस्ट किया है, एक बार फिर से कर सकता है, अच्छा स्पेस है। नेचुरल गैस में जरूर देखना, ठीक है, ब्रेकडाउन रीटेस्ट पे वापस सेल कर सकते हो। सिल्वर भी देख लेते हैं, सिल्वर तो वही रेजिस्टेंस पर ही है एग्जैक्टली। वेयर इज द सिल्वर? लग रहा है बाइंग नहीं, प्रॉफिट बुकिंग हो गई, लग रहा है कुछ ज्यादा ही बड़ी। जिस तरह से सेल ऑफ मार्केट में रुका हुआ था लोअर एंड से 3 दिनों से कंसोलिडेशन में, कह रहा हूँ काफी दिन से काफी एक ही रेंज में था। दोनों ही हुए हैं, बाइंग तो हुई हुई है साथ में, प्रॉफिट बुकिंग भी हो गई लग रहा है एक साथ। नहीं तो इतना बड़ा मोमेंटम एक डायरेक्शन पे विदाउट एनी सफिशिएंट पुल बैक बहुत रेयरली होता है, तो कोई न्यूज हो, न्यूज भी नहीं है। डेलो से देखोगे तो ऑलमोस्ट मॉर्निंग 11 बजे से ऑलमोस्ट 5% चढ़ चुका है, 5% सिल्वर। ऊपर जितने भी रेजिस्टेंस हैं किसी को होल्ड नहीं कर रहा है, ना पुल बैक। इंडेक्स भी गिर रहा है कि इतना जितना ही ऊपर जा डॉलर इंडेक्स को देखोगे डॉलर इंडेक्स नहीं गिर रहा है इतना जितना सिल्वर ऊपर गया है लुक एट द डॉलर इंडेक्स चार्ट स्टिल देयर डॉलर इंडेक्स का चार्ट बिल्कुल ही रेंज बाउंड में फंसा हुआ है बट सिल्वर इज गोइंग अप डॉलर इंडेक्स उस स्पीड से या फिर उस मोमेंटम के साथ नहीं फॉल कर रहा है नहीं तो नॉर्मली दोनों अपोजिट डायरेक्शन पे मूव करते हैं और ये 10% टाइम्स ही होता है दोनों साथ मूव कर दें या फिर मूवमेंट बहुत स्लो हो तो अभी ब्रेकआउट कर रहा है अभी रेजिस्टेंस पर ये ब्रेकआउट इसका 32.32 के ऊपर फॉरेक्स चार्ट में अभी तो रेजिस्टेंस पर ही है लास्ट टाइम अच्छी सेलिंग आई थी इस जोन से अच्छी क्या काफी बड़ी सेलिंग आई थी मार्केट में मार्केट ऑलमोस्ट 8% गिरा था इसी लेवल से और गायब भी हो गए सिल्वर से इतना तो गोल्ड भी मोमेंटम में नहीं है लाइक भी करते रहो गाइस डोंट फॉरगेट टू लाइक द स्ट्रीम जिन लोगों ने लाइक नहीं किया स्ट्रीम को फटाफट से लाइक कर सकते हैं स्क्रिप्ट्स फील 8% सर नो नो मैं उसकी बात कर रहा था आई एम टॉकिंग अबाउट सिल्वर लेवल नो द करंट silver level is very important actually from that particular level in recent past there is almost 8% sell off we see that market is on the same level in silver totally bullish but that is a major resistance let's see it will hold or not that particular range or the level in forex I'm talking about forex chart in silver
$200 a share. That's up from $70 a share, and that's a street high. Brian Nowak writing that they have been wrong. They have been wrong on the sidelines with Reddit this year, but he doesn't think that they've missed the boat completely. That's why they have a price target of just about $200, so just about $28 higher or above where it is currently trading. He does, though, note that
They're firing guns on news when you want it with Bloomberg News Now. I'm Nathan Hager. A new trading week is underway on Wall Street with stocks looking for a bit of direction to start the week. That is the sound of the opening bell from the floor of the New York Stock Exchange, with the S&P 500 opening about 0.1% lower. The Dow Jones Industrial Average opens little changed, and the NASDAQ Composite opens with a decline of about 0.2%. 10-year Treasury yield up about a basis point to 4.16%. All this with geopolitical risk in focus. They're firing guns on the streets of Damascus after the overthrow of Syrian President Bashar al-Assad's government. The rebel group that led the advance, Hayat Tahrir al-Sham, has tasked its political chief, Mohammed al-Bashir, with forming a transitional government. But Bloomberg's Henry Mayer reports there is still the risk of a power struggle.
There is, of course, major support for the end of the regime, but there is also some concern because HTS in particular had previous links with al-Qaeda. A lot of people are worried about how things are going to work out.
In the meantime, Bloomberg's Henry Mayer reports Israeli ground forces have moved into a Syrian buffer zone while Israeli airstrikes target suspected chemical weapons and missile sites. U.S. forces struck hundreds of Islamic State locations in central Syria over the weekend. Geopolitical risk may be tempering the strongest signal yet of stimulus from China. The Politburo says it is shifting to a moderately loose monetary policy stance and will support more proactive fiscal policy. It's the first shift in more than a decade. But as Bloomberg's Enda Curran reports, the devil is in the detail.
Face value headline takeaway here is it's a significant change of tone and language from the authorities in Beijing. This is what the world has been waiting for the past couple of years. But we don't have the detail. There is an important meeting later this month called the Economic Works Conference when the officials will gather and note out the economic policy detail. But we won't get the figures from that until maybe March.
Bloomberg's Enda Curran in Washington. Meantime, China has opened a probe into NVIDIA into whether the AI chip giant violated anti-monopoly laws. Bloomberg's Kriti Gupta says this could be another salvo in U.S.-China trade tensions.
He says they're looking into the company's recent behavior, but remember, NVIDIA has a good chunk of their supply chain built out into Taiwan, so it looks like some of the crosshairs between Washington and Beijing, that's where NVIDIA is getting caught.
Bloomberg's Kriti Gupta. And at the open, NVIDIA shares are down 2.5%. In another development, TikTok is asking that the U.S. law forcing a sale or ban of the video sharing app by its China-based parent ByteDance be put on hold to give the Supreme Court a chance to review. That request came after an appellate panel in Washington upheld that law, concluding it does not infringe on free speech protections. President-elect Donald Trump says he's spoken with Chinese President Xi Jinping in recent days. Trump revealed that in a wide-ranging NBC Meet the Press interview, where he also reiterated tariff threats against U.S. allies.
We're subsidizing Mexico for almost $300 billion. We shouldn't be subsidizing. Why are we subsidizing these countries? If we're going to subsidize them, let them become a state.
Trump also told Meet the Press he would work to pardon January 6th defendants on day one. He says House members who investigated the Capitol riot ought to be in jail. We asked Veda Partners managing partner Henrietta Trez how serious to take all that.
I think he's very serious about that, and I think it's going to be, hopefully on a case-by-case basis. Some of these folks have been in prison for 20 plus years for hurting and assaulting police officers, so those are more serious crimes. But I think right out of the gate, he's looking to deliver on some of the red meat that he promised his voters on the campaign trail.
Henrietta Trey's of Veda Partners was a guest on Bloomberg Surveillance. Checking some stocks at the open, Interpublic Group shares are higher by 9.5%. Rival Omnicom has agreed to buy the company and create the world's biggest advertising firm. Omnicom shares are down more than 7%. Macy's is up about 4%. Activist investor Barrington Capital is pushing the department store to form a separate real estate group and consider strategic alternatives to Bloomingdale's and Blue Mercury. Reddit shares are higher by 4% at the open. The social media platform is testing a new AI chatbot to compete against search engines. It'll be called Reddit Answers. And after the bell today, we get earnings from Oracle. A preview now from Bloomberg's Isabel Lee.
Oracle is on track for its best year in over 2 decades, so its once struggling business is finally being taken seriously by investors. For a long time, it has really struggled to find its place in the lucrative cloud storage and renting business that has been dominated by AWS and Microsoft. But now it's gaining some traction thanks to Uber and TikTok. Those are both its clients.
Bloomberg's Isabel Lee, and at the open this morning, Oracle shares are higher by 1%. That's news when you want it with Bloomberg News Now. I'm Nathan Hager. This is Bloomberg.
Last week, Powell said that he hoped for a good
But he likes talking about money.
with the new Trump White House and Trump's nominee for Treasury Secretary Scott Bessent, who once suggested in an interview that Trump could appoint a shadow chair to undermine Powell's influence. All of this after Trump on the campaign trail regularly weighed in with criticisms of Powell, offering that the president should, quote, have a say in Fed decisions and that Powell has, quote, gotten it wrong a lot. When Fed Chair Powell was asked just after the election whether he would step down from the central bank if President-elect Trump asked him to leave, Powell said simply no. When pressed by reporters on what legal authority Trump has to fire him or any other member of the Federal Reserve Board, Powell simply replied, quote, not permitted under the law. Back to you.
All right, thanks so much, Jen. Well, the Fed has one last meeting before President-elect Donald Trump takes office, and markets are currently pricing in an 87% chance of a 25 basis point rate cut ahead of 2 key inflation prints that are coming out later this week. I want to bring in Jennifer Lee, a senior economist and managing director at BMO Capital Markets. And Jennifer, it's great to have you back here on Yahoo Finance. Let's talk about what exactly is at stake here with these 2 inflation prints. I guess how critical are they critical in how the Fed is thinking about how much progress we have seen in terms of the fight to tame inflation, what ultimately it will signal about the path forward?
So good morning, and thank you very much for having me on. You know, the data are always important, but I got to say these days it's almost like less important, especially on the inflation front. I mean, we know that, you know, inflation has been coming down. We're no longer at, 9% or whatever it was a couple of years ago. And the Fed chair said a few weeks ago that, that he believes that inflation is heading sustainably back down to that 2% target. I think what's probably more interesting at this point is what's going to happen next year, and with the planned tariffs that are going to be kicking in. Who knows? Maybe on day one of the new presidency. So that I think is going to be more worrisome, I think, for the Federal Reserve. So, I think a 25 basis point cut in a couple of weeks is almost like baked in, unless it's something outrageously weird happening in the November CPI numbers and the PPI numbers. I think it's more it's more important to see what they're going to say, what the communication is going to be after they make their announcement at the next meeting.
So it sounds like you are not anticipating us getting any kind of whispers from the Fed through a Nick Timrose article at the Wall Street Journal heading into that December 18th meeting.
It seems like we always do somehow get a little bit of a whisper, but again, actually it'd be very interesting to see what he says. But assuming that, inflation is up modestly, on a month-to-month basis, we see roughly the year-over-year heading a little bit higher, still a bit too hot for the Fed's comfort. We might see some stickiness still in housing, in the services sector in particular.
क्रूड ऑयल पहुंच गया अपने रेजिस्टेंस जोन पे। देखो व्यू थोड़ा सा बुलिश ही चल रहा है, बुलिश क्या सुपर बुलिश चल रहा है फिलहाल के लिए। ठीक है, वॉल्यूम भी ठीक ठाक आ गया है, जो लोग बाइंग में थे वो लोग एग्जिट कर सकते हैं फाइनली। नेचुरल गैस भी रिटेस्ट के बाद गिर रहा है नीचे, इसका एक और रिटेस्ट जोन है, वहां से वापस बाइंग का प्लान करना। ध्यान रखना है रिटेस्ट पहले कर चुका है एक बार, सेकेंड टाइम आएगा तो थोड़ा सा वीक रहेगा, क्वांटिटी थोड़ी कम रखना। बाकी क्रूड ऑयल को थोड़ा अपर लेवल से सेल करना सो दैट एसएल छोटा हो। व्यू बुलिश है तो सेलिंग थोड़ा सा रिस्की है, बट रेजिस्टेंस है तो लगा रखा है। तो थोड़ा क्वांटिटी कम रखना और थोड़ा हायर लेवल से सेल करना सो दैट एसएल छोटा हो जाए। नहीं तो ऐसा ना हो कि एसएल बड़ा हो गया और एसएल उड़ गया ऊपर तो बड़ा एसएल जा सकता है नीचे। अब प्राइस वापस आएगा तो ऑब्वियसली यहाँ तक तो नहीं गिरेगा, वापस प्राइस फॉल करता है। Nearest FEG है, that is one of the resistance zone obviously. ऐसा कोई इतना सपोर्ट तो नहीं है, लास्ट स्विंग ही एज अ सपोर्ट कंसिडर करना पड़ेगा बिकॉज पूरा नीचे तो आएगा भी नहीं प्राइस इतना बड़ा फॉल करके। सो नियरेस्ट जो एफईजी बने हुए हैं दोज आर द सपोर्ट जोन्स। बाकी व्यू थोड़ा सा ध्यान रखना, बुलिश है तो क्वांटिटी थोड़ी कम रखना सेलिंग में, थोड़ा हायर लेवल से सेल करना। अगर ऐसे जाएगा भी तो छोटा जाए, रेजिस्टेंस जरूर है, नीड टू सी होल्ड करता है नहीं करता। वॉल्यूम ठीक है, वॉल्यूम में आपको कोई प्रॉब्लम नहीं है, इनफ वॉल्यूम फॉर इंट्राडे ट्रेडिंग। फाइव 577325778 या 9 दैट इज एफयूजी एरिया अप्रोक्सीमेटली की है, ध्यान रखना ठीक है। क्वांटिटी थोड़ी सेलिंग में कम होनी चाहिए, टारगेट भी कोई बहुत बड़े नहीं है।
Line coming off another record-setting high, but you do have the Nasdaq and the Dow holding on to just some slight gains here in early action. Flipping over to the bond market and taking a look at yields, we are seeing yields pushing to the upside once again. You got the 10-year yield up just about 3 basis points, still below that 4.2 level. And flipping over to Bitcoin, lots of focus on Bitcoin as it did surpass 100,000. We still see it though trading just below that milestone mark there, just above 99,000. Again, a trade to continue to watch. Well, coming up, we're taking a look at some of today's top trending tickers. We'll give you the news behind those moves. That's next on Catalysts.
U.S. stock futures moving. Lower as Nvidia weighing on the broader market this morning. There's a probe in China. But in other news, The S&P 500 getting a new street high target of 7,100 by Oppenheimer, indicating a 17% gain through the end of next year. Here to break down the call and to discuss what's on the agenda for the week is our own Josh Schaefer. So let's focus in on the targets. We'll put NVIDIA on the back burner.
We'll go broad first.
Yeah, let's go broad first here. So what's really playing into this new price target?
Yeah, I mean, I think what we're seeing from John Stoltzfus out of Oppenheimer is really not dissimilar to most of these calls we've been talking about, right? Which is essentially, you're looking at a scenario right now where it feels like the U.S. has continued to head for a soft landing from an economic standpoint. Earnings are expected to grow next year. Where Stoltzfus's call gets a little bit different is sort of the math that works for these targets, right, guys? So if you look at his projected earnings at 275 earnings per share for the S&P 500, not really different than what a lot of people are arguing. But when you look at what his potential PE is, he sees the market trading at about a 25.8 forward 12-month multiple. That's about 3 points higher than what it is right now. It's around 22, 23. So essentially what he's saying there is, yes, earnings are going to grow, but also perhaps there's a little bit of just this risk-on vibe in the market right now that continues into next year. And you see you see earnings pushing up stocks, yes, but you also just see price continuing to move up. He also calls for a little bit of that broadening of that rally, right? He notes that given the success we've seen in the AI trade, to also have the broadening of the rally gives you more support and a little bit more confidence in what's going on here. And he also highlighted, Sean, I'll point out, that he thinks AI will benefit all 11 sectors in some way, which is a little bit of a different call than what you hear from people, right? He's not just talking about tech. He's saying at some point you're going to start to see productivity gains across the S&P 500 from AI. I think the question would be whether you actually see that in 2025 or maybe a little bit later.
Yeah, whether or not it's a longer term story. Yeah, you're exactly right. And that's what really stuck out to me. And also just the fact that he was talking about how much more efficient AI is going to make the economy, how it's then going to help further support the U.S. economy going forward, which we have certainly seen obviously just be so resilient here over the last several quarters and several years, to say the least. But Josh, just tying what we're hearing from Stoltzfus to what we could hear this week, when we talk about the economy, the two key inflation prints that we're going to be getting out later this week, how the Fed is exactly going to, I guess, fold that into their calculus just in terms of rate cutting cycle and what that ultimately means for next year. Where is the thinking on that?
Yeah, I mean, it seems like most of these strategists are sort of comfortable with the narrative that's already playing out, but we haven't necessarily heard from the Fed, right? So what you would expect this week, I think, from consensus would be another sticky inflation print. That's what it looks like right now based on projections. You get another sticky inflation print. The Fed probably moves down its expected cuts for next year, right? So that SEP, the Summary of Economic Projections that we had in September, said probably 4 Fed rate cuts over the next year. People probably think that comes down to 2 or 3. That's kind of baked into some of these forecasts, which I think is important to remember this week. Might give us a little short-term volatility, but overall, the sticky inflation story seems to be something that people are sort of pricing in at this point. It's an expectation that inflation is not instantly falling. The Fed is not going to be issuing nearly as many cuts as we thought 3 months ago. But the key part of that being, and strategists come on our air and say it all the time, if the economy is still doing well, while the Fed isn't cutting, then there is a case for equities to keep moving higher, right? If we're still in a good position. And I think when you look at last week's jobs report, you see a little bit of that Goldilocks aspect to it, right? Yes, unemployment rate ticked up a little bit. Maybe that's your case for a cut or a case for them to keep lowering. But the U.S. economy bounced back from a job adding perspective, right? You still have wages growing, which could be an issue for inflation, but it's also good for your consumer. And so it seems like right now, to sort of sum all of that up, yes, Wednesday into next Wednesday, so this inflation print into next Wednesday are really the only two planned events that people are watching at this point. They give a little bit of a risk to this rally, but it doesn't seem like too many people are arguing that it's going to take down the rally at this point.
All right, Josh, great stuff. Thanks so much.
That will then use the data for AI training and development here. I think what's really key here and interesting to me is that this comes just one day after Anduril announced a partnership with OpenAI aimed at developing and deploying advanced AI for national security missions. So this is really a broader approach from Anduril to embrace AI. That's something that Anduril CEO spoke with our own Josh Lipton about at our Invest conference. And it's part of this growing trend that we've seen pushing Palantir to record highs. This morning, the stock briefly hitting a record high on this news.
Yeah, you can certainly see the excitement play out on the street just in terms of what ultimately this could mean here for growth down the line. You got the stock up just about 2.5%, but it does bring us back to what we heard the Anduril's CEO tell Josh Lipton just about a month ago. And he talked about it a lot in the context of the incoming Trump administration, what exactly that is going to do for the sector at large, some of the opportunities that could be outlined from policies, even though we are certainly seeing, or there is still certainly much uncertainty surrounding what exactly is going to get implemented. But very much when you talk about the partnership, some of the growth opportunities there, and you see this this partnership here with Palantir, clearly it could benefit, and I think it does benefit. It's ultimately beneficial here for both sides. All right, let's take a look at Burlington. It was actually added to Goldman Sachs' U.S. conviction list. Analysts saying that the company is ideally positioned for today's economy. Meanwhile, Amgen and Global E Online were removed from Goldman's conviction list. We want to talk about that and more with Steve Crone. He is Goldman Sachs' Director of America's Equity Research. Steve, it's great to have you on. Lots of stocks that we want to get into here, but Burlington really caught our eye just because we talk so much about the consumer, the state of consumer right now, value hunting. I'm curious from Goldman's perspective, why is Burlington so much better positioned than some of the other players within the space?
Yeah, so thanks for having me. It's nice to be back with you guys. As you point out, in this report that we published last week on the update to our conviction list, we did highlight the consumer. We've had a view, and we continue to have this view, that the consumer is well positioned into 2025 from a spending standpoint. It's the linchpin of our macroeconomist, Jan Hatzius's global U.S. GDP forecast, where he looks for 2.5% GDP growth. Consumer makes up 2/3 of the economy, and that's above consensus. Behind that is the consumer being financially sound. You think about easing inflation. You think about strong household balance sheets. Consumers in a really good spot, very good employment data. Consumers in a really good spot to spend. So you think about the off-price retailers. They're in that sweet spot of consumers that are seeking value right now. Also, higher income consumers that are looking to trade down for good brands. And Burlington's been executing really well. So our analyst, Brooke Roach, that covers the stock, has been very positive on this story. She's above consensus on expectations going forward. And they also have some cost discipline in place, so you should see margin expansion there.
I want to flip over to a company that got dropped, and that's Amgen. Can you talk to me about the base case for that?
Yeah, so look, Salveen Richter covers the stock. She's still very positive on Amgen. As we talked about last time we were here, this is a list of 20 to 25 of our top ideas coming out of the research department. We keep this list relatively fluid over time. So there's no change in Salveen Richter's view on Amgen going forward. She's still buy rated on the stock. We just found other opportunities for this list at this time.
And one of the big things that you did highlight here, or just take into account, is the role of the Mag 7 and big tech, especially on the heels of some of the work done by David Kostin. NVIDIA is still on that list. When you take a look at NVIDIA's role in terms of the broader market, really setting the tone here for the AI trade, what is Goldman's expectation there?
Yeah, so Toshiya Hari covers the stock, still very positive on this. We spoke, the three of us. I talked about how do you really differentiate on a name like NVIDIA, right? This is an ideas-driven list where you're presumably finding the best idiosyncratic bottoms-up fundamental ideas. And it's all earnings-driven, right? He has been well above consensus on his earnings expectations and remains well above consensus on his earnings expectations for NVIDIA. But your question is broader. You referenced Kostin's work about the market into next year. Still, that earnings growth to be less than the
ओके गाइस, ये क्रूड ऑयल में देखो यहाँ पे थोड़ा सा रिस्की ट्रेड लग रहा है। अगर कोई सेलिंग में गया है कॉस्ट टू कॉस्ट पर ही है तो निकल जाओ, या फिर रिस्क बहुत कम रखना, क्वांटिटी बहुत कम रखना। ये रिस्की ट्रेड है। मार्केट थोड़ा और ऊपर तक जा सकता है यहाँ पर। ये थोड़ा सा सेलिंग रिस्की लग रही है। मोमेंटम काफ़ी फास्ट आ रहा है ऊपर की साइड की। स्मॉलर टाइम फ्रेम पे देखोगे तो नीचे प्राइस रुक नहीं रहा है, कंटिन्यूसली मोमेंटम पिक कर रहा है। सेलिंग थोड़ा सा रिस्की है, ध्यान रखना। थोड़ा सा मुझे लग रहा है और ऊपर जा सकता है, तो थोड़ा सा यहाँ पर सेलिंग में कोई है निकल जाओ, कॉस्ट टू कॉस्ट ही है। या फिर अगर रुकना चाह रहे हो तो छोटा सा ऐसा रखो, थोड़ा और ऊपर जाने के चांसेस लग रहे हैं मुझे इसके। एक फेक ब्रेकआउट ना कर दे ये। That is the good level.
On data and taking structured and unstructured data and helping companies incorporate that, and that's going to play into the AI transition to revenues. But Teradyne is a system-on-chip testing company. And it's not just AI, it's traditional chips that are powering computers and devices as well. And that's more to Toshiya's call on just semiconductors overall. He's been positive on segments, and he thinks that there's more need for testing, quite frankly. And certainly it lends itself as AI continues to grow, there's going to be more need for a business like Teradyne.
So looking at those chips plays beyond just the AI plays. Steve, always great to have you. Thank you so much for coming on to talk the conviction list. Hershey. Mondelez reportedly exploring an acquisition of the chocolate maker, creating a company with a combined sales of nearly $50 billion. If we can pull these stocks up full screen here, I can tell you what we're seeing in the moves. Mondelez moving to the downside off the news, down about 3%. Hershey's moving strongly to the upside, up nearly 15%. It was initially halted off the back of this news, but then it started trading again just about 10 minutes ago, right before we came back for our second segment here. This is according to people familiar with the matter who spoke with Bloomberg News originally. Mondelez has made a preliminary approach about a possible combination with Hershey's moving forward here. This is also not the first time that Mondelez has sought a deal with Hershey. They also sought a deal back in 2016, but then walked away after they were not able to reach an agreement on price. So it'll be interesting to see if we continue to hear news of these additional mergers. This isn't the only M&A news that we're getting on this merger Monday here. If this is a bid ahead of the incoming administration to increase some of these deal making here.
You talk about the size of this deal, the value of this specifically, roughly $46 billion. That's according to data that was compiled here by Bloomberg. And just to put that in perspective, if this deal were to happen, it would actually then top the value of the year's biggest deal when we saw Mars's agreement here to buy Kellanova for nearly $36 billion. So again, when you talk about the size of what the deal would be in today's dollars, we certainly are seeing some excitement play out from the street here with Hershey. You mentioned the move to the upside at the highs of the session, at least so far. It had been up just about 19%. That was the biggest intraday move that we have seen in just about 8 years for Hershey. Now it's up just about nearly 15%. But again, any deal is going to require the backing of Hershey Trust, giving it roughly 80% of the voting power of that company. And that trust has been slowly selling Hershey shares in an effort to diversify the holdings, and reporting that's being done right now. But again, any deal would require the backing of Hershey Trust. And Maddie, like you said, this is something that Mondelez has sought in the past. They tried to do it back in 2016. The offer was rejected by Hershey. So we, of course, will see how this plays out.
Absolutely. And we've seen some pressure on the packaged food industry as a whole, too. So that could also be something that regulators consider on this particular deal. All right, coming up, we are addressing pressures on the health insurance industry with Oscar Health's CEO. That's coming up next right here on Catalysts.
Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail.
Following the assassination of United Healthcare CEO Brian Thompson, other insurance companies, including Humana, Blue Cross Blue Shield, have removed executive bio pages from their websites, while CVS and Cigna have removed images of their top executives. Joining us now for more on the state of the healthcare industry and the insurance industry, we want to bring in Mark Bertolini. He's Oscar Health's CEO and former Aetna CEO, as well as our healthcare reporter, Yahoo Finance's Anjali Khemlani. Mark, it's great to have you. Thank you so much for making the time to join us. We want to start with the tragic event that played out last week. In terms of how you are looking at this as the CEO of Oscar, some of the discussions I'm sure that you've been having with others within your industries, what steps are you taking to help mitigate some of the risk, particularly in terms of the executive security right now within the industry, and specifically at Oscar?
Well, I think we always have building protection anyway. At work, we think our employees are going to be safe. I think it's really moving around and being in the public that raises some concerns at the executive level. I think in this case, largely the CEO level. We take all sorts of precautions that we have been doing for a long time. I've been used to it for a long time in my career. And so while this act in itself was unconscionable, the behavior of the American public in reaction to it is understandable given how frustrated people are with the state of our healthcare system in the United States.
Yeah, Mark, Anjali here. Great to have you on. I know that, when we were initially planning to talk 2 weeks ago, the conversation was going to be entirely different, which was about the incoming Trump administration, which we will get to. But I'd love to get a little bit more of your thought process on right now. You said it yourself, the reaction from the public isn't surprising. We've heard from security agencies talking about a rise in violence in the health sector, largely in the facilities themselves, especially in the last year and a half. What does that tell you about what you need to expect and how you're thinking about the company and where it needs to go in order to help reduce this tension that is clearly being felt by the American public?
Well, the American public exists in a system that was designed 80 years ago after World War II. And it was designed in a way that we built a lot of hospitals across the country. And we also provided benefits free through employers as a way of making wage control work after the return of soldiers from World War II. And I think that system is largely now broken. And it has been broken for some time. I've been an advocate for change for a long time. And believe that we have ways to get it better in this country. And I think it largely starts with making sure our health system meets the needs of individuals, not the needs of groups. And right now our system in large part is built around meeting the needs of groups.
Mark, I want to talk about some of the change that we have seen in response to the online response here. Blue Cross Blue Shield, as you know, rolling back a change to their anesthesia policy that would require additional payment from consumers if the anesthetic did have to last longer than it was presumed to last ahead of the surgery here. Do you anticipate more changes like that to come off the back of this online reaction?
Yeah, I think at Oscar, we've actually designed an HMO product that is frictionless for members. They don't get in the middle of pre-certification or authorizations. We do that with the doctor, and we do that digitally as ways of moving that fog of behavior out of the consumer's view and focusing really on the very few things that we actually reject every year. And things that we know are subject to abuse, instead of authorizing and requiring referrals on everything. And I think that takes some of the noise out of the system, because people aren't sort of slogging through, okay, what do I got to do next to get my care? We want people to feel that they have good access to care. And so removing some of these barriers are going to be incredibly important.
Mark, what does the timeline look like for that? And in terms of some of those longer term effects or the impact that is going to have, longer term impact that is going to have on the sector, how receptive is the industry at large to maybe some of these changes?
Well, I think the industry's in a different, all the players in the industry are in different places based on their lines of business and the way they run their operation. At our company, we're largely in the individual market. And what we know is that the individual market works very well. It is the largest risk pool in America now, with 22, soon to be 23 million lives. And it has had a trend of 3.5% per year over the last 3 years, in large part because the market works for the individual in buying what they need versus having their employer or their HR department or someone in the organization that they work at decide what it is, what their coverage will be. And I think this demand for choice and things that work for me are now the places we need to go. And it's harder for larger organizations that have huge lines of business that are focused the old way to make that pivot. But I think this will accelerate that pivot as we go forward.
Mark, I wonder, on that point, the ACA is the marketplace that Oscar Health plays the most in. And with the changes coming down from the Trump administration, or potential changes, the proposals at least, how concerned are you with some of the things that we've heard, topics like deregulating the industry, cutting aid for subsidies, or premium subsidies, reducing Medicaid eligibility, and even removing pre-existing condition protections that have been part of the drivers of the ACA's popularity? Does that concern you?
Let's start with sort of the things like removing pre-existing conditions. Actually, eliminating pre-existing conditions has not cost the industry virtually anything. So we're not making any headway when you look at the data. I think having more deregulation in the amount of product offered in the ACA is incredibly important, because not everybody wants something dictated to them by the federal government on what plans are available. And there's been a fear that Americans don't have the ability to discern among plans and we get confused. It's just the opposite. With the broker community, they're actually helping members select the right plans. As it relates to subsidies and Medicaid, let's talk a bit about that. I think Medicaid was originally designed to be at 100% of the federal poverty level. It crept up to 139% because we didn't keep pace with the change in costs. If we move back to 100% and we move those 5.5 million people that are between 100 and 139 into the ACA, they're into a risk pool that A, has more product, B, has better networks in some cases, and also has a more stable cost structure. And so I think the thing we're talking about now is, how do we help people afford their health care? And so far, the ACA has worked. There are some abuses. ACA is not perfect yet in the way people sign up and how they report their income. But those are things that this year are starting to get realigned. And so I would think, particularly given that 63% of the membership in the ACA is now from red states, and we now have red states starting their own state-based exchanges to build a bigger individual market, that I think, A, the ACA is not going away, and B, there will be some form of subsidy to help those moving from Medicaid into the ACA, but also to provide a way to have a tax.
Oh, Mark, I think we are losing you.
Members in the ACA.
Oh, got that, Mark. Thank you so much. Really quick final question for you off the back of that. You talked about how the reaction from people is understandable. I wonder, combined with kind of the political moment that we're in and what you talk about, the frustration from people that we've seen play out and who they're voting for, combined with the reaction to what happened to Brian Thompson here, what is the single biggest message that you would want to express to consumers who are frustrated about the state of the insurance industry right now?
Change will happen. We are going to drive that. We believe an individual market for every American so they can buy what they need and they want in covering their healthcare costs is the way to go in the future. And we're working toward that opportunity by demonstrating to people with our NPS of 66, which is higher than the industry average of 0, that we can make the customer experience better. And by making the customer experience better, people can have more seamless access to their healthcare. And so I think that change is on the edge. I think we could use some help from the new administration in how we build that product. But I think that's the way we need to go. And I think that's the new version of healthcare for Americans versus the 80-year-old version we're living with now.
Mark Bertolini, thank you so much for joining us this morning. And thank you to our own Anjali Khemlani for bringing us the conversation. We appreciate it.
Thank you.
Coming up, TikTok fighting back after divest or ban law is upheld by judges. More on the app's future in the U.S. when Catalyst comes back.
Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail.
TikTok's China-based parent company has until January 19th to divest the social media app or face a ban in the U.S. That's unless the Supreme Court or President-elect Trump intervenes. Now, here to discuss what's next, we want to bring in Colin Costello. He's Freshfield's CFIUS and National Security Advisor. Colin, it's great to have you. And when we talk about what is next, I think the big question looming right now is the January 19th deadline. Obviously, that is the day before President-elect Trump takes office. In terms of what investors or maybe what the American public should be considering here, just in terms of the likely next steps, how do you see this progressing up until the 19th and then beyond once the Trump administration is in the White House?
Well, certainly TikTok and ByteDance have already announced that they plan to appeal this to the Supreme Court, and the court could, at least in theory, get this on a docket pretty quickly and review it. The question is really, will they grant a writ of certiorari in the first instance? And there's questions about whether or not they would even have much to review. The Circuit Court here was pretty definitive in terms of its ruling. It didn't leave a great deal of ambiguity. Its ruling that this law passes muster under strict scrutiny, the highest level of scrutiny, when you're talking about a First Amendment case. It ruled that the government has a compelling national security interest and the law is appropriately narrowly tailored, and it's a unanimous decision. So it really, of the things that the Supreme Court could review here, it's pretty limited. It's not going to be a matter of discussion whether or not the correct standard was applied. And of course, the standard of review in these types of cases is something that constitutional lawyers fret over a great deal, and the public, I think, probably doesn't care very much about. But they did apply the highest standard, so it's not going to be a subject of discussion. And TikTok, in their press release, says that the Supreme Court has a long history of upholding the First Amendment. And of course, that's very true. Even in the current composition of the court, this is sort of an area where there is pretty much unanimous agreement among the justices. But I think that TikTok may be overestimating the extent to which that unanimity might play out in a case like this, where the issue is national security.
And this morning, ByteDance and TikTok asked an appeals court to temporarily block that law that would require the divestiture here. I just want to ask the question on consumers' minds. How likely is it that TikTok is not going to be available in the United States come January 20th?
So the question then becomes, what do you mean by not available? Because obviously how the law is going to be implemented is it's going to be implemented through service providers like the App Store, like the Google Play Store, who aren't going to be able to, say, push updates or allow further downloads. So it isn't going to be the case that on the 19th or 20th, rather, everyone who has TikTok, all 130 plus million people, that app is just going to vanish from their phones. It's going to be a matter of what happens when updates need to be pushed, what happens when patches need to be released, and that can no longer be done through the App Store or Google Play Store, for instance, because I think out of an abundance of caution, certainly, no matter what the result is with respect to the Trump administration coming in and perhaps even saying that they're going to avoid or delay enforcement of the law, it would seem prudent on the behalf of companies to probably act as if this law is going to remain in effect and indeed start to enforce the quote ban via removing it from their services.
I want to play Yahoo Finance executive editor Brian Sazzi. He had a chance to sit down with Project Liberty founder Frank McCord. He had recently advanced a bid here to buy the social media site TikTok. Here's what he had to say just about the potential path forward here and his interest within the company.
Let's see if we can find a way here to make this a win-win-win, where the U.S. TikTok is split off from ByteDance. China gets compensated for that. U.S. citizens are no longer have their data scraped and have information, quote unquote, spread to them, which may or may not be accurate. And Americans can be protected, and the U.S. government can fulfill its duty to protect American citizens.
Colin, is that win-win-win scenario, is that likely? Is it realistic?
So it might be necessary. Now, what TikTok has been doing for the better part of several years now, ever since the initial CFIUS order in August of 2020 from President Trump ordering the divestiture, is they have been working with the Biden administration to develop a national security agreement. And this agreement's discussed in the court decision, which is unique because typically these agreements are quite confidential. But what you see is that what they're trying to do is a construct where they effectively have a separate U.S. entity from an IT perspective. They have a tiered system of data protection, and they have a trusted third party managing the data and reviewing the code. Well, that's going to obviously, to the extent this law magically goes away, and they just continue to exist under ByteDance ownership pursuant to a CFIUS mitigation agreement, is going to basically treat TikTok US separately, but it could also be equally applicable to an eventual sale and spinoff, if indeed that's the direction they're going in. Because notwithstanding the fact that this apparently hasn't been accepted by the Biden administration, CFIUS, they are nonetheless implementing certain aspects of it already proactively. So those things that they are already implementing could lay the groundwork for a future spinoff, which of course ByteDance has already said it has no intention of doing.
And it's interesting because this particular law targets and is focused on TikTok and ByteDance specifically, but you note that this is part of a broader national security concern for foreign involvement here. Can you talk to me about what legislation could look like moving forward that might be a little bit more of a broad approach to data security versus kind of a whack-a-mole approach to individual platforms?
Right. I mean, so what we've seen over the past 5-6 years now is that there are a variety of government authorities that have been used to address this issue of data and availability of data via apps, via the internet to foreign adversaries. And one of the major ones is obviously CFIUS, but we've also seen executive orders promulgated now on protecting American data. And what it looks like from an outsider is sort of trying to catch wind in a sieve, right? Because you're talking about trying to control the flow of data online. And in the absence of a broader framework, sort of like a US GDPR, you're going to ultimately always be in a reactive mode. You're always going to be doing this whack-a-mole approach. But, proponents of that approach might say, that's not a bad thing necessarily. A US GDPR would create a significant regulatory burden for everyone, whereas this particular approach is more narrowly tailored, and it's going to allow us to address the risks where they crop up. So I'm not sure if I see any sort of generalized appetite for a GDPR-style law in the United States, so long as this system that they have implemented and the authorities that they're bringing online appear capable of addressing specific threats.
All right, Colin, we got to leave it there. Thanks so much for joining us this morning.
My pleasure. Thank you.
Coming up, China signaling an increase in stimulus to come next year. We'll discuss what this could mean for the world's second largest economy next, right here on Catalyst.
Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail.
China is signaling a more aggressive approach to stimulus as the world's second largest economy remains in a sluggish recovery. Now, top leaders saying that they will embrace a, quote, moderately loose monetary policy in 2025. We certainly have seen that reaction play out in the markets early here this morning. But the new wording for this policy, it's the first time, the first change that we have seen, or marking the first easing of the stance that we have seen since late 2010. So making it significant there. I think the big question, Maddie, for investors is what exactly moderately loose means ultimately in terms of the longer term, how big of a stimulus, how big of a boost this will be for China's economic growth, and also just whether or not it's going to be enough. What we have heard, some of the developments over the last several weeks, we've had a couple of guests come on and talk to us about the fact that it's too early to tell. There's so much uncertainty. They're not exactly sold on what is being said here or what is being done up until this point. So again, the fact that the fact that China is adopting this appropriate loose monetary policy here, I think it also just highlights the situation, the current economic situation that's playing out there right now.
Right, and the potential of China to kind of put forward this idea that they're preparing for a tit for tat with the incoming Trump administration, shoring up their own consumers. China historically, the federal government has been very anti-stimulus for consumers. This is a shift, very historic shift from a plan that has not involved loose monetary policy since you said was implemented back in 2011 here. So a significant shift. The question here, the federal government can introduce stimulus, but the problem we've seen historically in China is that smaller local governments are a little bit more hesitant to put forward that stimulus to use in a way that does see consumer purchasing power moving to the upside. It's also interesting in the context of the news we got this morning on the NVIDIA probe from China. If you want to get Donald Trump's attention, hit the biggest stock in the S&P 500. And that is certainly what we saw this morning with NVIDIA moving to the downside. Plus, they're shoring up their commercial and consumer spending with this potential stimulus news coming in here. Is this, again, part of a tit for tat? Is it a Band-Aid, or is it something that is more serious to shore up the Chinese consumer?
Yeah, we heard from Xi Jinping just a couple of days ago on the 6th, just talking about the fact that Beijing is continuing to grow. Their growth target here remains unchanged for next year. He called for more forceful fiscal stimulus ahead of this development here, just to mitigate some of the expected tariffs that will likely be announced under Trump. But exactly, I guess the cause of it or why we are seeing this now remains up for debate, but I think it's pretty clear just in terms of the tit for tat and what we have seen play out going back to the first Trump administration.
Absolutely. Well, we're going to stick with China because China is also buying gold again after a 6-month pause as the country looks to boost investment demand. Gold prices rising on the news. Joining us now to discuss this and more, we've got Burns McKinney. He is the Senior Portfolio Manager at NFJ Investment Group. Burns, it's great to speak with you here. Talk to me about what the totality of these moves from China represents. They're buying gold, they're loosening their monetary policy, they're engaging in a little bit of a rebuffing of NVIDIA here. What does this tell you about any potential investment opportunities in Beijing?
Well, with respect, first of all, to gold, that's something, we rarely recommend our clients try to make timing bets on gold. Gold, because it's an uncorrelated asset, it offers diversification benefits if you put a small sliver of it into portfolios. Now, going back to the point of China and the fact that they're introducing both now a monetary stimulus on top of a fiscal stimulus that's already been announced a few months ago, it is, for one, I think it's positive insofar as it does indicate that the policymakers there see there's a problem. And likewise, a lot of prior generation stimulus that you've seen in China has actually come on the infrastructure side. It's come on the real estate side. Really doing something with respect to consumers would be a positive going forward. I think that there's certainly in the near term there could be a lot of volatility, especially with the tariffs that are being introduced. But for investors with patience and a long-term time horizon, you do have valuation on your side when it comes to China, and you do have as well a lot of headwinds turning to tailwinds as far as the regulatory onslaught on some of the tech companies. As well as the fact that we're now starting to see fiscal and monetary tailwinds also.
Well, Burns, and what should that strategy look like if you're looking to gain exposure to China? By how much? Where are those opportunities within there?
One of the things that we're really looking for, given the fact there is still some concern on the real estate side, is the fact that you have try to find secular tailwinds, and one of the places that you can get that would be a continually rapidly growing middle class. That's something for which you have demographics. Demographics are fairly predictable, and trying to harness the middle class in China, ways of doing that would be within some of the banks. I think that you do see a country that is fairly underbanked, places like athleisure, or that's actually a great way to get that exposure would be through some of the technology companies in China. You get things like taking advantage of e-commerce. Things like Alibaba is one that certainly has faced regulatory challenges in recent years, but they're sitting on a ton of cash. You got a name trading at 10 times earnings, which is below Amazon, below the e-commerce peers, and they have other businesses that really, for all intents and purposes, are getting for free.
All right, Burns, thanks so much.
Thank you.
That does it for Catalyst here today, but keep it right here on Yahoo Finance. Wealth dedicated to all of your personal finance needs is coming up next. Brad Smith has you for the next hour. We'll see you tomorrow.
Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail.
Welcome to Wealth, everyone. I'm Brad Smith, and this is Yahoo Finance's guide to building your financial footprint. Our community of experts will give you the resources, the tools, the tips, and the tricks that you need to grow your money. Hey, on today's show, we'll do a deep dive into your portfolio and talk to an investment strategist about the sectors that you should consider adding potentially. And we'll examine what's to come in the housing market for 2025. Where are mortgage rates heading, and what will a Trump administration mean for the sector? Plus, people age 73 and up, hear me out here. You need to take your required minimum distribution before December 31st in order to avoid a penalty from the IRS. We'll explain a little bit more on that later. But first, let's take a look at some of the market action. 90 minutes into the trading day today, stocks edging lower just a bit to start the week as we look ahead to fresh inflation data with November's Consumer Price Index CPI out on Wednesday. Joining me now, we've got Scott Ladner, who is a Horizon Investments Chief Investment Officer. Scott, good to have you on the program here with us today. What are your expectations given the week ahead and some of the consumer-focused data that we're anticipating here?
Hey, Brad, thanks for having me on, first off. And look, we are, still pretty bullish. We think that the CPI data is clearly the big number this week. And, it should cement, another Fed cut coming in later on in December. But overall, like all these consumer names that we're seeing and all the earnings reports that we have been getting over the last couple of months, they're continuing to tell the same story. Like this is a U.S. consumer that's incredibly strong, that is making, that everybody that wants a job has a job. They're getting raises above inflation, and they're spending that money. Not to even mention the sort of the untapped home equity lines of credit and the amount of savings and money market accounts and savings accounts and checking accounts that's absolutely massive and underappreciated. Overall, like when you have a consumer that is this strong, you just got to invest in because the economy is going to be doing great.
I was taking a look through some of your notes here, and normalization, one of the top words that came up for you as you're assessing the kind of macro backdrop here. And as you're thinking about normalization, what does that mean in terms of the kind of transitive narrative for the equities market and what that really holds for some of the top areas in 2025?
Yeah, I mean, look, normalization to us is something that we've been talking about for a bit. Just briefly, we have not been in a business cycle the last 3 or 4 years. The post-COVID period, essentially, more like a war and a war recovery. And this is the primary reason why the quote-unquote leading economic indicators that everybody thought a recession was coming, they frankly just didn't work because leading economic indicators require the kind of the sine wave-looking business cycle, and we just haven't been in one. But we do think we're getting back into one now. And so, the important part for investors to understand is that as we come into a more traditional business cycle type of outlook, that means you have to start looking at Fed policy more carefully. You have to start looking at fiscal policy more carefully. Where are we in this quote unquote business cycle? And we actually think we're sort of troughing on slowing growth in the U.S. economy and actually going to be accelerating again. And as you saw, with Fed and other central banks as a sort of a global backstop to risk assets. And just on the previous guest on the previous show, they were just talking about Chinese stimulus, fiscal stimulus. You got something like that coming. That's going to save Europe and save China possibly. And so then you've got coordinated global growth going on. And again, so this you just probably want to be invested in more cyclical parts of the economy plus the mega cap tech guys. That's really where the money we think is in 2025.
How much focus do you see the market continuing to have on the Fed? And I ask that because it seems like once they've begun their cutting strategy and the policy pathway in that realm of mind and that frame of mind, it seems like the markets are kind of putting that not necessarily fully on the back burner, but it's not the top of priority. And if it's not that, then where does kind of it rank among some of at least the early 2025 factors that could really reallocate some portfolio positioning from your assessment here?
Yeah, Brad, I think this is a really important question you just asked. And, we've been talking about the Fed kind of ad nauseum for like 2 or 3 years now. We shouldn't want to talk about the Fed anymore. I mean, the Fed should be in the background. And that's after this meeting in December. We think the Fed is mostly going to be in the background for 2025. This is a good thing. This means that we get to stop focusing on sort of parsing out the words of different Fed speakers, trying to read tea leaves about did he say this word or that word or whatever, try to figure out Fed policy. The Fed is just going to be in the background. And global central banks overall are going to be in the background in 2025. And this just means that we can focus on the important parts of the economy. Like, is the economy growing or shrinking? Are corporate profits doing better or worse? Is the consumer getting healthier or staying the same? The sort of the traditional things that that we can and should usually look at. We think we're going to start looking at that stuff again in 2025, but it hasn't mattered as much until now. But it's going to matter a lot more going forward than it has in the last year or two.
So some of your top sectors heading into 2025, where do you see the most opportunity? And on the other end of that, where are you avoiding?
Yeah, look, you can't. We do think this is the mid-90s, and we think that is the right analogy to be using. We've said this for a couple of years now. AI is him, as my kids would say. This is the real deal, and you got to get on board it. And so that is going to drive a lot over the next 2 or 3 years. We think in terms of valuations, in terms of market performance, in terms of productivity. So you have to be you got to be at least market awake in tech, and that is definitely going to be the place to be. Outside of sort of the generic tech stuff. You probably want to start looking at some sectors that are going to be Trump adjacent or at least Trump helpful. Think things like financials, which we have frankly hated for several years now. But financials could be in a sort of an acquiring space. And they're going to start doing M&A again because of a more friendly regulatory environment. Also look at things like aerospace and defense. Because frankly, if Trump can bully Europe and other places into spending more money on their defense, that means they're going to buy things from firms like Lockheed Martin and other U.S. Sort of defense suppliers. So those types of sectors we think could actually get a boost. In terms of things that we don't like that much, one of the people think that is Trump adjacent or kind of a Trump friendly trade is energy. Because of the drill baby drill mantra and everything else. But drill baby drill is not helpful for the price of the commodity. It actually puts kind of a lid on the price of the commodity, and that's actually not helpful for the equity securities for inside the energy space. So we really don't like energy very much. The other one we don't like very much is consumer staples. Consumer staples really need one of two things to work. They either need inflation or they need a recession. We got neither. And so it's not that you necessarily lose money in consumer staples, but they're certainly not going to keep up with the market that we think is going to be pretty darn strong through 2025.
Scott, thanks so much for taking the time here with us. Really appreciate it.
Appreciate it, Brad.
Now time for some of today's trending tickers. You can scan the QR code below to track the best and worst performing stocks of the session with Yahoo Finance's trending tickers page. First up, let's go to Warner Brothers Discovery, reaching a multi-year renewal deal with Comcast to provide its content with networks like TNT, the Food Network, and CNN to Comcast subscribers. The agreement also expands Comcast's rights to package ad-supported versions of Max and Discovery Plus in its streaming bundles. The deal comes amid growing challenges in the sector as consumers continue to cut their cable packages in favor of streaming services. Next up, SoFi has been cut to outperform from neutral by Bank of America. This is a valuation call. The analyst arguing the post-election Trump-fueled rally has pushed the stock price too high compared to company performance. However, the analyst does see upside from potentially less loan forgiveness policies under a Trump administration. Finally, PayPal getting an upgrade at Bank of America to buy from neutral. The analyst citing demonstrated turnaround progress, and the company sees potential for acceleration in transaction profit growth next year. Bank of America lifting its price target to $103 from $86. Well, Workday and Apollo Global Management, Yahoo Finance's parent company, will join the S&P 500 index before the market open on Monday, December 23rd. And AppLovin, an AI play that is up more than 700% this year, was not chosen to be in the index. So how does that happen, and what goes into picking a stock for the S&P 500? Yahoo Finance's Jared Blickery has the details for us. Hey, Jared.
Thank you, Brad. While it's tempting to think of the S&P 500 as this monolithic collection of giant stocks, its composition actually changes a few times a year. And the world's largest stock index has two smaller cousins. You have the S&P 400 that follows the mid caps, and the S&P 600, which houses small caps. Exactly who gets added to these three indices, it's decided by a committee over at S&P Dow Jones Indices. Oftentimes, they're just moving stocks from one of the indices to the other as they get bigger or smaller in price and value. Now, the committee just announced that on December 23rd, Corvo and Amentum Holdings, currently in the S&P 500, they're going to get bumped down to the S&P 600, which holds those small caps. In their place, Workday and Apollo Global Management, again the parent company of Yahoo, are getting added to the S&P 500. It's a big deal, and among the requirements are a market cap or value of $18 billion or more, and the company has to have been profitable for the last 4 quarters. Inclusion, it's not automatic. However, the committee has wide latitude to consider other factors that might be in the best interest of the investors and the indices. So Tesla is a good example. You might remember that the EV stock was added to the S&P 500 way back in December 2020, and it seemed to take a long time for Elon fans. But the committee finally wanted to see consistent profits, and then it was added. And when it was finally announced, Tesla, it got a big pop. It was up 20% over the next 2 days and up 70% over the following month into the day when it was officially added. Now, Tesla is up an additional 70% since then, having hit $400 per share, which is the highest price since January of 2022. And let's go to the Wi-Fi Interactive, and I'm going to chart this real quickly. We're going to see 1,021 days have elapsed since Tesla was first announced that it was going to join the S&P. Then when it did, there was a tiny little dip. You can't even see it here on this chart. Then it raced up here, and this is the 70% gain that I was talking about. And then we got a little bit of a pullback, and then we got the race to all-time highs, which we are now challenging. And I thought we'd do a little technical analysis on Apollo Global Management, and you can see, and let's just do a year-to-date chart here, you can see it's up almost 90%, having done most of that climb since the middle of the year. And we can also take a look at Workday, which is not performing quite as well this year. Let's see if we can get a one-year chart. Well, not participating, but it's up a few percentage points this year, and really what the committee was looking for was that consistent profitability. So we'll have to see what happens come December 23rd, but we will see a little bit of a difference in the change in composition of the S&P 500.
Yeah, it looks like year-to-date, the stock up by about 5% for Workday here. Just taking a quick look at a chart I could load up here in the absence of participation there on your screen, Jared. Thanks so much. Appreciate it. Coming up, everyone, how to approach Bitcoin after it hit the $100,000 milestone. That's next on Wealth.
From creating graphics cards for gaming to becoming one of the world's leading AI chip companies, it's safe to say NVIDIA is officially one of the tech giants. In 2023, the company generated nearly $27 billion in revenue.
News when you want it with Bloomberg News Now. I'm Nathan Hager. We have word of potential sweet news in the deal space. Bloomberg News has learned Mondelez, the maker of Ritz crackers and Oreo cookies, is exploring an acquisition of Hershey. The deal would create a food giant with combined sales of almost $50 billion. Bloomberg's Matt Miller has more.
Hershey has a market cap of about $35 billion. Mondelez is a much bigger company, about $84 billion. It's not the first time that Mondelez has looked for a deal with Hershey, has attempted to buy the company in 2016. It walked away from discussions about a potential acquisition after seeing a $23 billion bid rejected by the chocolate maker. And of course, it is now 50% bigger.
Bloomberg's Matt Miller, and on word of this possible acquisition, exploration of a deal. Hershey shares are higher by 15%, their biggest gain in more than 4 years. Mondelez is lower by 3%. We have
तो गाइस गोल्ड को देखोगे तो रेजिस्टेंस एरिया से फॉल किया है थोड़ा बहुत तो नीचे आ गया है. लेट्स सी कहां तक मूव करता है. बीच में ऐसा कोई सडन सपोर्ट तो नहीं है. एक दो एफईजी है जहां पर रुक सकता है प्राइस थोड़ा बहुत. ट्रिपल सिक्स यहाँ पर थोड़ा बहुत रुकने की पॉसिबिलिटी है. 50% लेवल हो चुका है करेक्शन में. सकता है इस पर्टिकुलर जोन 2665 के अप्रोक्सीमेटली 15 मिनट टाइम फ्रेम. नेचुरल गैस देखोगे तो ब्रेकडाउन रीटेस्ट किया. ऊपर से सेलिंग थी, ब्रेकडाउन रीटेस्ट के बाद भी नीचे आ गया. वो नीचे एक रीटेस्ट जोन और था, वहां से फिर से बाइंग आई. टारगेट इतना ही है ऊपर रीटेस्ट तक, वहां से फिर से थोड़ा बहुत रिजेक्शन मिलना चाहिए. देखना पड़ेगा फिर से कितना रिजेक्शन लेता है. मेरे अकॉर्डिंग अगर ये फास्ट रिजेक्शन नहीं लेता है यहाँ से तो मोस्ट प्रोबेबली साइडवे चला जाना चाहिए. इस रेस्ट जो आपका ब्रेकडाउन रीटेस्ट वाला लेवल है इसको ऑक्यूपाइड कर लेना चाहिए कंप्लीटली, अगर ये थोड़ा सा फास्ट मोमेंटम नहीं आता है. दो किसी भी डायरेक्शन पे आ जाए, अप साइड या डाउन साइड. बाकी देखो ये 2 बार रीटेस्ट कर चुका है. इंपॉर्टेंट क्या है अब कि ये हायर हाई बनाएगा नहीं बनाएगा. यहाँ से एक हाई बना है, अगर ये फिर से हायर हाई बना देता है तो ये रीटेस्ट फिर भी इंटैक्ट रहेगा. अगर ये हायर हाई नहीं बना पाता है रीटेस्ट पे तो फिर ये रीटेस्ट गया. ब्रेक डाउन होके। तो ध्यान रखना, वापस नीचे आएगा तो सेल बाइंग तभी करना जब अगर हायर हाई फॉर्म होता है, नहीं होता है तो फिर नेक्स्ट लेवल का वेट करेंगे 260 के अराउंड। करते रहो गाइस, डोंट फॉरगेट टू लाइक दिस स्ट्रीम। क्रूड ऑयल देखो थोड़ा सा बुलिश साइड पर ही है। एक सेकंड, इसका एमसीएक्स का लेवल है, फॉरेक्स का लगाया हुआ है शायद। को भी देखोगे तो वही रेजिस्टेंस पे साइडवे चला गया। गोल्ड तो थोड़ा बहुत रेजिस्टेंस से नीचे आया। सिल्वर रेजिस्टेंस पर ही है, साइडवे चला गया शायद, आई थिंक। यप, थोड़ी बहुत सेलिंग आई है बट कुछ खास नहीं, रेजिस्टेंस पर ही कहेंगे, सेलिंग तो नहीं कह सकते इसको इन 15 मिनट टाइम फ्रेम। ऑयल रेजिस्टेंस पर ही कहेंगे, थोड़ा सा ऊपर वाला जो लेवल लगा है ये एमसीएक्स का नहीं है, फॉरेक्स का लगा हुआ है, सॉरी। थोड़ा सा डिफरेंस है चार्ट में एमसीएक्स और फॉरेक्स में। है रीटेस्ट ही, रेजिस्टेंस से तो सेलिंग आ नहीं रही है। नीचे आता है तो प्राइस ट्राई कर सकता है नीचे एफईजी। बाकी नीचे एफईजी पे और कोई सपोर्ट तो नहीं है यहाँ पर, लाइक दैट कोई स्ट्रॉन्ग सपोर्ट हो। आता है तो यहाँ तक एक्सपेक्ट कर सकते हैं 5795। ओके, नेचुरल गैस वापस रीटेस्ट पे पहुंच गया, लेट्स सी फिर से रीटेस्ट करता है क्या। जो लोग बाइंग में हैं वो लोग निकल सकते हैं। नेचुरल गैस रीटेस्ट पे बाई किया था, याद रखना ये ऊपर वाला भी रीटेस्ट ही जो है ऑलरेडी एक बार रीटेस्ट कर चुका है ये लास्ट कैंडल पे। यहाँ पे ये सेकंड टाइम आ रहा है यहाँ पर।
Breaking news at the Supreme Court as well. The justices have turned away a new challenge to school admissions policies, rejecting an appeal that claimed 3 Boston schools discriminated against white and Asian American students with a neighborhood-based system that was in effect for just 1 year during COVID. This is the second time this year that the Supreme Court's opted not to extend its 2022 decision against race as a factor in college admissions. In Syria, the al-Qaeda splinter group that led the charge against Bashar al-Assad's government over the weekend is tasking political chief Mohammed al-Bashir to form a transitional government. Assad is now in Moscow, granted asylum after the downfall of his regime. White House National Security Advisor Jake Sullivan says he'll visit Israel this week to discuss the latest developments.
We're prepared to work with anyone in Syria who wants a stable, inclusive, democratic future for that country. That's what we intend to drive toward.
National Security Advisor Jake Sullivan spoke on ABC News. Bloomberg's Rosalind Matheson says plenty of questions remain about what a post-Assad Syria will look like.
You've got the main rebel group, obviously, that swept into Damascus on the weekend, but there are a lot of groups operating in Syria at the moment. It's unclear when or how any of those will work together to potentially form a new administration. And what does that look like when you move from being sort of a militant group to being a political operator in Syria?
Bloomberg's Roz Matheson, but with Syrian backers Iran and Russia now showing signs of weakness, Israeli Finance Minister Bezalel Smotrich says the incoming Trump administration offers a chance at 3 things: overthrow of the Iranian government, prevention of a Palestinian state, and stopping Lebanese villages from being rebuilt along the Israeli border. In an interview with Bloomberg News, Smotrich said Israel should join hands with the new Trump administration. It's unclear, though, if Trump would back a move to topple Iran. Geopolitical tensions may be overshadowing the first shift in monetary policy from China in more than a decade. Bloomberg's Enda Curran has that from Washington.
They're talking about they now want moderately loose monetary policy. That's the shift, putting monetary policy back to where it was during the global financial crisis. There's language in there around wanting to spend more. There's language in there around extraordinary counter-cyclical measures. That's jargon for, willing to pull whatever levers they can to get things going.
Bloomberg's Enda Curran reporting. Meantime, China has opened a probe into NVIDIA over suspicions the AI chip giant broke that country's anti-monopoly laws. Bloomberg Intelligence senior tech analyst Mandeep Singh says this adds to NVIDIA's antitrust scrutiny.
When I look at NVIDIA, they've already gotten a subpoena from the DOJ about, a potential monopoly with the chips, and they do have a 90% plus share when it comes to the accelerator market.
Mandeep Singh of Bloomberg Intelligence. Right now, NVIDIA shares are lower by about 2%. And in another case tied up in U.S.-China trade tensions, TikTok has asked a federal appeals court in Washington to put the law forcing a potential sale of the Chinese-owned app on hold so the Supreme Court can review it. Hollywood awards season is underway. The Golden Globe nominations have been announced, and Netflix drug lord musical Emilia Perez leads the film categories with 10 nominations. That beats out other contenders like Wicked and Conclave. Big stars like Zendaya, Angelina Jolie, Daniel Craig, Denzel Washington, and Ariana Grande all picked up acting nominations. The Golden Globes air January 5th on CBS and on Paramount+. Looking at the market, it's moving a bit lower now with the S&P 500 down 0.2%. The Dow Jones Industrial Average is little changed. The NASDAQ Composite down about 0.1%. 10-year Treasury yield up about 3 basis points to 4.18%. And that's News when you want it with Bloomberg News Now. I'm Nathan Hager, and this is
The
Bloomberg.
fundamentals of the company are also great. Palantir, if you look at its year-over-year, quarter-over-quarter growth, phenomenal.
Are you looking
Tesla,
for a
right
new
now,
podcast
the
about
FSB
stuff
13,
related to
quality is
money?
great. The cyber
Well,
cap-
today's your lucky day.
I'm Matt Levine.
And I'm Katie Greifeld.
Are you looking for a new podcast about stuff related to money? Every Friday,
today's
we
your
dive into
lucky
the top
day.
stories about Wall Street, Matt Levine, finance,
And I'm Katie
other stuff.
Greifeld.
And
We
we're
have
the hosts
fun,
of
we get
Money Stuff, the podcast. Every Friday, we dive into the top stories about Wall Street, finance,
weird, and we
other
want you to
stuff.
join us. We have
can listen
fun,
to-
we get weird, and we want you to join us.
You can listen to Money Stuff, the podcast on Apple Podcasts, Spotify, or wherever you get your podcasts.
Bloomberg Audio Studio.
to get something done. And we do know that housing was the talking point on the campaign, that the Trump campaign recognized very much that we don't have enough houses. Housing, as a result, is too expensive. And so we need to bolster supply in order to help improve affordability in the housing market. He's got some proposals for how to do that. I think what will ultimately matter is how those proposals become policy. And for that, we're still playing the waiting game as we move into 2025.
You know, it's interesting in what we had heard on the campaign trails and bringing mortgage rates back down to 3%. It seems like that is unlikely to happen. But what is perhaps the most likely outcome of where we could see housing affordability moving towards once we do get a new Congress and then additionally a new President-elect Trump taking the office?
Yeah, so I don't think we're going to see mortgage rates move all the way back down to where they were over the last few years. Our expectation is that we'll see mortgage rates edge down to 6.2% by the end of 2025, and that'll mean an average mortgage rate of 6.3% across the year, because we expect home prices to continue to climb, but not as quickly as we saw in 2024. That means that those falling mortgage rates will basically help offset that gain in home prices, and monthly payments will be relatively flat. If we combine that with a healthy economic backdrop, which we expect, it means incomes go up, and we should see affordability improve very modestly for home shoppers in 2025.
And what about for people who are just waiting for the right time to actually list their homes? Are we anticipating a major shift in at least the mentality around what the timing is for listing their homes and what they would need to see in the propensity for buyers who are ready to come off the sidelines?
I still expect spring to be the peak season, but I do think as mortgage rates come down throughout the course of 2025, then we're likely to see some improved conditions in the second half of the year. But again, spring and summer is still going to be that peak home buying and selling season. Sellers are in some ways impacted by mortgage rates just like buyers, because many sellers have a low existing mortgage rate that kind of has kept them locked in place. As mortgage rates come down, that will help ease some of the pull of that lock-in effect, but that's going to be a really slow process. So it's going to be life events that drive selling decisions. People who've maybe put off selling, even though their home situation has changed, might be able to move forward in 2025. We expect to see inventory climb by 11.7%. That's not going to get us all the way back to pre-pandemic levels of inventory, but it is going to continue to chip away at that. And we're going to see likely the highest levels of inventory that we've seen since 2020 in the year ahead.
I see within your forecast, you're also expecting home prices to continue to rise in 2025, slightly lower pace here of 3.7%. And I wonder how much does regionality also play into that? People who are looking across affordability in regions, people who are looking across even weather and where they would be moving to in order to potentially offset what they've had in the back of their minds as a major deterrent for why they would purchase in one area or another.
Yeah, that's a really interesting question. So we've got kind of different factors pushing things along there. So in the South, we've seen inventory recover better, and so we expect to see somewhat weaker price performance in some markets in the South. Other markets in the South are going to see stronger price performance, where we've seen a lot of new construction go up, and so a shift of the share of homes that are selling that are existing versus new. So the South is going to be a big mixed bag. I'm talking about the South as well because you asked about weather risks, and we do know that the South has some substantial climate risk, especially the Southeast, along areas that are impacted by hurricanes. That information is available to home shoppers on sites like Realtor.com. So anyone who is considering those risks or making a home purchase in an area that maybe they're not familiar with should be sure to check out that information and make sure that they are informed about the risks and find out a little bit what that means. It can make it harder in some cases to get home insurance. You'll also want to consider getting flood insurance alongside your regular homeowner's insurance. So especially if you're moving to a different area that has different risks, it's worth exploring those. It's not just flood, but also wind and fire and heat and air quality risk information that is available on Realtor.com and many other real estate websites. So it's never been easier to get informed, and I highly recommend that consumers do that.
Absolutely. Danielle, just one more while we have you here. As we think about the effective household tax rate, what are the biggest changes that home buyers and homeowners should be anticipating going into next year, given what we've heard along campaign trails going into the election, and now once we finally do see some, of course, anticipated movement within Washington, D.C.?
Well, I had hoped it was going to move earlier in the year. It sounds like now tax changes are going to happen later in 2025, which means they'll probably take effect in 2026 and not before then. But I do expect rates to at least stay the same and maybe improve for some brackets. I think there's been talk about the state and local tax deduction that could be impactful for certain pockets of the housing market, particularly in high-cost areas. So it would be nice if that got done sooner, but I think we're going to have to wait a little bit longer to see some changes there.
Danielle, thanks so much for taking the time with us today. Appreciate it.
Absolutely.
Coming up, everyone, we've got your Yahoo Finance market update. We'll check out how stocks are moving and run through 3 stories that you don't want to miss. Stay tuned.
Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free
For our chart of the day, we are taking a look at inflation expectations between the political parties. Yahoo Finance's Julie Hyman joins me now with a closer look. Julie.
Yeah, this is something that we have been watching and seeing this phenomenon, and it's especially measured by the University of Michigan's sentiment survey. They measure how different political parties, members of different political parties feel about the economy, and they also measure their inflation expectations. And it's that chart that was highlighted in a tweet by Michael McDonough, who's in the economics department over at Bloomberg today, looking at the flip that we have seen in inflation expectations over the next year between Democrats and Republicans since the election. So the white line you see here is Republican expectations for inflation, Democrats' expectations in blue, and independents in the sort of amber line in the middle here. Republicans, as you can see, going back to December 2021, they were feeling like inflation was going to remain much more elevated than Democrats were. We've seen them both trend down, but there's been that gap between the two, of course. Now, since the election, we have seen a flip. Democrats now, their one-year expectations at 3.2%. Republicans have fallen below them to 1.3%, and independents right in the middle, 2.9%. Incidentally, 2.9% is also where the average of the survey reading is. Well, why are inflation expectations important? Well, they have an influence on where inflation will actually end up, because customers and shoppers' willingness to pay certain prices. If you expect the prices to go up, well, maybe you're more resigned to those higher prices. You're more willing. You're not going to press back against them. At least that's one of the ways that these expectations can feed into where inflation actually ends up. And the political divide, as always, is quite interesting, especially since the election and that flip in sentiment here. So we'll see how this ends up actually feeding through and where inflation numbers actually end up. Of course, as we've been talking about, Josh, we've got CPI coming out next week on Wednesday. So expectations aside, we'll see where the number actually lands.
Yeah, it's interesting, Julie, because I've seen other polling and survey work showing that breaking down how views of not just the of the inflation have shifted, but in fact even views of overall economy has shifted too, depending on where you sit on the ideological aisle, which I guess just bottom line emphasizes
benefits when choosing what card to shop with, while 15% are planning to open a new card this year specifically for those purchases. According to the Federal Reserve, Americans' credit card balances rose by $24 billion in the third quarter, making for a total outstanding balance of $1.2 trillion. And after Cyber Monday saw the highest level of e-commerce spending in history, topping $13 billion, it's pretty safe to say that at least some of those purchases were put on credit. If you're not sure where to begin searching for a new card, Experian, they rolled out a new tool, the No Ding Decline, that allows consumers to see what cards match their current level of income, spending, and household debt. There's 3 steps. Log in or create an account. You can compare your matches using that Experian tool and then submit your applications. And here's the best part, potentially. Any cards marked as No Ding Decline will not negatively impact your FICO score if you're rejected. Now, Experian says that almost 70% of users should have at least one No Ding Decline offer. If you're age 73 or older, listen up here. A deadline is fast approaching for you to take what's called your required minimum distribution, or RMD. Here to explain it, we've got Rita Asaf, who is the Fidelity Investments Vice President of Retirement Products. Rita, great to have you here with us. Start off simple, perhaps, with us. What is your RMD?
Sure. Thank you for having me. So when you reach age 73, you are required to withdraw a certain amount from your retirement plans, generally pre-tax or tax-deferred balances, such as IRAs or 401ks. And this is called a required minimum distribution, or you might see it abbreviated to RMD. And at a basic level, the IRS is now requiring you to take from these accounts with a deadline of December 31st each year, unless you're a first-time RMDer, meaning you're turning 73, you can actually delay that first-time RMD until April of the following year. And so the requirement itself may seem more than you would expect. And actually, Fidelity has found that almost 48% of our RMD eligible clients have not taken any RMD as of right now into satisfying it before that 12/31 deadline. And that's a little troubling because you may face a penalty, which is equal to 25% of the amount not taken.
Wow. Okay, so how does someone calculate their RMD for 2024?
Well, what you normally do is take the balance of what your account was on December 31st and then divide it by what we call life expectancy factor, which is set by the IRS. And I know that's a complex term, but this corresponds with what your age and what is known as the IRS uniform table. So if we just use an example, let's say you have an IRA account balance of $100,000 as of December 31st, and this is of the prior year. To calculate your RMD, you would use a life expectancy factor of 26.5 if you're 73. So if you just take 100,000 divided by 26.5, it's about $3,773, so $3,773. But here's the good news. Almost every provider provides your RMD amount, so there's nothing to worry about you actually calculating. It is provided for you. And we do see clients taking advantage of what we call automatic withdrawals to help them avoid missing that deadline.
So what happens if you forget to take your RMD? Are there any backstops to that IRS penalty that you just mentioned?
There are. If you take the RMD in what is referred to as timely by the IRS, which is generally reported as within 2 years of when you miss that RMD, you can actually bring down that penalty from 25% to 10%. But you really want to try to avoid missing that penalty just because it's another tax implication for you. And it's best if you can just to set up those automatic reminders or automatic withdrawals so that you no longer have to worry about it.
So what are reasons that people give for not taking their RMD?
A lot of the times they forget. And one of the complexities that actually comes up is the fact that they have retirement accounts of multiple providers. So they may not realize that they have to take RMDs from different accounts with multiple providers, and that adds to the confusion. And that's where it's important where you have this retirement income plan where you know where your accounts are and know where you need to take the withdrawals so that you can best support what your withdrawal strategy is.
You know, with all this in mind, what is the taxation that is typical for RMDs? How are they taxed?
So they're generally taxed as income or ordinary income in the year that they're taken. If you, for some reason, have after-tax money, including non-deductible contributions, which is usually in a traditional IRA, you will have to calculate your RMD based on that total balance, but your taxable income may be reduced proportionally for the after-tax amount. So it is ordinary income, although we find that people pay it differently, whether they do it right at the moment of the transaction or they do it as one lump sum, taking for all their RMDs at a later time of the year.
And lastly, while we have you, what should retirees ultimately do with their RMD?
Well, some people do live off of it, and that is another way to supplement their retirement income. But we do have other ways that we think through to help clients, which is you can invest it. So if you don't need it for your day-to-day living expenses, this is where you can transfer it to a non-retirement account and reinvest it, or even gift for future generations. Thinking of just like a 529 for grandchildren. Second, you could spend it. So that's just one option. Use it for travel, use it for fun. And then lastly, you can gift it. So one way to avoid the taxation on an RMD is to do what we call a qualified charitable distribution. So that'll help you lower your taxable income, and this is a good way to give back to your favorite charity.
Very nice. All right, Rita Asaf, thanks so much for taking the time and the breakdown on all things RMDs. Appreciate it.
Thank you for having me.
Certainly. Let's get a quick check of the markets here as we've seen some stocks pulling back from record highs, and we're checking in on the major averages. They say check in on your friends, and we're doing just that. The Dow Jones, that's down by about 0.1% as of right now, just below that 45,000 marker, ultimately down here on the day by about 53 points. 0.1% is what that equates to. The NASDAQ composite, you're seeing that right now lower by about 0.5%, and the S&P 500 down by about 0.4% right now. We're going to get some big economic data coming ahead of the Fed's final meeting, the FOMC final meeting for 2024, December 17th through 18th is when that is taking place. But ahead of that, we're actually going to get some key data in the form of CPI, and that perhaps will inform some of the conversation that is set to take place. With that in mind, I'm just going to take a brief look at some of the retail stocks going into that. And as we're taking a look at retail here on the day, you've got some of the major e-commerce and just commerce as a whole players moving lower, at least for Walmart down right now by about 1.8%. Amazon is still holding on to some gains right now to the tune of about 0.75%. It had touched negative territory earlier in trading, so we'll see exactly where that moves as we move on throughout the rest of today's trading session. Costco, another name that's going to be reporting earnings this week. You're seeing that down by about 1% here, so we're going to be keeping tabs there as well. And just more broadly on a sector basis, as we're taking a look and as we were running through some of those major names here that you're seeing within that retail landscape, I'm just going to take a quick look at the sector activity here, as long as the board will cooperate, and since it won't, perhaps we'll leave things right there. And there we are. So sectors, 11 sectors on the S&P 500 loaded up here on the screen. And just quickly, let's take a look at some of the consumer discretionary names. That's down 0.3% on the day. And consumer staples, flat just barely to the downside as of right now. So we'll be continuing to track some of that movement. Of course, we haven't even hit lunchtime here in New York just yet. A lot of trading activity left. Coming up, if you, like most Americans, are looking to progress in your career, stay tuned. We have tips from an expert next on Wealth.
Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail.
And other insurance companies, including Humana, Blue Cross Blue Shield, have removed executive bio pages from their websites, while CVS and Cigna have removed images of their top executives. Joining us now for more on the state of the healthcare industry and the insurance industry, we want to bring in Mark Bertolini. He's Oscar Health's CEO and former Aetna CEO, as well as our healthcare reporter, Yahoo Finance's Anjali Khemlani. Mark, it's great to have you. Thank you so much for making the time to join us. We want to start with the tragic event that played out last week. In terms of how you are looking at this as the CEO of Oscar, some of the discussions I'm sure that you've been having with others within your industries, what steps are you taking to help mitigate some of the risk, particularly in terms of the executive security right now within the industry, and specifically at Oscar?
Well, I think we always have building protection anyway. At work, we think our employees are going to be safe. I think it's really moving around and being in the public that raises some concerns at the executive level. I think in this case, largely the CEO level. We take all sorts of precautions that we have been doing for a long time. I've been used to it for a long time in my career. And so while this act in itself was unconscionable, the behavior of the American public in reaction to it is understandable given how frustrated people are with the state of our healthcare system in the United States.
Yeah, Mark, Anjali here. Great to have you on. I know that, when we were initially planning to talk 2 weeks ago, the conversation was going to be entirely different, which was about the incoming Trump administration, which we will get to. But I'd love to get a little bit more of your thought process on right now. You said it yourself, the reaction from the public isn't surprising. We've heard from security agencies talking about a rise in violence in the health sector, largely in the facilities themselves, especially in the last year and a half. What does that tell you about what you need to expect and how you're thinking about the company and where it needs to go in order to help reduce this tension that is clearly being felt by the American public?
Well, the American public exists in a system that was designed 80 years ago after World War II. And it was designed in a way that we built a lot of hospitals across the country. And we also provided benefits free through employers as a way of making wage control work after the return of soldiers from World War II. And I think that system is largely now broken, and it has been broken for some time. I've been an advocate for change for a long time and believe that we have ways to get it better in this country. And I think it largely starts with making sure our health system meets the needs of individuals, not the needs of groups. And right now, our system, in large part, is built around meeting the needs of groups.
Mark, I want to talk about some of the change that we have seen in response to the online response here. Blue Cross Blue Shield, as you know, rolling back a change to their anesthesia policy that would require additional payment from consumers if the anesthetic did have to last longer than it was presumed to last ahead of the surgery here. Do you anticipate more changes like that to come off the back of this online reaction?
Yeah, I think at Oscar, we've actually designed an HMO product that is frictionless for members. They don't get in the middle of pre-certification or authorizations. We do that with the doctor, and we do that digitally as ways of moving that fog of behavior out of the consumer's view and focusing really on the very few things that we actually reject every year. And things that we know are subject to abuse, instead of authorizing and requiring referrals on everything. And I think that takes some of the noise out of the system, because people aren't sort of slogging through, okay, what do I got to do next to get my care? We want people to feel that they have good access to care. And so removing some of these barriers are going to be incredibly important.
Time for some of today's trending tickers. You can scan the QR code below to track the best and worst performing stocks of the session with Yahoo Finance's trending tickers page. First up, let's go to Warner Brothers Discovery, reaching a multi-year renewal deal with Comcast to provide its content with networks like TNT, the Food Network, and CNN to Comcast subscribers. The agreement also expands Comcast's rights to package ad-supported versions of Max and Discovery Plus in its streaming bundles. The deal comes amid growing challenges in the sector as consumers continue to cut their cable packages in favor of streaming services. Next up, SoFi has been cut to outperform from neutral by Bank of America. This is a valuation call. The analyst arguing the post-election Trump-fueled rally has pushed the stock price too high compared to company performance. However, the analyst does see upside from potentially less loan forgiveness policies under a Trump administration. Finally, PayPal getting an upgrade at Bank of America to buy from neutral. The analyst citing demonstrated turnaround progress, and the company sees potential for acceleration in transaction profit growth next year. Bank of America lifting its price target to $103 from $86.
And markets are currently pricing in an 87% chance of a 25 basis point rate cut ahead of two key inflation prints that are coming out later this week. I want to bring in Jennifer Lee, a senior economist and managing director at BMO Capital Markets. And Jennifer, it's great to have you back here on Yahoo Finance. Let's talk about what exactly is at stake here with these two inflation prints. I guess how critical are they in how the Fed is thinking about how much progress we have seen in terms of the fight to tame inflation, what ultimately it will signal about the path forward?
So good morning, and thank you very much for having me on. You know, the data are always important, but I got to say these days it's almost like less important, especially on the inflation front. I mean, we know that, inflation has been coming down. We're no longer at, 9% or whatever it was a couple of years ago. And the Fed chair said a few weeks ago that, that he believes that inflation is heading sustainably back down to that 2% target. I think what's probably more interesting at this point is what's going to happen next year, and with the planned tariffs that are going to be kicking in. Who knows? Maybe on day one of the new presidency. So that I think is going to be more worrisome, I think, for the Federal Reserve. So, I think a 25 basis point cut in a couple of weeks is almost like baked in, unless it's something outrageously weird happening in the November CPI numbers and the PPI numbers. I think it's more it's more important to see what they're going to say, what the communication is going to be after they make their announcement at the next meeting.
So it sounds like you are not anticipating us getting any kind of whispers from the Fed through a Nick Timrose article at the Wall Street Journal heading into that December 18th meeting.
It seems like we always do somehow get a little bit of a whisper, but again, actually it'd be very interesting to see what he says. But assuming that, inflation is up modestly, on a month-to-month basis, we see roughly the year-over-year heading a little bit higher, still a bit too hot for the Fed's comfort. We might see some stickiness still in housing, in the services sector in particular. That's going to prompt, probably just again a 25 rate cut. But we're going to see what they say, what the communication is, what their forward guidance is going to be. And I think they're going to be highly, highly data dependent. And there's going to be a lot, that's going to be happening in the first couple of months of next year that will help determine which direction. Actually, we're assuming that they're going to continue cutting, just more like the cadence or the pace at which they're cutting will be determined, I think, with whatever happens in the new year.
Jennifer, what is your assessment just of where things stand? Obviously, we talk so much about inflation, but when you take a look at the jobs market, especially on the heels of the print that we got just last week, is there anything that is still concerning to you, or when you take a look at the print last week, aside from the unemployment rate ticking up just a bit, it really shows the fact that the labor market does remain resilient and on strong footing?
It is. I'm very interested in the wage front in particular. We saw it still decent, a little bit higher than expected, average hourly earnings pace. We saw that in the latest personal income and spending numbers, up about 0.4, 0.5%, which is what the average we've been seeing over the past year. And that's good news for consumers. It shows that, besides the fact that the labor market is still pretty healthy, we've got decent job growth, we've got decent wage growth, and that underpins a stronger consumer going forward. But of course, it all depends on how much prices are going to be rising, whether or not inflation is going to be really flaring higher or not in the coming year, and that will also help determine consumer spending. But as long as they have something put aside for a rainy day, as long as they tuck a little bit aside for in their savings, I think the consumer will be well placed to deal with higher prices, or at least slightly higher prices.
Well, one reason they may be well placed is because we're continuing to see wages growing up. Morgan Stanley this morning noting that aggregate payroll incomes are rising at a 5.5% annual rate, and that's continued to accelerate every single month over the past few months. When does that wage growth start to stoke more demand and therefore reignite inflation?
So we could potentially see some pulling forward of spending. If consumers are, again, with some decent savings, behind them, if they are anticipating higher prices in the coming months, you could see some pickup in consumer spending, and that could flare potentially more inflation, and that would be something that will not be welcomed by the Fed. So this is something we would have to certainly keep an eye on. But I think it's not just like spending on a month-to-month basis. Again, it's how much they're putting aside, which is, I think, more very important. Again, just to show that they are well placed to deal with anything that comes their way, or almost anything that comes their way. As long as there's some savings put aside, I think it leaves the consumer in good shape.
Building on the Trump policies and what we could see play out here over the next several months, next 4 years, how should investors just be thinking about that, just in terms of the economic side of things, what ultimately it's going to mean for economic growth?
I'm going to have to say to expect the unexpected. Uncertainty is going to be one of those certain things to play out, and you just have to be very cautious. And again, depending on how the tariffs play out, whether or not we are going to actually see, that 10, 20% blanket tariff on everything that's coming into the U.S. If it indeed will be 60 or 70% on imports coming from China, that could push prices higher. Of course, all of it will depend on what U.S. businesses are going to do with those higher prices. Are they going to eat it, or are they going to pass it along to the end consumer? And most likely they're going to, pass it along to their customers. And that will be playing out in the higher inflation front. So we have to be very cautious to see how that plays out. And of course, what retaliatory measures are coming back as well from the U.S., whether or not their trading partners will sort of take it, or they will say, we are going to tariff your things as well. So a lot of things, a lot of balls up in the air, and so much uncertainty. So I think you have to be very cautious heading into the new year.
All right, Jennifer Lee, thanks so much.
We're taking a closer look at some trending tickers moving on the back of analyst calls. First up, Bank of America seeing more upside for Tesla, raising its price target to $400 from $350. This comes after the analyst John Murphy visited the company's Gigafactory in Austin. Murphy writing that the trip increased his confidence that Tesla is well positioned to grow next year, particularly with new vehicles and the launch of its robo-taxis and longer-term optimism from Optimist Investments there. The analyst also saying that there's more opportunity for margin improvement there. I love a good robot story.
Always.
Optimist.
So does the street. It's up just about 3%.
Yeah.
All right, plus Reddit getting an upgrade at Morgan Stanley to overweight from equal weight. The analyst there nearly tripling its price target on the stock to $200 a share. That's up from $70 a share, and that's a street high. Brian Nowak writing that they have been wrong on the sidelines with Reddit this year, but he doesn't think that they've missed the boat completely. That's why they have a price target of just about $200, so just about $28 higher or above where it is currently trading. He does, though, note that its focus on user engagement, also advertising, could help bolster further growth. Looking ahead, he sees user and time spent per user growing, also sees ad pricing rising, and an upside to ad load.
And finally, eBay initiated at Wedbush with a neutral rating and a $70 price target. That $70 is among the highest calls on Wall Street. Analyst Scott Devitt writing that he sees few near-term catalysts to drive upside to estimates or material inflection in growth, but he also says that there's minimal downside risk to near-term numbers as well here. And there you're taking a look at eBay shares really trying to get their minds around what ultimately is going to take place here for the toss-up that could be this earnings call.